from the administration. You know, we're having a
get them on this global stage. So this is really a good way for them. But I mean, there's still more talks that have to be done, right? You have to talk about injuries, thing to consider. So they have to negotiate all this.
But
what if someone gets hurt?
Per team is what I understand. That's like kind of the max.
One player per team. Okay.
Yeah, okay.
And a couple players have expressed interest. Patrick Mahomes says he'll do it.
When is the LA Olympics?
2028. So we have a few more years. It's a couple years.
Between the fire and just LA and the sprawl, you know, the Good Morning Los Angeles in your early morning, they got time to make it happen.
Yes.
And they've got most of the venues, most of the infrastructure there already. That's why you like going to LA and Salt Lake, for example.
You got one more this morning?
I do. Okay, so there's an item from Lululemon. It is all the talk on social media.
Huge fan.
Okay, it has nothing to do with working out either or leggings. Yes. Okay, so it is their 2-in-1 maxi dress. So 2-in-1 because it can be used as a strapless dress and a long skirt. Miss Keene would love this. It's $148. 4 colors she can choose from. It's great. But the thing is that it's getting kind of backlash too, because people are saying $148 for, you know, a long dress, a little expensive, but it's Lululemon. You have to think about that too. And they love the versatility, how soft it is.
It can be worn as a skirt when its top is folded over the hips.
How did this get through the editors? I mean, how did this story get through the gauntlet of surveillance editors?
It's on my Christmas list now.
There you go.
On the Mateo
Anything else you'd like to? Is there a bag that you know is happening for you right now?
Oh, you know what? No, actually, no. This will be it. This will be my thing for the summer. This is what you wear on the beach, around the streets of New York City. It's the mini maxi dress.
And we'll do the newspapers tomorrow, I think. Lisa Mateo, thank you so much. Greatly appreciated this morning. I got an improved equity tape off the overnight angst, but the angst is tangible. As Paul mentioned, a 30-year bond from a 503 out to a 502. We'll do a data check here at the top before Stuart Kaiser will join. For Norm, we're playing Boston music from just a few years ago.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
What's the timing of tariffs showing up in some of the inflation data?
With Lisa Mateo on markets.
U.S. stocks had their best day since 2008.
And Michael Barr with news.
Trump further raised the rate on Chinese imports.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. An important data check here at the top. Lisa will be along with the Bloomberg Business Flash. For Paul, you nailed it. 30-year bond. You go out the curve. Strange things happening globally.
Yeah, I mean, when was the last time we saw something north of 5% on the 30-year? We don't quote it that often, but again, that just gets your attention. We sit around the 10-year, 4.53, so we're up about 4 or 5 basis points. So there's some movement in the bond market, movement in the stock market as well.
We did the data check, and on surveillance, we try to keep it for global Wall Street, but simple. But the answer is there's a lot going on here. Let me dive into some of the nuances right now. There's DXY in currency, which is major trading partners. Euro makes up 50% plus of that index. Weaker dollar. The Bloomberg Dollar Index, which is called BBDXY, is 1218. Nobody cares about the number, but the answer is south on BBDXY, but not through the recent trading range. It's buttressed up, as Paul mentioned earlier, against support, against new weakness. 210 full faith and credit spread up 3 basis points, 54 beeps, a difference in yield between the 10-year and the 2-year. And I'll bring it right over to the 10-year yield, and you see the last hour comp. We were 2.17%. We come in a little bit, 2.14%. Stuart Kaiser's like, why are we talking bonds?
He's an equity guy.
He's an equity guy. I mean, what can I say? Gold. There it is. Moonshot, 33.41, up $30 as well. From the Interactive Broker Studios, Lisa Mateo in the Bloomberg Business Flash.
Yeah, we've got futures lower. This is following the first loss for stocks in 6 sessions. We have Nasdaq futures down 0.5%. Same for S&P futures. Dow futures are off about 0.7%. Tom covered the yield space and commodities. Let's get to currencies. We'll get to the Bloomberg Dollar Spot Index down about 0.2%. The pound rose to a 3-year high against the dollar. That's after UK inflation jumped to its highest rate in over a year. Right now, the British pound at 134.09 against the dollar. The euro at 113.22 against the dollar. We had the Japanese yen up about 0.5% at 143.76 against the dollar. Want to get to retail earnings. Target cut its sales forecast. Shoppers spending less on clothes, home goods, other discretionary items. Its shares are down about 3%. A similar story over at TJX. That's the home to Marshalls, Home Goods, TJ Maxx. Shares off more than 1%, a miss on earnings per share for the second quarter. Then it looks like customers, well, they want to shop for home improvement because you have Lowe's shares up nearly 2%. Comparable sales beat expectations during the latest quarter, maintained its guidance for the year. And then we go to shares of VF Corp. That's a company behind Timberland, North Face, Vans Gear, taking a hit down 13%, worse than expected first quarter guidance. After the close, we move on to Urban Outfitters. We'll also hear from Zoom Communications and Snowflake. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. This is a joy, and for Global Wall Street, lean forward. Stuart Kaiser joins us now. He's got a fancy title, head of U.S. equity trading strategy at Citigroup. You've seen him in the TV show industry, and we've got him here for a long conversation today. What's the mood on institutional desks? Our review is retail's buying on the dip and institutions are going mental over this, that, and the other thing. What's the mood that you see across pro desks?
I mean, I think people are a little bit concerned about the speed of the rally, but the fact is it seems like systematic buying is really going to be very large over the next couple of weeks.
Catch up.
And people are not going to fight that. So I think even if you're a little negative the market as an institutional investor, you're sort of allowing this buying to play out, and then you'll kind of step back in, once that's done. So I would say, a little bit concerned with the speed, but, okay for now.
What we call long-only buy side, which is basically conservative money. Folks are not doing hedge funds and all the fancy things you see on industry or billions. Forget about that. Long-only buy side, do they feel behind right now?
I think a little bit, but the fact is the sell-off happened so quick and then the rally happened so quick back that, it was a little hard to capture the rally, but it was also a little hard to risk manage the way down. So I think they're actually just pretty happy. We've gotten the price levels back, back to where it was. If you look at,
So they were dumb going down and dumb going up. I love it.
Well, I prefer the word patient, patient and strategic. But yeah, I mean, to give you an example, we had a lot of investors coming in. We were on the lows. What are the 10 or 15 stocks you would buy here? By the time they would have put that trade on, we were already 10% higher. We kind of made a joke last weekend, that whole 17% rally, if you timed it perfect, you only needed to own the market for 60 minutes.
Oh, stop the show. Exactly. You work on the weekends?
Sometimes, yeah. Sometimes.
Is this just because Jane's in a commute right now and you need her to hear your work?
No. I have to catch up on all your YouTube work,
there we go.
And I can't do it during the week.
Sectors, sir, what are you guys seeing on your desk? Are people just are they jumping back into tech? Are they just trying to buy good balance sheets? What are they buying out there when they did come back?
Yeah, I mean, tech and growth, I think, have been the stocks that have driven the rally the most. Two things I would just highlight. Institutional investors, two themes that they liked earlier in the year that they got hurt on but now are re-engaging in would be power generation, so all that power that we need for AI, and M&A targets. Coming into the year, we had thought we were going to get this big M&A cycle. All the tariff news, all the market volatility, delayed that. I think people are hoping now that things stabilize that we will get a little bit of an M&A cycle, and that's going to be good for the bank sector. So I think those are two areas, growth and banks, that people are focused on. Healthcare has been real tricky, so I think people are kind of staying away from that. A big OPEC meeting, today I think it is, so you'll have some focus on energy. But I think to the long side, it's been growth stocks, particularly tech, and then some re-entry into the bank space.
We had Gina Martin Adams on earlier. She's a U.S. equity strategist for Bloomberg Intelligence, and she was saying this non-U.S. trade into Europe and other non-U.S. markets, that's still there. It's still playing. Are you still having those conversations with your clients that they want to own maybe some European stocks?
We're still having the conversations. I think the fact that, we've backed off the worst of the tariff outcomes has made people a little more comfortable kind of being in the U.S. But yeah, I mean, the Europe versus U.S. trade, particularly when you got that fiscal announcement. Yeah, I mean, I think the view is it was a very high bar to get the Europeans to spend money. The fact that they were committing to do that gets real money in the U.S. a little more comfortable owning Europe. And I think it's given it another leg there. The fact is, though, you've not seen an extended period of Europe beating the U.S. probably for about 20 years. So there is, I think people like the trade, but they respect that and are a little bit, cautious about how long it might keep going.
They got to relearn the stock symbols. Stuart Kaiser with us on your commute across the nation. Good morning. Particularly good morning on Android Auto. Google, did you see they did their little roadshow thing yesterday?
Yeah, yesterday. It was big.
AI is like big. It was bigger than I thought.
Ludlow was out there reporting.
I got to actually read about it, to get up to speed. Gemini. I mean, yes, Gemini and all that. Anyways, good morning on your commute. Good morning on YouTube as well. Thank you. In YouTube, when we put this together, it's a huge deal. Should we have makeup or not makeup?
No,
it was like a major debate, folks. Mateo had a tantrum, or people came in.
You have to invest in your face.
And they said, look, I'm endorsed by Bobby Brown and Mac. I got to have the makeup going. So Lisa's the only one that beautifies here. And so to have Steve Roach on the phone looking over, Steve, the camera's over there. But that's the way we roll on YouTube. Stuart Kaiser without makeup this morning. I want you to talk about Mag 7 in position sizing. What do your big clients, what do they do when they go, I think we need more Apple? Just as one example, how do you affect position sizing in Mag 7?
Look, Tom, it's a great question because at the beginning of the year, the two biggest challenges to the Mag 7 trade were valuation and positioning. From mid-February till March, those two things got addressed pretty quickly. Valuation down 25%, positioning kind of pulled off. I think what we've seen, frankly, is a lot of people in that AI trade kind of sizing up a little more on the software side, a little less on the
Microsoft on a tear.
Yeah, Microsoft Meta, has obviously been a favorite. In terms of sizing the other stuff, honestly, the flows we've seen recently have been almost across the board. I'm going to trade Mag 7. Maybe I pull Tesla out because Tesla's had a little bit of political risk, but I'm going to pretty much put a $1 or $10 million in each of those stocks on generally an equal basis. So an odd lot
for you is $10 million?
For me personally, no. An odd lot for me is about $50.
But at Citigroup, an odd lot is $10 million. Give it to the intern to trade.
Yeah, I mean, look, these stocks are, you're talking $3 trillion in market cap for some of these stocks. So, the notional sizes going through are quite large. I think you're generally approximately equal weight, but going into each quarter, there's always one or two that are favorites that are a little more widely held and a couple that are less liked. And again, I think the software side of that ledger is a little more over-owned right now, and perhaps the tech hardware and semis a little less owned at the moment.
What's going to drive this market for the remainder of the year? I'm looking at the WIRP function, and I think I've only got a couple of Fed cuts maybe in the forecast. Is it earnings? Is it just what comes out of Washington, D.C., and what comes over X or Twitter, whatever it's called? Is that what drives the market today?
Look, I think near term, like the next month or so, it's a lot about positioning. And now that you had that Moody's downgrade, it's going to be what happens in the long end of the bond curve, as you guys were chatting about earlier. Medium term, let's call that July through September. It's going to really all be, to me, about EPS and GDP growth.
Okay.
Both the Fed and corporate America took a wait and see approach in the first quarter. I don't think that's going to be sustainable through the summer. So we're ultimately either going to see relief and the recession risks get priced out, or we're going to see EPS and GDP numbers come down, and that's going to be kind of a waiting on the market. So I think, frankly, let's call it July through September, through the September Fed. This is really going to be about the growth outlook.
It seems like, earnings growth, I don't know what Scott Croner's saying, but we've got earnings growth was like 13, 14, 15% for this year. Now it's down to like 7. Is there still risk in earnings growth, do you think?
I think there is still risk. I mean, Scott was at 270 for the year.
Okay.
He took his number down to 255.
Wow.
That number does not include a recession. So the downside risk from here is less tariffs, because I think we've trimmed the tail risk off tariffs, and it's more about what is happening to the economy. So I do think there is a bit more downside to earnings, but it's going to be relying on economic data. I think most people at this point have incorporated some degree of tariff headwind.
Yep.
So do institutions call you up? It's like industry when they got to go to break and get to the next season. Do people call up and say, go to cash at that size and scale? People don't do that, right?
I mean, look, it depends. Like a mutual fund, long only can't really be in cash, right? Regulatory wise, they can't be. Hedge funds, yes. I mean, hedge funds will go
They'll
cash.
call up and say, clear out these 4 positions.
Yeah.
Then how do you do that?
We push a button these days, I think. No, man, I think what's interesting, and Tom, you're raising an interesting point, is the selling that we saw earlier in the year was much more what we call low touch, going through the pipes, going through the computers, going through the algorithms. We haven't had those days where they are calling up our high touch sales desk and just saying, get me out quick. And I think part of the reason for that is something you touched on earlier. People are so long these stocks that if you're trimming up your positions, you need to do it quite quietly, if that makes sense.
I'm not going to mention the name here. The name doesn't matter. Folks, in the Bloomberg, you can't believe the information you've got when you get the terminal. Get the terminal, folks. You need it in your car. So I got a very famous regional American name. They own 7.163679 Microsoft shares. So when they call up and say sell a 10% position, 717,000 shares, how do you actually do that? Do you just put in a sell order for 700? You don't do that, right?
No, I mean, a lot of that is done, gradually throughout the day. On evaluated price. Unless it is we have to get out. And look, what I would say too is the retail participation in the market is much larger today than it was a few years ago. So actually, if you're an institutional investor selling stock,
to retail.
You're selling to a levered ETF. You're selling to retail demand. Again, you're not just dumping it in one block. You're taking your time. You're spreading it out over the day, and you're making it work.
Jane calls in. Jane, thank you so much for calling in from Connecticut. If you sell 4% of that 717,000 and you have to wait 20 minutes, what do you do in the meantime?
Get coffee.
You get coffee. That's what I thought.
That's how it works.
And if it's there 4 o'clock, it's like, where are we going to have a beverage?
Exactly. So during that sell-off we saw earlier, Stuart, earlier in the year, we had some really, maybe a 5 or 6 day period where it wasn't panic selling. Everybody said it was kind of orderly selling. What were the calls you're getting from your clients? Was it the get me out call, or was it, hey, we're taking some risk off the table kind of call?
I think it was more the latter. As you said, it wasn't a discombobulated and aggressive sell-off. I think people were pretty measured about it. As I mentioned, a lot of that was going through the computers, going through the algos, less, just calling us up and saying, sort of, get me out now. Obviously, there was some of that. Yep. But no, it was a pretty orderly sell-off. But if you think of the sell-off, it happened in 2 stages, right? You had about a 10% drawdown in late February, and then you had another, post the tariff announcement. The first of those 10% pullbacks was a little bit more disorderly, a little bit more stressed. Once you got that initial pullback, a lot of institutional investors got their risk right-sized. And when you had that second pullback, I think people were much more prepared for it, if it makes sense.
This is brilliant. I did not observe, and folks, I'm making it up. I by no means have my thumb on the market, not that I ever did. But I didn't see catharsis there. In the like Bitcoin, I don't follow, folks, because the drift of Bitcoin is a fiction. But in your world, Stuart Kaiser, I didn't see panic. I didn't see catharsis.
Look, I think, and Tom, to your point, I mean, you basically, Liberation Day was April 2nd. The market bottomed on April 7th intraday, and on April 8th on a close to close. It was really a 3 to 5 day sell-off. It didn't feel like that, but that's what the price action would tell you. So look, you had a few moments there where you got the VIX up to 50, 60, and I think that was the closest we got to kind of, complete fear-based selling. The fact is, a good proxy for today, I think, is actually 2011. In the sense that it was sort of a self-created sell-off. driven by government policy. And, the second the administration started to show that they were willing to negotiate and trim the tail risks off, I think people got much more comfortable that this isn't great risk reward, but this is not, a COVID or financial crisis.
Quickly, here, season 4, Harry Laude's not going to be back for industry. Are you going to be back for industry for season 4?
It's really up to the agents, Tom. We have to.
CAA, I understand. Stuart Kaiser on the street. I can't say enough, folks, the joy of Stuart. He's not coming in going, well, the Fed will do this. It's like real talk.
And I read Stuart's note every day because if I only have time for one paragraph, I got it. I can sound smart. Just for one paragraph. What's buying, what's selling, I got it.
Treasurer from Citigroup, Stuart Kaiser, thank you so much. Jane, be nice to him. I'm sorry. He's not getting coffee between trades. Futures at negative 36 right now. The VIX 18.78. Importantly, that 30-year bond, 502 up to a 503, a 6 basis point move higher in the long bond. You see that worldwide. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. House Speaker Mike Johnson says Republicans have agreed to increase the state and local tax deduction to $40,000. That's a key issue in President Donald Trump's economic bill. The current write-off is capped at $10,000, a limit imposed in Mr. Trump's first-term tax cut bill. The House Rules Committee convened overnight to debate the president's tax and spending cuts proposal. Republican Representative Jim Jordan of Ohio.
The resources we have in this bill, in short, will allow for 10,000 new ICE agents, 100,000 new detention beds, and the resources for the repatriation of 1 million migrants.
However, all House Democrats are against the bill. Representative Jim McGovern of Massachusetts.
This bill will throw 14 million people off of health care. 14 million people. It will throw millions and millions and millions of people off of food assistance.
Meanwhile, conservatives are pushing for more spending cuts to offset the tax reductions in Mr. Trump's economic package. An arrest has been made in connection with the inmate escape in a New Orleans prison. A maintenance worker at the prison facility has been charged with aiding the inmates by cutting off the water to a toilet so that they could escape through a hole in the wall behind it. 5 out of the 10 inmates who escaped are still on the loose. Louisiana Attorney General Liz Murrill.
There are a lot of people, including the district attorney, who are rightfully very uncomfortable and worried about his staff and his own safety and his family. They're witnesses and victims, and all of those people are very rightfully very unnerved by all of this. And so time is of the essence, and we are doing everything within our power.
A.G. Murrill says one of the fugitives is a convicted killer. President Vladimir Putin has visited Russia's Kursk region for the first time since Moscow said that it drove out Ukrainian forces from the area in April. Ukrainian forces made a surprise incursion into Kursk last August. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. To continue our conversation with Paul Sweeney, Encyclopedic, on this, and Wikipedia's got this great list of all-in viewership. It's households in millions. I have no idea if it's, the $64,000 question when I was 3 years old. Gunsmoke, I remember my mother hanging on it, was 18 million households. Beverly Hillbillies, 20 million as well. You remember Marcus Welby that?
Marcus
Happy
Welby,
Days
ND.
Revolutionized. Thank you, Henry Winkler, for joining us years ago at the Regency. Cheers.
Yep.
20 million and on and on. And then in 2000, unknown.
Yeah.
That's literally in Wikipedia, Paul. It says unknown, and it's a consecutive unknown starting in 2003.
Yeah, so it was peak TV back in the, in terms of viewership on linear television. In the 80s is really when it started peaking, and then peaked, kind of through the 90s and the late 90s. But, it was that must-see TV, which was Thursday nights on NBC, and they just owned it for, more than a decade. And Cheers was arguably, and Bill Cosby, what started it all, and that was a huge
So with the
moneymaker.
upfronts we just had,
Right.
Is there still Thursday night TV where somebody's going to make a profit and buy a Bentley to go down Sunset Boulevard?
No, I think what it's all about now, they're out. The networks are allocating less of their programming budgets to their linear over-the-air networks and more to their streaming business. And anything that airs on the network also airs on the streaming business. But it's rare that you'll see a big budget thing go to network. Now it goes to the streaming business. So the world's changed, but the advertising dollars are still out there.
For those of you younger, like Lisa Mateo, it was a magical time. From New York, Bloomberg surveillance.
This is a Bloomberg Money Minute. Wall Street looks set for a lower open this morning. The rally lost steam yesterday, and declines range from nearly 0.3% to around 0.4%. Target has cut its sales forecast after a weaker than expected quarter. The company now expects net sales to decline this year. That's down from its previous forecast, looking for an increase. CEO Brian Cornell attributed the results to multiple factors, including weakness in spending on non-essentials, uncertainty over tariffs, and shopper backlash against Target's decision to halt diversity initiatives. He said e-commerce growth was a bright spot in the latest quarter. The retailer's key sales metric dropped almost 4%. However, DoorDash has pulled the plug on its AI voice ordering product for restaurant clients. The food delivery company launched the tool less than 2 years ago, but now says it has a high bar for investment and is guided by feedback from customers and by data. Gina Cervetti, Bloomberg Radio.
I'm Emily Chang. Join me on The Circuit, where I speak with the biggest names in tech, business, and culture, and find out what drives them. Hear my conversations with OpenAI CEO Sam Altman, SoftBank CEO Masayoshi Son, and all three Microsoft CEOs past and present, Bill Gates, Steve Ballmer, and Satya Nadella. Watch Season 3 of The Circuit, Thursday nights, 6 p.m. Eastern on Bloomberg Television, and streaming on Bloomberg Originals and Bloomberg.com. Or listen to The Circuit anywhere you get your podcasts.
The data that matters for your investments.
Apple was among the most active.
And analysis on the companies making news on Wall Street.
The bouncing ball that is Tesla.
Investors going back into Mag 7 stocks.
Listen to the Stock Movers Report from Bloomberg.
You are seeing all these healthcare names rally big.
It's your short audio report on the day's winners and losers in the stock market.
Tariffs putting pressure on yet another retail name.
Subscribe to the Stock Movers Report on Apple Podcasts, Spotify, or wherever you listen.
The biggest business story of our time revolves around one name, Elon Musk. On the latest episode of Elon Inc., a Tesla insider says Elon Musk is harming the company.
Once you meet a new person that is willing to say the quiet part out loud with you, it's just like, oh, okay, good, there's another person. Then I'll come off of mute in some of these calls. I'll say, hey, can we just acknowledge that the new Model Y, if it had launched last year, would have been selling like crazy.
From Bloomberg Business Week, this is Elon Inc. Listen wherever you get your podcasts.
Throughout the great bull market, one show has been there.
You're listening to Bloomberg Surveillance.
From Dow 10,000 to Dow 40,000.
How do you define that?
It's certainly not a bull market for everybody.
Does it continue?
Yes, I think it does.
Be part of the legacy. Tom Keene.
This is must listen.
Paul Sweeney.
A little bit of a bounce.
Lisa Mateo.
The market's really reacting.
And Michael Barr.
The president signed an executive order.
Bloomberg Surveillance. Watch on YouTube. Listen on the Bloomberg Business app. And always on Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
That is Bloomberg Business Flash, brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, you got futures pointing to a lower open. Stocks. They snapped a 6-day winning streak for the S&P 500. Losses in big tech really weighed on the major indexes. You had Alphabet and Amazon both fell more than 1%. You had Alphabet up nearly 0.5%. Remember, they held that AI event yesterday, so that's helping shares. Amazon, though, down about 1%. Tesla shares still higher. They're up nearly 1%. Yesterday was actually one of the only Mag 7 stocks that rose. Elon Musk said he's committed to leading Tesla for the next 5 years, so that gave shares a boost. So we have Nasdaq futures up 0.5%, same for S&P futures. Dow futures up down about 0.6%. The 2-year yield 3.40%. That's up 3 basis points, and the yield on the 10-year 4.54%. That's up 5 5 basis points. Want to take it to the 30-year, 5.03%, and that's up about 5 basis points. The Bloomberg Dollar Spot Index down about 0.3%. Few companies making news. Sources saying SoftBank has secured a $15 billion one-year bridge loan for AI investments. That's backed by 21 banks. Then you have NVIDIA CEO Jensen Huang, who criticized U.S. curbs on AI chip sales. He's warning that it could lose a potential $50 billion opportunity in China to rivals like Huawei. And JP Morgan CEO Jamie Dimon, well, he stressed the importance of addressing geopolitical risk.
Yeah, I saw that.
And now his company is doing it too. It's created this Center for Geopolitics, research on topics like Russia, Ukraine, and the Middle East. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Tom.
Going into the think tank business. Lisa Mateo, thank you so much. Mohamed El-Erian, the zeitgeist was out there, but El-Erian nails it with a tweet that this has been underreported this morning in the United States. United Kingdom service sector inflation up. They were looking for 3.3%, and their UK inflation statistic came in at a lofty 3.5% in April. That bears close watching, and that goes over to Paul Sweeney's 30-year bond, which is, my eyes are failing me right now. There it is, 5.02%.
Yeah, that gets your attention.
Joining us right now, and, you know, I got to be honest, folks, I got the 201k. And the 201k is with Empower, and I could go in and when I log in, they got a blinking red light.
Yep.
Stupid. Put in more money.
Exactly.
Thank you, Empower, for that. Empower keeping track of all the retirement plans for all of us at Bloomberg LP, and we say thank you. They went out and got Marta Norton to be their investment strategist. What's it like being an investment strategist where we don't care what you think May's going to be like? We're looking at a 3-year, a 5-year, a 10-year perspective. How do you write along the Empower line?
Well, you know, I think what's really valuable to the retirement market, to I would say individual investors broadly, is making sure that the focus is on the fundamentals. I think there's so much noise out there from kind of data point to data point, headline to headline, and it can really have an emotional toll on people. And so my orientation with Empower, whether it's the wealth side of the business, whether it's the retirement business, is to understand and, you know, aim to understand what's happening with the fundamentals and how should that drive their views.
But your charm is you were at Morningstar, and you lived the certitude of a 5-star fund that all of a sudden stumbled and became a 3-star fund. How do you get long-term investment in a select group of funds correct?
Okay, so that's a great question. And of course, I think if you're looking at the data, a big part of it is the expenses equation. If you're trying to think through kind of what's going to drive performance over time.
She read Balchunas's book? Is that what this is about?
You do want to keep those costs down, right? That's your one certainty in terms of what you're paying. You want to keep that as low as you can. But I also think my kind of grounding at Morningstar, one of the biggest takeaways that I had, and you know, to your point, I grew up as an investor at Morningstar. It was the importance of an investment philosophy, having a point of view, a framework that would help you distill what's happening in the markets and make determinations going forward. If you look at, you know, kind of the most successful strategies out there, they're not successful in every environment, but they have a touchstone that they return to. And I think those touchstones are really important to navigating choppy markets.
So what is your investment outlook, your strategy for 2025? Where we've had a lot of volatility here, a big, you know, about a 20% drawdown in the market. Retraced a lot of that here, but it's kind of driven by not so much the fundamentals of company A or company B, but kind of trade policy out of Washington, D.C., economic uncertainty. So how do you guys talk to your clients about this?
Well, you know, it's funny because back, you know, pre-election, a lot of the commentary I was putting out was that, you know, you don't, your portfolio is not dependent on who's in Washington or what's in control or kind of how you feel politically about things. And yet we head into 2025 and it's been the year of fiscal policy. And it's been decisions out of Washington that have caused kind of the ups and downs of the market. We entered 2025 talking a lot about valuation and really concerned about the economy, in our estimation, seemed reasonably healthy, but the valuations seemed high, especially in the Mag 7. And so that was our greatest risk factor. And it seems like we've lived 9 lives since the start of 2025.
We all have,
right? And so the valuation picture changed and then changed again. And I guess if I think back to that outlook at 2025 and where we stand today, one of the biggest changes has been where the Mag 7 is. The broad market looks expensive like it did back then, but the Mag 7 looked cheap. And that was a surprise to me because my expectation was that Mag 7 dictated the market.
Is with all your work, are we over-diversified in our 401ks? Peter Lynch was really good on this at Fidelity. Are there just too many things in our 401ks?
Well, I mean, that depends on kind of how you're, if you're picking your own strategies, if you're picking your own investments within your 401k, then, it all depends on kind of those individual selections.
3 or 4 things. Paul can pick them. He's smarter than me. And the answer is we got advisors out there that are saying you need 42 things in your 401k. It causes angst and Empower. People get old at Empower over this.
There is there's kind of like a retail market that follows the endowment market, the endowment-like approach where you had to have a very diversified, a healthy selection of all these various investments. But I would say the average, retail investor it's still a 60-40 split, stock bonds. It's still kind of a vanilla approach to the market. So I wouldn't say that, my impression of the average 401k investor is that they're too diversified, though I think there is that, argument that people are trying to put a lot of stuff in portfolios.
How about fixed income here? I mean, again, Tom and I talk about the 2-year Treasury at 4%. That's not a bad way to make a living, or do we take some credit risk here?
So I think it's kind of an interesting market. One of the things that we've called for 2025 is a year for coupon clipping. That idea of capital appreciation coming from your fixed income. It's just harder to get behind that when you think of the inflation forces or the deficit forces or everything that kind of is putting a floor potentially under the yield curve. Now, that felt like that was potentially the wrong view earlier in the year, but we're back to that situation, right, where people are focused on the deficit and they're thinking about yields in kind of a range-bound mindset rather than, necessarily falling from here. I think one thing that's really important, and this has been a shift, has been thinking about as you're looking for capital preservation as an individual investor, not just going to the ag or the core bond space, but thinking about that breadth of the yield curve and having some of the shorter dated securities in your portfolio. They have a very different risk profile. The inflation risk is not the same. The rate risk is not the same. They showed that in 2022 and they've shown it since. And so I think that breadth is a really important element for construction.
How do you guys think about alternatives? I mean, it's become such a big part of the average RIA that we go talk to. It's not 5% of the allocation. It's a lot bigger.
It's a lot bigger.
And I'm surprised by that, whether it's private equity, private debt, hedge funds. How do you guys think about that?
Yeah, so Empower is moving into or partnering with alts in the private equity sense. But I guess when I think about your question, I want to expand on it a little bit because I think the word alternative is such a catch-all. And it's important to define what we mean by alternative. So if we're thinking about something like private equity, I think the real case for private equity, of course, is the breadth, the broader exposure to the U.S. equity market. But I think the operative word is equity. This is equity-like exposure. And so you have to size it accordingly. You have public equity in your portfolio. So you have to think about that as you're looking at private equity.
Are you in Chicago or are you in Winnipeg?
Chicago.
You're deep south. Okay. With Empower, thank you so much. Marta Norton, greatly appreciated. Chief Investment Strategist for Empower. We'll do this again, full disclosure, folks. Empower has a strong relationship with Bloomberg and managing Lisa Mateo's 601k.
Killing
that leverage puppy. You have the Meta portfolio, right?
The ETFs, the triple leverage.
She's on the phone on Saturday to Winnipeg. More Meta. That's all there is to it. Marta, thank you so much. Greatly appreciated this morning. Bloomberg Surveillance, all of our economic coverage. It's brought to you by Commonwealth. Join over 2,000 independent financial advisors. They're taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. We don't do enough on retirement. That was informative to say. We don't because Lisa and I are never going to retire.
Never.
We have offspring. They're expensive.
Softball.
Mom, I need to go to
travel
4
and all that
camps.
silliness.
4 camps this summer. Bloomberg Surveillance.
This is your only 24-hour source for world markets and breaking business news. Bloomberg Radio. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at CBS News.
CBS News Brief. Another one of the 10 inmates who escaped a New Orleans jail last week has been captured. 5 are still on the run. And CBS's Katie Weiss says one maintenance worker has been charged with helping them.
The sheriff says that 3 other staff members have been suspended, others have been reassigned, and that more staff arrests could be coming today.
House lawmakers are still debating the president's budget bill. They've been at it all night long. Democratic Congressman Rick Larson.
This bill makes the largest cuts to health care access and food assistance in American history.
Sales at Target fell sharply in the first quarter. The retailer warned they'll slip this year as consumers cut back on spending. Business analyst Jill Schlesinger.
Although Target did cite tariffs as a complicating factor in its earnings miss, it also said that the rollback of their diversity, equity, and inclusion initiatives may have hurt its performance.
CBS News Brief. I'm Stacey Lynn.
Bloomberg Radio is where you are. Get live business news and market headlines from anywhere 24 hours a day on your mobile device. Listen on the iHeartRadio app. Tune in the Bloomberg Business app, SiriusXM 121, and the Bloomberg Terminal.
Donald Trump has already changed the way we think about the US economy. Now he's back in the White House, and Bloomberg's Trumponomics podcast is here to help. I'm Stephanie Flanders, Head of Government and Economics at Bloomberg. Whatever the big question of the week is, we'll have something interesting to tell you about it in a lively conversation with the reporters and analysts closest to the action. Listen to new episodes every Wednesday and follow Trumponomics on Apple Podcasts, Spotify, or wherever you listen.
What is dedication?
The thing that drives me every day as a dad is Dariana. We call him Day for short. Every day he's hungry for something, whether it's attention, affection, knowledge. And there's this huge responsibility in making sure that when he's no longer under my wing, that he's a good person. I want him to be able to sit back one day and go, we worked together, we did a good job.
That's dedication. Find out more at fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
Bloomberg Radio, on demand and in your podcast feed.
On the latest Masters in Business podcast, my conversation with Bridgeway's John Montgomery on why the firm gives away half of its profits to charities.
Sometimes I get into conversation with a prospective client and you might hear something like, it sounds like you're good guys, you're philanthropically geared and you get awards as a great place to work. But all of that, put that aside. I just want to talk about the investments. And what I would say is culture is everything. It's the housing within which we do what we do. So it's very important. And you can measure that in some statistical ways, like turnover. I would say there are proxies for commitment at Bridgeway, and then returns of the strategies. Why would you think that's independent of the culture that you've built up?
You also have an internal rule. The highest paid employee earns no more than 7 times the lowest paid employee. Is that right?
So statistically, that's probably true. We don't measure it that way. There's a new statistic that came out from the SEC required of public companies, and those are some of the metrics that we look at currently. Some people think is like, so you underpay. That is absolutely not the intent. It's just not to pay outrageous salaries on the top. And
Makes a lot of sense.
if you want to make the most money that you can make in our industry, you probably wouldn't come to Bridgeway. If you want to make an absolute livable wage, and if you save and invest, you should do very well over a full career. Then we're a purpose-driven firm, and we ascribe to Daniel Pink's what really motivates people is not money, but it's purpose.
Hear the full conversation on the latest edition of the Masters in Business podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures falling. Dow futures leading the losses, down 0.8%, 363 points. S&P futures down 0.6%. Nasdaq futures down 0.7%. The 2-year yield 3.99%. That's up 2 basis points. The yield on the 10-year 4.54%. That's up 4 basis points. And the 30-year 5.02%. That's up 5 basis points. To commodities, we have spot gold up 0.2%, $3,298 an ounce. And we go to the Bloomberg Dollar Spot Index down about 0.3%. Few companies making news. Toyota discontinuing that gas-powered version of its best-selling RAV4 in the U.S. It's going to instead offer a plug-in or hybrid from later this year. And could job cuts be coming to TikTok? The social media company told U.S. e-commerce staff to work from home today while awaiting emails regarding, quote, difficult decisions. And meanwhile, Accenture will promote about 50,000 people worldwide in June to boost morale after a 6-month delay. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. You go to Boulder, Colorado, you don't say bad things about Pueblo.
I'm looking at it. It looks pretty cool. They got the river walk there in Pueblo. The Arkansas River goes through it. That looks cool.
Guru would tell you it's hugely important politically. It's really a swing area.
Is it? Okay.
In terms of the politics of the nation. It's also a place to get hammered in municipal bonds. Going from November here, the 30-year piece, the 28-year piece, the Pueblo Muni is down 5.9%. This is, let me see what this is for Pueblo County Sustainable Bond. It's a jail bond.
Okay.
Get out of jail free bond. You're down 6% in price. Joining us now, and really quite an important introduction here, is Nick Vendetti. He's with Allspring, but who you're really with is Thornburg. Thornburg was the Butch Cassidy of years ago in Munis. You go, who are these guys?
Exactly.
What was the pixie dust at Thornburg that led to those wonderful total returns?
Yeah, it was an interesting place. It got into the market very early on.
Removed from the marketing machine of New York.
Absolutely. But I'd like to think that I sit in Milwaukee, Wisconsin at Allspring Global, and we're removed from the marketing machine of New York as well. And so we got some special sauce at Allspring as well.
Your note is screaming, Pueblo 28-year piece, shut up and buy it. This is a huge opportunity. Is that where we are on triple tax-free bonds?
It's an unbelievable opportunity for municipal bonds right now, both kind of on an absolute and relative basis. Absolute because yields are a lot higher. Yields are higher than fixed income is more attractive. The math is the math. But also on a relative basis, as you mentioned, munis have kind of got kicked in the shin here over the last 6-8 weeks. And that's rough, but the good news is on a go-forward basis, for the first time in years and years and years, muni to treasury ratios, munis to AA industrial ratios look attractive. It's a great entry point for investors.
The number one issue we have to put on the table is the tax exemption for municipal bonds. Is that at risk by some of this tax legislation? I'm all in New Jersey municipals.
Jackson was president.
I know,
they were worried about the tax exemption.
Exactly. So what's the latest on that?
Yeah, that's absolutely true, right? They've been talking about removing the tax exemption for longer than I've been alive. It's not going anywhere.
Got that right.
It's not going anywhere because it doesn't make sense for it to go anywhere. First of all, it doesn't generate that much revenue, right? Relative to the federal budget, it's essentially a ham sandwich worth of money. But more importantly than that, removing the tax exemption would act as the largest tax increase in history by a wide margin, given that muni bonds fund essentially all of the education in this country, all of the healthcare, all of the infrastructure. To the extent that we all agree we need more and better of all of that, why make it more expensive for us to get it?
What area of tax-free bonds do our audiences want to avoid right now?
Yeah, look,
what's rich, what's overpriced, what's going to get hammered?
So I don't think it's so much about what's rich and what's overpriced. It's what's at risk. And the things that are at risk tend to be things that are more sensitive to federal budget cuts, which are obviously in the news related to every asset class. And you got to keep a close eye on things like higher education, right? Obviously, a big story recently about, federal cuts to higher education. There's the ongoing fight with Harvard University, those kind of things. The other piece of the equation certainly is kind of ridiculous, but I sort of think in the back of my mind, what is Donald Trump's least favorite color? It's green.
Okay.
It's green is his least favorite color, right? So any project that is even tangentially related to ESG, even the lightest shade of green that's getting federal dollars could potentially be at risk for cuts.
How are fund flows into the municipal bond market? What's happening these days? Are people putting money into that market, taking it out? What are they doing in this world where we're not sure where tariffs are going to be? We're not sure where GDP is going to be. We're not sure where inflation is going to be.
It's been mixed to slightly positive year to date. But one of the, I think, really interesting things we've seen happen over the last 6 weeks is as ratios backed up, we started to see non-traditional buyers of munis step into the market. Hedge funds, insurance companies.
Hedge funds buy munis?
For a moment there, munis got to in excess of 100% of U.S. Treasuries.
And so a treasury is 4.5%, and I was making 9%. In a muni, translate taxable into English?
Tax-adjusted yield?
Tax-adjusted yield, right? And a lot of munis are better credit quality given the downgrade of the U.S. Treasuries.
Listen to you.
Yeah, so look, you're getting more yield and better credit.
Good morning, all spring compliance. I'm sorry. We'll cut that out of the tape.
So where are we in terms of credit quality out there? It seems like even during the pandemic, we didn't really have any credit problems. I guess there's so much liquidity being pumped into the market by the U.S. government. How's credit quality now?
Yeah, it's less good than it was, certainly. Okay. We weathered COVID because we dumped a lot of cash into the system, and cash hides sins.
Yep. Right.
Most of that cash is gone now. This isn't Armageddon, but it does mean that a lot of these municipalities are going to have to stand on their own 2 feet. You pair that with some of the conversations around federal cuts, and I think it sort of increases the importance of bottom-up fundamental credit research.
I got 20 seconds, totally unfair. Big construction projects like the Big Dig ages ago in Boston changed the city. The tunnels here in New York right now, are they priced to perfection where you can't participate? Or is there value in things like mega projects?
Yeah, occasionally there is value. I do think that anything that's cuspy from an investment grade perspective is a little bit dangerous because we are priced to perfection. And if the last 6 weeks have taught us anything, it's that we're probably just shy of perfect.
Do you follow the Brewers or the Chicago teams?
The Brewers.
It's fun to watch the Brewers.
Yeah, it's a great ballpark.
It's a great ballpark.
Yep. Best logo in baseball.
Has the new coach worked out?
It's early in the season, but so far so good.
Okay.
Yeah, it's really.
This is great.
Pound for pound, the smartest money managers from Milwaukee, Wisconsin. That's been my call, and I'm sticking with
Nick Vendetti, thank you so much with Allspring Milwaukee. Greatly appreciate it. This is like back-to-back excellence. Let's make it a hat trick with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. House Speaker Mike Johnson says Republicans have agreed to increase the state and local tax deduction to $40,000, a key issue in President Donald Trump's economic bill. Johnson spoke to CNN.
That's the agreement we came to, and I think that the SALT caucus, as they call themselves, it's not everything they wanted, but I think they know what a huge improvement that is for their constituents, and it gives them a lot to go home and talk about.
The agreement has sparked a backlash from conservatives who want more spending cuts to offset the tax reductions in Mr. Trump's economic package. President Trump is moving forward with plans for a so-called Golden Dome missile defense system to protect the U.S. The president compared the Golden Dome to President Reagan's Star Wars program from the 1980s.
Ronald Reagan wanted it many years ago, but they didn't have the technology. But it's something we're going to have. We're going to have it at the highest level.
Questions remain, though, about the cost. The United Nations warns that hundreds of thousands of people in Gaza are facing catastrophic hunger. Caroline Glick is an international affairs advisor to Israel's Prime Minister Benjamin Netanyahu and says Hamas has been hijacking aid entering Gaza. Glick says Israel is preparing to ensure aid gets to where it is needed as soon as next week.
We're replacing Hamas as a means for distributing the aid with the Gaza Humanitarian Fund, which is being manned by U.S. contractors that are going to be handing out all of the food supplies and medical supplies and everything the Gazans need in hubs that are controlled militarily by Israel.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. With the death of George Wendt, we've been looking at old television and new television as well. Paul, where are we in 3 years with all this? I saw Lucas shot a chart out showing the growth of YouTube. I'm not talking my book folks. Yep. The fact is YouTube's really popping, Netflix off fractionally, and the rest of them any other business, Paul, that us or Nick Vendetti would follow, we'd merge.
Yeah, and I just think with the big next shoe to drop is going to be major sports going big time into streaming. Like, again, a Sunday package for the NFL
We'll see.
when that happens.
Continue this discussion. From New York City, folks, please stay with us on YouTube. Bloomberg Surveillance.
You've heard the phrase, the voice of experience.
You're the guy that made the bet with Warren Buffett. I get that might go on my tombstone.
There's actually more than one of them.
Writing on Star Wars was crazy fun.
Hear their stories on Masters in Business.
When I got hired in 2013, M&A was dead.
I think life and markets are intertwined.
Barry Ritholtz hosts Masters in Business. Listen on Apple CarPlay or Android Auto with the Bloomberg Business app or anywhere you get your podcasts. Bloomberg Podcasts. Context changes everything.
Stay connected with Bloomberg wherever you are with Bloomberg Podcasts. On Trumponomics, does President Trump have a strategy? And if so, how's it going? And what comes next? On Odd Lots, Atlanta Fed President Raphael Bostic on conducting monetary policy during times of extreme uncertainty. And on Everybody's Business, we tackle the trade war, inflation, and when the rubber will, if ever, hit the road. Listen to Bloomberg Podcasts on Apple CarPlay and Android Auto with the Bloomberg Business app or anywhere you get your podcasts. Bloomberg Podcasts. Context changes everything.
When news breaks across the globe, Bloomberg Radio is there. From the Middle East,
The fragile ceasefire between Israel and Hamas is over.
to Europe,
Keir Starmer and Donald Trump have discussed trade.
and anywhere in the world news happens.
Well, let's go now to the climate talks in Dubai.
Bloomberg's luxury reporter in Paris.
Bloomberg's Oliver Crook reporting from Kiev.
Listen on Apple CarPlay or Android Auto with the Bloomberg Business app and always on Bloomberg Radio. Context changes everything.
This is a Bloomberg Money Minute. Lowe's sales beat expectations in the latest quarter. Shoppers kept up their spending at the home improvement chain despite weakening sentiment and economic uncertainty. Lowe's did say its comparable sales slipped 1.7%, but that was better than what analysts expected. Larger rival Home Depot missed estimates with its report that was released yesterday. Target has cut its sales forecast following a weaker than expected quarter. The latest sign the big box retailer's plans to recapture growth are missing the mark. AI mode is coming to Google, which is rolling out the search tool to all its U.S. users. This is a tab in search where users can interact directly with AI models, much like OpenAI's ChatGPT. Stock futures point to a lower open for Wall Street after declines yesterday ranging from almost 0.3% to around 0.4%. The Dow fell 115 points. Gina Cervetti, Bloomberg Radio.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Daybreak U.S. Edition podcast, we discussed reports Israel may be preparing an attack on Iran's nuclear sites with Bloomberg's Rosalind Matheson.
There's been these reports periodically for quite some months now that Israel is looking more in depth at the possibility of making a strike on Iran's nuclear facilities. We saw this with some of the tit-for-tat strikes that happened between the two countries last year, and whether this would be one of the options that came onto the table. So in essence, in itself, the fact that Israel is looking at this is nothing new. And you can see the oil didn't move massively on it as a result. So maybe the markets doesn't think that something is imminent. The question is, though, is anything shifting in the Israeli thinking on this as part of these reports? Is this pointing to them perhaps hardening their position towards something? And if so, why would that be happening? Is it because that the Israeli administration of Benjamin Netanyahu is frustrated with the situation in Gaza? You know, they are talking about a much bigger scale military operation there against Hamas. They feel that Iran has been weakened and their proxies in recent times. They're worried about the pathway towards nuclear enrichment and see perhaps a window closing for them to take action against these nuclear sites. So it's a bit hard to know if there's been a shift in the calculus for Israel and whether this is becoming more of a prospect, but to say it has been something we know that they've discussed on and off for quite some time. What we need to understand is whether there's anything that has changed that might make this more realistic.
Hear the full conversation on the latest edition of the Bloomberg Daybreak U.S. Edition podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene here. Futures churning here, negative 39, maybe a little worse tape. Almost out of stick on the VIX, 18.87. So I want to give you a little bit of the sausage making here that we do in our lengthy day. Paul's usually here 13, 14 hours a day. I cut it a little short. I'm here 11 hours a day. We spend a lot of time taping with our global technical director, Ken Fellio. He's very patient about that, and Eric and the interns help out as well. But we have a countdown, and when they go, we need a clean, that means I count in. So I'm going to do a clean in the stock movers today.
Yep.
This will be the way we roll. 3, 2. Let's take a look at some of the stocks. The stock movers today. I'm Tom Keene with Paul Sweeney and Bloomberg's Lisa Mateo. Did I do okay there?
That was excellent.
Thank you.
I love it. Okay, we are retail focused today. All right, we have to start with Target. Their shares have been down as much as 3%. The basic, it cut its sales forecast, weaker than expected quarter. So the company pointed to a few things, right? There's people spending less on things like clothing, home goods, discretionary items, falling consumer confidence. There's uncertainty over tariffs, right? Shoppers, they also boycotted because they had that decision when they stopped those diversity initiatives. So people didn't like that. Comparable sales, they dropped 3.8%.
They called that out, the company?
They did, yes.
Really?
The company did. They said people are boycotting. Slower shopper traffic. And the thing is, consumers, what they're doing, too, they're spending less per visit. So that's another thing they pointed out.
I didn't hear this at Home Depot, did I?
No, the difference, there is a slight difference, especially when it comes to price increases and things like that. Because remember, we've had Walmart talking about we're going to raise prices because of tariffs. But Home Depot said, no, we're not.
Come on, their head of
Target saying no.
Their head of government affairs goes, that didn't work for Walmart. Change it to them.
Yes,
who knows what they're going to do?
Well, when your CEO, like the CEO of Target, is saying, you know what, we're not happy with the results, that's a red flag. They did have one bright spot though, that was e-commerce. They did say that was doing well, but they're just, they've been struggling.
Inflicted 6 months ago, everything was just hunky-dory. I don't know.
Agree.
So there you go.
Next.
All right.
The big part is that so much makes up of their sales. 65% is like those consumable goods, whereas you have Walmart who has the groceries.
Yeah.
But Target, that's not a big thing for them. Okay, TJX, we'll stick with retail. That's apparent. TJ Maxx, Marshalls, Home Goods. Shares up and down as much as 2%. So it topped first quarter earnings and revenue expectations. But the thing is that they warned that higher tariffs could lead to softer than expected second quarter earnings. So it was kind of that look ahead that investors didn't like, so that's why their shares are lower. But they're known as the discount retailer.
I mean, you and Alex are all over TJX.
Because they have the name brands, but they're still struggling. So it just goes to show you, but who's not struggling? Yes, Lowe's. That would be, yeah. So Lowe's.
No, there's 8 Lowe's. Which Lowe's is this?
This is the home improvement Lowe's.
Home Depot Lowe's.
Yes, Home Depot. Okay, you could say Home Depot Lowe's. Yes, their shares have been higher, about 3% before the bell. So they maintain the outlook, even though sales fell last quarter, but it fell less than expected. So you time that right into the Home Depot earnings. So it looks like consumers still spending on their homes, things like that, home improvement. They're putting off the big projects, though, due to high interest rates, but they're keeping these smaller projects. So a lot of the smaller projects are what's really helping the stores right now. It's been doing things to improve. They focus on boosting offerings for professional contractors. They're trying things like that. They're trying to handle larger projects, investing across the online business. The interesting thing is that the home category is usually vulnerable to tariffs because a lot of the products are sourced from overseas. They also tend to be discretionary on top of that. But Lowe's shares have been higher before the bell. And the last I want to point out to, because we've been talking about it over the past couple of days, is United Health, right? It's on this roller coaster ride. The shares are up, down, up and down, up and down. Before the bell, it's got back on the downside. It's falling as much as 6% this morning. The reason why, well, the latest thing is this report from The Guardian says that the company is secretly paying nursing homes to reduce hospital transfers for its residents. So you said it. It's just been a mess. and that's the issue. So this morning, their shares are lower.
Lisa Mateo, thanks so much. The Stock Movers, 5 minutes for you. Hugely popular out on our podcast. Look to Bloomberg Podcast, also out on Apple and Spotify as well. I'm depressed. Our staff is so young, they confuse Taylor Swift with the Cars. That's un-American.
broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
It's not really a Mag 7. It's an Elon 7.
How long can bull markets last? Give us a sense of where we are.
With Lisa Mateo on markets.
President Trump's tariffs really rock global markets.
And Michael Barr with news.
President Trump turning up the heat on Ukrainian President Zelensky.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, and Lisa Mateo. We're going to do a more complex data check here at the top. Then Brian Belsky will join us for a lengthy discussion. Hugely important. Doing a lot of equity today. Stuart Kaiser, Gina Martin Adams, Belsky for a long discussion here to reaffirm your confidence in the stock market. Futures negative 36, stasis there. VIX 18.86. Paul, I note 30-year bond. I guess it comes off a 503 to a 501 handle.
Yeah, but still.
Price up a little bit.
Yeah, price up. And so we're seeing, I mean, the yields here north of 5% gets your attention. Hey, the 2-year at 4%. So you look at the 230 spread there, 100 basis points. It's been a while since we've seen that kind of steep.
10-year real yield comes in a little bit as well. I do want to note gold up $23, up more earlier, 3.335 on gold. Bloomberg Surveillance this morning, we're brought to you by IBKR. Will the year-over-year change in the U.S. CPI, will it exceed 2.7% May of 2025? At IBKR Forecast Trader, the yes was recently at 23%. Start predicting today at ibkr.com/forecast. That's ibkr.com/forecast. Last trading day for this contract. Year-over-year CPI. This contract is June 19th. We thank Interactive Brokers for their support. Right now from the Bloomberg studios, the Interactive Broker studios, the Bloomberg Business Forecast, Lisa Mateo.
Yeah, we've got futures pointing to the lower open this after stocks really snapped that 6-day winning streak for the S&P 500. Losses in big tech really weighed on the major indexes. Alphabet, Amazon, both fell more than 1% yesterday. Apple and Nvidia dropped nearly the same. So taking a look before the bell, we have Alphabet up nearly 0.5%. Remember, it held that big AI event yesterday, so that's helping shares. Amazon down 1%. Apple off about 0.5%. We have Nvidia down nearly 1%. Looking at Tesla shares, still higher, up nearly 0.5%. Yesterday, it was actually the only one of the Mag 7 stocks that rose. Elon Musk said he's committed to leading Tesla for the next 5 years, so that gave shares a boost. We go to Nasdaq futures, down 0.6%. Same for S&P futures, Dow futures off about 0.8%. The 2-year yield, 3.99%. That's up 2 basis points. The yield on the 10-year, 4.53%. That's up 4 basis points. Want to take it to the 30-year, 5.02%. That's up 4 basis points. We have the Bloomberg Dollar Spot Index down about 0.4%. And the British Pound up about 0.2% at 134.27 against the dollar. The Euro 113.39 against the dollar. The Japanese yen 143.61 against the dollar. Home builder Toll Brothers up 2%. Reported second quarter revenue beat estimates. Reaffirmed expectations for full year sales. Then we get to shares of infrastructure software company Palo Alto Networks. On the flip side, it's down 5%. And Outlook came in below estimates. And finally, you have Baidu ADRs up 2%. It's a Chinese tech company. It reported that a beat on revenue for the first quarter. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Nicholas Rocanova has one of the toughest jobs on Wall Street at BMO Capital Markets. He has to actually edit. Belsky will write like 14 pages of blather.
Yep.
I mean, that's what he does. And Rocanova brings it down to 3 cute paragraphs. Our bullish and positive stance proved to be prudent. Again, joining us now for an extended, important conversation here on your conviction to be in the equity markets, Brian Belsky, Chief Investment Strategist for BMO Capital Markets. I'm sorry, Brian, for me, always and forever, the Bank of Montreal.
Oh, my gosh.
Brian, Brian, I want you to talk about what I've lived, and a lot of younger people have never lived it. If price goes down and yields go up, stocks can still do well. Discuss that.
They can do very well. And thanks for mentioning Nick Rocanova, too. First of all, one of the best names in Wall Street history, number one. Number two, The poor man has worked with me for 18 years, so we should all pray
painful.
for him. I'm coming live to you, by the way, from the wonderful Jennifer Lee's office here at BMO headquarters in Toronto. So I feel like I'm in the midst of greatness.
Glow.
Yeah, exactly. So I really think we wrote this piece and talk about voluminous piece. Nick lets me go crazy on the year ahead piece. We wrote this piece in 2022 for the 2023 year ahead, and we talked, Tom, about normalization in markets, something we talked about last appearance as well. And, stocks can go up when yields go up. The average 10-year treasury the last 75 years is 5%. 0% is not normal. What's happened in the Fed since August of 2007 is not normal. And I think we're kind of returning to normalcy. On the bond side of things, even though we're primarily equity people, we believe the majority of returns, total returns of bonds the next 10 years is going to be about yield, not price performance. Remember, the last 40 years, we've seen massive outperformance of bonds for the most part, and we've had great price performance. So I think, Tom, that we're entering into this period where more even returns for stocks, high single digit, low double digit, same thing with earnings growth, where a yield environment that can kind of hover in this 350 to 450 range predominantly.
So, even though you maintain, and rightfully so, Brian, your bullish stance here, I mean, it's been an amazing rebound in this market here. Still, your EPS for the S&P 500 still around $250. Does that support higher stocks from here?
It does. And we're in the bottom of the report, Paul, we talked about how we're not revising back to our 6,700 target, which was officially our initial target for 2025. It still remains our bull case at 275 for earnings and 6,700 for the price. However, as we wrote in the piece, we need to see some signposts, quite frankly. And one of them, quite frank, to be clear, is we need to see guidance come back and we need to see earnings growth solidify. And so we think we're going to probably see that. So with the market, we're transitioning to show me from scare me. And I think the next quarter or two, which is a long time in Wall Street, brothers, a long time, the next quarter or two, I think we need to see earnings growth come in, and then we'll feel better about returning to our bull case at 6,700.
To get to a 6,700 target, does tech have to be a leadership category, Brian?
That's a great question. Yes and no. We don't think Meg 7 needs to be leadership. Meg 7 is all about liquidity. Tom and I talk about the 90s, and these stocks are the new consumer staple stocks, as we talked about, these big cap, these mega cap tech stocks. We're technically underweight the Meg 7 because we own zero Meta in our $11 billion that we run for BMO. But I think it's going to come from other areas of tech, whether or not it's bottom fishing in AMD or the great fundamental story of Palantir, or buying the dip in Palo Alto today, which the major theme of AI, we think, going forward is cybersecurity. It's maybe moving down in cap to a cyber arc with respect to cybersecurity. And even Oracle. Oracle's not in the Meg 7, but we're talking about a multi-billion-dollar company with a fantastic balance sheet and a great software company. So I think it's going to be other areas in tech, Paul, that outperform. And that's why we continue to be overweight, with respect to the technology sector.
So, Brian, it seems like, again, the volatility that we've seen here in, the first 5 months or so of the year has really come out of Washington, D.C. with economic policy, trade policy, just kind of bringing in a level of uncertainty into the markets. I'm not sure that's going to necessarily change going forward. How do you kind of come to grips with what is still going to be a higher tariff environment out there?
Right. That's one of the points that we make in terms of our signposts. Markets have to stop reacting to every little thing out of Washington, whether or not it's good, bad, or indifferent. And once we kind of get back to quote unquote business and normalcy, I think we'll feel better about the bull market, which remember, we're still in big, giant secular 25-year bull market. But again, given this uncertainty, I think too many people are trying to make the big call and go right back up to 7,000 on the market. the market needs some work to do. It doesn't mean we're not bullish. It just means we need to see some fundamental work.
Brian Belsky on the X-axis where I live, folks. He's with BMO Capital Markets. We will continue with Mr. Belsky. He moves the markets. They go the other way. Futures at negative 41, Dow futures negative 389. The VIX out of stick now, 19.11, a full big figure there. The 30-year bond, 5.01%. Yields actually come in, price up, yield down in the fixed income space. Just got a note from Jack Fitzpatrick in Washington. We're efforting Mr. Fitzpatrick now through his wall of interns, and he says they're in the rules committee after an all-nighter, and they're stalling.
Really?
Which is what we used to do. We'd be at Jay's Diner. We'd get there like at 11 p.m., take over, the Jay's Diner kind of thing, and eat first. Got to eat first.
Yeah.
And then lots of coffee and, try to get a C in the 3 exams the next morning. Why don't you go back to Mr. Belsky?
Hey, Brian, I'm looking at what we haven't talked about a lot really this year with all the talk on tariffs. We haven't talked about the Federal Reserve and interest rate policy here. Do we need the Fed to be accommodative here for this market to work?
I don't think so. And I think that's really the secret sauce there, Paul. I mean, I think at the end of the day, the end of quantitative tightening, rates are still low relative to history. The Fed has a dual mandate. Employment remains very strong. Remember, employment is the laggingest of all indicators. It always happens last. And then on the inflation side, as you're talking about CPI, we'll see how PCE and all that kind of comes in going forward. But I think the Fed is done. I'm one that says the Fed's actually done a pretty good job. And so I don't think that we don't need an interest rate cut for the markets to go up.
What do we need in terms of, just from the companies themselves? How do we need for these companies to step up and say we have better visibility, more visibility, any visibility on our earnings? Because the first quarter was kind of characterized as a lot of companies, rightfully so, just saying we don't know what's going on out there.
Right, and that's part of our signpost that we need to see guidance and earnings kind of growth numbers come back, meaning the show me side of things, Paul. And I do think, obviously, first quarter, the majority of earnings didn't have tariff-related type of issues. But at the end of the day, we want to see companies that have strong operating results, that operate from a bottoms-up basis very strongly, and have some guidance that say, hey, you know what, tariffs, smariffs, we're still going to have very strong and steady earnings. And, oh, by the way, you get what you pay for, and you know what you're paying for in U.S. stocks. And so I think that's going to be the theme for the second half of the year.
Brian, have we ever seen retail and institutions so far apart? I mean, I got retail buying the dip. That's all there is to it. Belsky's going to these Florida, Caribbean island stock conventions. People are day trading off their laptops while Belsky's giving them pro tips. Okay, retail's all in, Brian. Institutions aren't. Has it ever been this nuts?
Great question. It's been on the other side. I would say, I remember having very complex and aggressive conversations with private wealth in March, April of 2020. Institutions were still late in getting out, Tom. And I think also, too, I go back also to October of 2000, where retail was the opposite side. Retail was all in. Completely all in, and you started to see the technology crack a little bit. In the U.S., foreign investors were still very, very aggressive. I, quite frankly, hate the notion of retail's dumb money and institutional's smart money. It's actually the opposite. It's actually the opposite. And I think that's part and parcel, Tom, quite frankly, to what happened in the late 90s, because retail private wealth really learned their lesson to be too overexposed in stocks, and wealth managers have done a wonderful job kind of diversifying. So I think it's the dumb money is actually the hedge funds and the short-term money that's trying to chase these momentum moves. And, oh, by the way, they've been wrong.
Is that because they have access to leverage? I mean, there was a white paper years ago, sorry, folks, I can't cite it, that if you get out over 2.8 to 1 or 3 to 1 leverage, things fall apart. I mean, it's just about institutions are leveraged up, and that's where they get into trouble.
I think it's part leverage, quite frankly, but it also, I think, too, is that institutions, they own too many stocks in these big portfolios, and they haven't made the right bets. And I think that they're chasing momentum, quite frankly, and there's not a lot of independent thought. When I go in and talk to a big institution, Tom and Paul, and I start talking about stock picking, it's like their eyes gloss over, because for the most part, they're just kind of chasing the momentum. They don't really want to talk about operating performance and management and product and service. So I think that's kind of the rule we're in. And oh, by the way, retail, i.e. private wealth, they love stories. They want to talk stories about stocks. And institutions have kind of forgotten how to take stories.
Really, that's really, really interesting. I'll have to have you back for that. I got one final question. Knicks or Pacers?
Knicks, come on. The Wolves choked last night. I want to see the Cat taking on their old team, the Wolves. So we got to get going.
Brian Belsky, thank you so much. BMO Capital Markets. Thank you, Nicholas Roccanova, for writing everything Belsky does.
Of course.
He's riding around in a Rolls Royce.
That's how it works.
He's like, Nick, let's do something on this. Okay, great. We'll do that. Brian Belsky, thank you so much. We'll get him back here. That's a really important discussion, Paul, about retail institutional.
Yep.
The dichotomy right now is just ginormous.
Yeah, we've heard it from a number of sources, including Eric Balchunas when he sees it on the ETF side.
Well, and that's the new thing on the block.
Yes.
I mean, you talk folks about what's changed. It's ETFs. Yep. Is Grafeo still employed? Can we get Emily Grafeo?
Absolutely. She was on yesterday.
We'll get Greifeld and Grafeo in there. So, sounds like a band. Sounds like a
exactly.
Somebody, they were sensitive. They were Birkenstocks first at Bryn Mawr.
Yep.
Grafeo and Greifeld. Let's see it right now. Bloomberg surveillance this morning brought to you by Oracle. Attention in growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Let me spell that. BLOOMBERG, oracle.com/Bloomberg. Talking about your current cloud bill, they'll cut it in half. Futures -45. He lived for Thursday Night TV with our news in New York City. Michael Barr.
Thank you very much, Tom. We have two big stories coming out of Washington. First, House Speaker Mike Johnson said Republicans have reached an agreement to increase the state and local tax deduction to $40,000. The agreement is causing a backlash from conservatives who are pushing for more spending cuts to offset the tax reductions in President Donald Trump's economic package. Republican Representative Sam Graves of Missouri.
EVs operated on our nation's roads without paying into the system, which is primarily funded by federal taxes on gasoline and diesel. Plain and simple, this is a fairness issue. And it's time these roadway users directly pay into the system that supports the very highways that they drive on.
All of the Democrats are against President Trump's bill. Ranking Democratic member Benny Thompson of the House Homeland Security Committee says it makes the country less safe.
The American people are constituents, and they won't make mistakes what is being shoveled in this room tonight because it stinks to high heaven.
And there's late word that Democratic Representative Jerry Connolly has died. His family says the Virginia congressman that the esophageal cancer recently returned. Jerry Connolly was 75. Elon Musk will join President Trump's meeting with South African leader Cyril Ramaphosa at the White House today. The Pretoria-born billionaire has been a staunch critic of Ramaphosa's government and has spread the conspiracy theory that the country that ended apartheid is conducting a genocide against the white minority that once ruled it. Democratic Representative LaMonica McIver is in New Jersey and is set to have her first appearance in federal court today on assault charges stemming from immigration officials attempting to arrest the Newark mayor outside a detention facility. The interim U.S. Attorney for New Jersey, Alina Habba, charged McIver, a twice elected member of Congress this week, with 2 counts of assaulting, resisting, and impeding an officer. McIver has denied the charges, and Democrats have rallied to her defense. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Tim Surratt, thank you so much. TV Guide. Michael Barr, thank you so much. This is TV Guide. Remember we used to get TV Guide? You know, the rich people on the street, we never got it.
That was must reading every week.
I mean, and then somebody in the cover was like, OMG. Paul, to the new world, CBS.
Yep.
Thursdays remain unchanged with George and Mandy's first marriage.
Yep.
Ghosts, Matlock, I know that name, and Elsbeth. But Friday is mostly a new look.
Yeah.
How does this happen? How is it manufactured?
Well, I mean, every year, even during the heyday of network television, most of the shows fail. So every year you got to launch new shows. And what you try to do is find it a successful show, have
like
that anchor,
Jellystone.
have that anchor, one of your important nights like Thursday, like Wednesday, when people are watching television, and you try to build off of a successful show and try to build a night around a successful show. Because back in the day, Tom, when you didn't have a remote control, you had to get up off the couch to turn the channel. And so if you could have just one show at 8 o'clock, that would lock in the audience for the whole night.
No.
Happy Days,
You
Tuesday.
had to have Michael Barr and Mom and Dad get him off the chair to turn the channel. That's how I was the remote control.
That's how it worked
In our
back
house,
in
it
the
was
day.
the youngest sister had to get that.
Youngest
she got
sister.
stuck with turning the channel. They're like, you, up, go.
When do they merge? I mean, okay, it's all nice chat and that and Gunsmoke and, go to bed. Like I never saw Get Smart because we weren't allowed to watch TV in the weeks. But Paul Sweeney, when does Peacock merge with, name the other 6 names? What are they waiting for?
It's a great question, Tom, and it will happen. And I think the federal regulators will allow it to happen because what else are you going to do? I mean, they have really no other option if they want to try to grow or remain profitable and all those types of things.
Michael Barr has talked about Norm and the death of George Wendt. Go back, folks, whatever you do, particularly younger, Baby North kills it as Lilith, and her baby says his first word. Go find it out on YouTube. Norm, this is Bloomberg.
This is a Bloomberg Money Minute. Used cars are older than ever. The average used car is almost 13 years old, according to S&P Global Mobility. That represents a 4-month increase over the past couple of years. S&P Global also says that for the first time since the 1970s, the number of overall passenger car registrations dropped below 100 million vehicles. An official with S&P Global said the preference among consumers has shifted to light trucks. It looks like job cuts may be coming to TikTok's U.S. staff. The app told its U.S. e-commerce employees to work from home today while waiting on emails regarding difficult decisions. TikTok has more than 1,000 people near Seattle with additional offices in New York, Texas, and California. Stock futures point to a lower open for Wall Street. The rally lost steam yesterday. The Dow was down 115 points. The S&P 500 fell 23. The Nasdaq slipped 73 points. Gina Cervetti, Bloomberg Radio.
Join Bloomberg in San Francisco or via live stream on June 3rd for the Future Investor, Finding the Opportunities. This 2025 event series will examine how companies are investing in their businesses to create efficiencies, innovating their products and services, and improving the customer experience. This series is proudly sponsored by Invesco QQQ. Register at BloombergLive.com/FutureInvestorSF. That's BloombergLive.com/FutureInvestorSF.
The data that matters for your investments.
We had the Nasdaq 100 fall into correction.
And analysis on the companies making news on Wall Street.
The biggest driver, NVIDIA.
Sales firms are also higher.
Listen to the Stock Movers Report from Bloomberg.
A big bounce in the market today.
Pharma stocks are taking the biggest beating.
It's your short audio report on the day's winners and losers in the stock market.
The largest one-day drop on record.
Subscribe to the Stock Movers Report on Apple Podcasts, Spotify, or wherever you listen.
Audiences are calling Can't Look Away a must-watch documentary of 2025. Based on investigative reporting by Bloomberg's Olivia Carville, filmmakers Perry Peltz and Matt O'Neill confront tech giants, exposing how social media is addicting our kids and impacting mental health.
You say goodnight and you think your kids are safe.
These are children that have been addicted by these apps.
Every parent in America is terrified.
Stream Can't Look Away now on Jolt.film. That's JOLT.film. Watch today.
Every weeknight, your favorite Bloomberg podcasts are on Bloomberg Radio.
We've been discussing the Federal Reserve's latest moves.
Immigration has become a hot topic in the U.S.
Tune in weeknights at 7 Eastern for the best from Odd Lots, The Big Take, Elon Inc., and all of our podcasts.
The Elon universe, it's a very complex cosmos.
The Podcast Spotlight, weeknights at 7 Eastern.
We learn about a wide variety of subjects.
On Bloomberg Radio, context changes everything.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And It's Bloomberg Business Flash brought to you by ShipStation. Calm the chaos with the shipping software that delivers. Use code Bloomberg for a free trial at ShipStation.com. That's ShipStation.com with the code word Bloomberg. We've got futures lower. This is following the first loss for stocks in 6 sessions. We have Nasdaq futures down 0.8%. Dow futures now down more than 1%. S&P futures off about 0.8%. The 2-year yield 4.00%. That's up 3 basis points. The yield on the 10-year 4.54%. That's up 5 basis points. And we have the 30-year at 5.03%. And that's up 5 basis points. Not much on the economic calendar for today. We did have a look at the housing market. MBA says mortgage rates climbed last week to a 3-month high, 6.92%. And that sparked a slide in applications for home purchases and for refinancing. Few stocks on the move. We have Wolfspeed shares down 62%. It's a report that the chip component maker preparing to file for bankruptcy protection within a few weeks. And shares of VF Corp, that's the company behind Timberland, really taking a hit, down 16%, worse than expected first quarter guidance. But then shares of United Health on the move again, but in the wrong direction. They're down 6%. This time, news from Guardian that the company has secretly paid nursing homes to reduce hospital transfers for its residents. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. 4 minutes to the opening. Tape deteriorates. We're negative 33 now, negative 47 on SPX. VIX out well over a stick, 19.27. Just equity deterioration. I get a note from Jack Fitzpatrick. They're in the rules committee.
Yep.
And they're stalling.
Stalling. Yep.
I don't know what idea what that means.
I don't, but that's how they make the sausage down there. And
Steve Sosnick's nodding. He has no idea either. We have 4 people in the studio, folks. No clue what that means. We'll have for Jack Fitzpatrick here through the morning, maybe with Paul and Alex as well. I'm going to digress right now. Steve Sosnick with us. He's with Interactive Brokers as their chief strategist. And, again, thank you for the support that Interactive Brokers gives us driving forward Bloomberg surveillance worldwide. It's that time of year where parents are mental with kids that are mental. And it's your fault because Wharton invented the double degree. I remember years ago, folks, nowadays, should we get a double major? Should we get a triple major? That's like cool. I need to do 5 languages. It's Wharton and Penn's fault. Steve Sosnick lived this, but you lived the real double degree, which is undergraduate economics, over to the MBA at Wharton, which is very cool. Did you feel like that was a 6 or 7 year continuum?
Well, it was really, we did it in 5 years. And it's funny because we had our reunion this weekend and there were 6 of us in my class who did it and 4 of us happened to be there and we were sort of commiserating over it. It was, we just sort of did it. I don't know. It was
absolutely original at the time.
It was.
It was only Penn and Wharton did this.
It was. And there's a handful of people who did it. We can name drop, but it's an interesting list, at least from the people who did it around my years too.
Right. I'm
the least interesting probably of the list actually in many ways.
Yeah, but you actually know where the market's going.
Fair enough.
So this has been a crazy year so far, just for people in the market. They saw the tariff discussion really take center stage. That created some economic uncertainty that resulted in part for a 20% sell-off in the market. Boy, we've come back almost all the way here. So a lot of volatility. Now what?
Well, there's a few interesting points here. I think what we're seeing today is sort of the stalling. This week, I think the existential question is sell in May or go away, or don't short a dull tape. Both of which can be in place. Mm-hmm. Fortunately, it's not that dull, but that also means that it's not moving in the right direction. But you raised the point earlier this morning where earning expectations are now 7% for the S&P 500 as opposed to 12%, but yet we're basically back to where we were before.
Yep.
We've gotten sort of momentum has taken over, and at its extreme, momentum is saying, I don't care about fundamentals. I only care about price action. And that can be a bit dangerous because it becomes self-fulfilling until one day it's not.
So what do we do here? Are you looking for sectors that screen well? Are you looking for factors that screen well? Are you looking for safety? What are conversations you're having these days?
I think the conversations are across the board. I think, a lot of let's say my older peers who come from an institutional background, they're like, what are we doing? I'm having dinner with a couple of them tonight, and that's constantly the question, is what's going on? The younger you are, the more wedded you are to the idea that stocks always go up and every dip is a buying opportunity. And to be fair, it's worked for them. So if something keeps working, why wouldn't you keep doing it?
Lawrence McDonald wrote, author, acclaimed, I think he's got a movie coming out. Larry McDonald wrote an essay 2 years ago now that just, to me, was so important. It was just the wall of money that's out there. Yes. Is that still in place right now? That there's literally trillions of dollars, day to day, tick by tick, looking for a warm spot?
It appears that way, but although you have to wonder where it's coming from, because a lot of people, for example, have said, "Oh, this is a lot like August of '82," or 2009. This kind of move. Except those were accompanied by big monetary shifts. Those were accompanied by big policy changes. Right now, we're just sort of on fumes a little bit, and so I do wonder where the monetary backdrop is if we're not going to get rate cuts and fiscal policy moves the opposite direction.
We continue with Steve Sosnick, Chief Strategist, Interactive Brokers. We did a 17-second delay in the market so Lisa could catch up with what Tarjay is doing.
Much appreciated. All right, we've got stocks extending their retreat this morning. The S&P 500 down 0.6%, 38 points, 5,901. The Dow off about 0.8%, 368 points, 42,305. The Nasdaq down 0.6%, 132 points at 19,006. The 2-year yield 4.01%. That's up 3 basis points. The yield on the 10-year 4.54%, up 5 basis points, and the 30-year 5.02%. That's up 5 basis points. We have oil climbing. There's a report that Israel could be gearing up for a possible strike on Iran's nuclear facility. So we have Brent crude up. WTI crude up 1%, $62 a barrel. Brent crude $65 a barrel. We have the Bloomberg Dollar Spot Index down about 0.3%, and Bitcoin down 0.3%, but just above 106,000. Want to check in with retailers after earnings? We have Target down 7%, TJX off 2%, Lowe's little change, and right now VF Corp is down 16%. That is your Bloomberg opening bell report. Paul and Tom.
Thank you, Lisa. Just really comprehensive. Down negative 331 right now. When we look out, there's got to be a value to cash. Now, the long bond, the 10-year bond, I got a yield going up. Do I have an attraction to T-bills and things in tighter cash?
I think you should. I mean, right now we're looking at the Fed potentially maybe 2 cuts this year, more likely 1 to 2. So we're talking about a 4% yield on cash, assuming you put it in the right places. The two-year note finally got up to 4% as we're pricing out some of those. If you're nervous about things, a 4% yield is pretty good if the markets are moving in retrograde and inflation is sort of around 3%. That there's actually real yield on your money. It's a good place to hide. So I never poo-poo the idea of cash.
Retrograde is astrology talk. Gotcha. It's like CFA level 4.
So what do we need from the Fed this year? Scott, should we look to the Steve? Should we look to the Fed for anything here? I mean, I'm looking at the work function. Maybe a couple of rate cuts. I don't know.
I think we have to look to see if the Fed is quick enough, and that to me is the existential question.
Okay.
Right?
Interesting. Thank you.
Because I think. Thank you, Tom. I think basically I think it's clear there'll be price pressures. I think it's also clear that there's the sentiment numbers are telling us that there's a strong risk of a weaker economy. There was a lot of question in my mind about which would they go for if the dual mandate conflicts. Do you go for inflation, or do you worry about inflation, or do you worry about the weaker economy? I think the comments over the last couple of days seem to indicate they're more concerned about restoking inflation fears. And so if they're going to do that, if they're going to be sitting on the sidelines, and the comments that came out from various Fed talking heads were nothing till maybe September. That's the risk, is that the economy slows and the Fed's got their hands tied.
One last question quickly here. Then on the real yield, the 10-year real yield out to 2.17 this morning, a little better right now. As a precursor for a quick Fed, that real yield has to come in, right?
One would think, yeah, but also I think the financial tide in the bond market is going out. Think about it. You have higher yields this morning and a lower dollar. That's telling me that the money.
Yeah.
That's telling me money's flowing away. To get your wall of money question. So that's another thing we have to keep an eye on.
Steve Sossing, thank you so much. Chief Strategist, Interactive Brokers. Greatly appreciated this morning. Paul, I'm looking at the dollar, and it just doesn't have a bit. I mean,
no,
it's not like big deal headline making. Yen under a 144, stronger yen. Where's the euro? I mean, somebody was in here the other day saying euro 120.
I know, and that's not what you want to hear, Tom, and sitting in the cafe in Paris or Rome. So I don't know.
Outside, it's 10 below zero, and I'm at St. Regis Cafe outside.
Sure, absolutely.
Looking over Notre Dame.
Yep.
Tough.
Yep, that's how you roll. So we'll see how the tourism goes in Europe this summer.
It looks pretty good.
Yeah, always does.
I did the flights yesterday, folks. I'm sorry. Check your flights. I think it's sobering how reasonable they are versus some of the madness of years ago. Please stay with us. We've got the markets open. The Dow, negative 354. Across the nation on your commute. Thank you for listening. Good morning on YouTube. Subscribe to Bloomberg Podcasts. It's Bloomberg Surveillance.
This is your only 24-hour source for world markets and breaking business news. Bloomberg Radio. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at CBS News.
CBS News Brief. House lawmakers have been debating the president's budget bill since 1 a.m. GOP Representative Jim Jordan.
The resources we have in this bill, in short, will allow for 10,000 new ICE agents, 100,000 new detention beds, and the resources for the repatriation of 1 million migrants.
Sales fell more than expected for Target in the first quarter, and there are concerns shoppers will cut back more on spending because of tariffs. Business analyst Jill Schlesinger.
Target has been going through problems since the pandemic. That was a time when a lot of people pulled back on their discretionary spending and went back to basics like groceries.
A maintenance worker has been arrested for allegedly helping 10 inmates break out of a New Orleans jail. Louisiana Attorney General Liz Muriel.
Still are conducting a very thorough investigation of the staff. We will also look at broader conditions at the facility.
CBS News Brief. I'm Stacey Lynn.
Missed the top headlines on Bloomberg Radio? Get the latest news when you want it. Updated continuously throughout the day with Bloomberg News Now. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app and anywhere you get your podcasts.
The business news of Australia is more important than ever. Australia is a leader in renewable energy and critical minerals, and its strong global ties and resilient economy make it a prosperous trading nation. I'm Rebecca Jones. Join me and my team of reporters every week for the Bloomberg Australia podcast. Get an insider's look into the biggest Australian stories, all in under 15 minutes. The Bloomberg Australia podcast. Listen on Apple CarPlay or Android Auto with the Bloomberg Business app, or wherever you get your podcasts.
You took the first step and quit smoking, but even former smokers may still be at risk for lung cancer. That's why SaveByTheScan.org wants you to know about a new low-dose CT scan that can detect lung cancer early. It takes only 60 seconds and could save your life. You took the first step, now take the next. Visit SaveByTheScan.org for a simple quiz to see if you're eligible and talk to your doctor about screening. SaveByTheScan.org is brought to you by the American Lung Association's Lung Force Initiative and the Ad Council.
Bloomberg Radio, on demand and in your podcast feed.
On the latest Masters in Business podcast, my conversation with Bridgeway's John Montgomery on why the firm gives away half of its profits to charities.
Sometimes I get into conversation with a prospective client and you might hear something like, it sounds like you're good guys, you're philanthropically geared and you get awards as a great place to work. But all of that, put that aside, I just want to talk about the investments. And what I would say is culture is everything. It's the housing within which we do what we do. So it's very important. And you can measure that in some statistical ways, like turnover. I would say there are proxies for commitment at Bridgeway, and then returns of the strategies. Why would you think that's independent of the culture that you've built up?
You also have an internal rule the highest paid employee earns no more than 7 times the lowest paid employee. Is that right?
So statistically, that's probably true. We don't measure it that way. There's a new statistic that came out from the SEC required of public companies, and those are some of the metrics that we look at currently. Some people think it's like, oh, so you underpay. That is absolutely not the intent. It's just not to pay outrageous salaries on the top. And
Makes a lot
so
of sense.
if you want to make a gazillion, the most money that you can make in our industry, you probably wouldn't come to Bridgeway. If you want to make an absolute livable wage, and if you invest, save and invest, you should do very well over a full career. Then we're a purpose-driven firm, and we ascribe to Daniel Pink's what really motivates people is not money, but it's purpose.
Hear the full conversation on the latest edition of the Masters in Business podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, midweek, we're trading off to a pretty rough start. We have stocks, bonds, a dollar falling. We'll start with the Nasdaq down 0.5%. Same for the S&P 500. The Dow off about 0.8%. We go to the yield space. The 2-year yield 4.00%. That's up 3 basis points. The yield on the 10-year 4.53%. That's up 3 basis points. And the 30-year 5.01%. That's up 4 basis points. To currencies, the Bloomberg Dollar Spot Index down about 0.3%. The British pound at 134.25 against a dollar. The euro 113.27 against a dollar. The Japanese yen 143.86 against a dollar. We've been covering a lot of retailers this morning with earnings. Want to get to a few more. Shares of coat manufacturer Canada Goose. Their shares up 20%. Posted a beat on fourth quarter revenue. So good news there. Where we're seeing the downside, well, that's baby clothes company Carter's. Their shares off about 13%. Cut its dividend by 69%. Challenging market conditions, the threat of tariffs, that's what they're pointing to. And I thought this was interesting with all the news surrounding vaccines. CVS Health offering staff a few perks to try and boost the sales of shots. They're offering pizza parties, taco lunches, donuts and ice cream, even a day at the beach for managers and stores that exceed those vaccination goals. Gotta love the free lunch, I guess.
So they gotta go out and convince me to get a shot there.
Correct.
And they get a pizza from Famiglia.
And they get a pizza or tacos or donuts or ice cream. There you go.
I get the flu shot because we do it here at work. I did not get the COVID shot.
You didn't do both at once. Okay, yeah.
Yeah, I don't know.
I got something else besides flu as well. I can't remember what it was, but
yeah,
they just said shut up and do it.
Yep.
We have a jewel at Bloomberg. His name is Alex Tanzi. Grew up in a massively celebrity economic house. His father, legendary. I had the great honor of interviewing Vito Tanzi, a giant in economics. And his son holds court at Bloomberg. He has a new survey out, which is perfect for Lindsay Piegza. Alex Tanzi writes up, and it's, if you're on the Bloomberg, it's in one chart is a title. Not chart of the day, I did that. Alex Tanzi does me better, in one chart. We'll talk a lot about this. Lindsay Piegza joins on my Economist of the Year last year. She's with Stifel. Lindsay, Alex works off the Federal Reserve Bank of Philadelphia. The consumers are really strapped. Even the richest of rich are cutting and spending a little bit. But basically, half the country's flat on its back. Is that accurate?
I think that might be overstating it somewhat. I think consumers are increasingly concerned about the uncertainty in the marketplace, the unknowns surrounding fiscal policy and tariffs. And we see that eroding confidence. But I do see that consumers are vocalizing a bit more concern than they are actually changing their behaviors.
Yeah.
Consumers did pull back at the start of the year, no doubt. But we saw consumers move back into the marketplace in February and gain further momentum in March. So there does seem to be somewhat of a discrepancy between the soft data and the hard data out there around the consumer.
Can you go forward then and link the hard data, June payrolls, July payrolls, back into what Alex Tanzi's writing about?
Well, that's right. A lot of the momentum, a lot of the stability in the consumer is predicated on the still solid conditions in the labor market. Now, again, I don't want to oversell what we're seeing in the U.S. labor market. We have lost some momentum, but at around 150,000 job creations on a monthly basis on average, that's still indicative of a solid, a growing labor market, still on par with the expansionary pace of the previous 3 cycles. And that will continue to provide wage support and broader support to the consumer.
So, Lindsay, I think a lot of folks are just trying to get a sense of kind of where we are in the discussion of tariffs, but and it's a fluid situation. But we're certainly not at 2 or 3%. Looks more like somewhere in the low to mid teens here. To what extent does that really drag on the U.S. economy from your perspective?
Well, again, right now, until we know the specifics of the implementation of the policy, a lot of it is a guessing game. A lot of it is conjecture. And for the consumer, that means simply responding to the uncertainty in the marketplace. So again, we're already seeing the consumer pull back in response to an anticipatory increase in prices, into anticipation of more challenging conditions coming down the pipeline. But in reality, if we do see some of these tariffs go into effect longer term and raise the price of international flows of goods and parts and materials, we could talk about a material increase in inflation, several tenths of a percentage point. Now, that doesn't necessarily sound like a lot, but with inflation already stubbornly elevated coming into 2025, that could get us back on a core rate back nearer 3% by year end.
In that scenario, how do you expect the Federal Reserve to react for the remainder of this year?
Well, it's going to be interesting because right now the Fed does have a very narrow window if they're interested in providing additional accommodation to the economy. Against the backdrop of negative growth, decelerating inflation in the first quarter, there's an argument that the dovish members can make to implement maybe 1 or 2 rate cuts. But that window of opportunity is very narrow because as we look out to the second half of the year, that's when I expect inflation to reaccelerate. And we could also see a more positive growth profile for the economy. The conversation at that point is going to shift back to back to rate hikes instead of rate cuts.
Oh, listen to you. She's reducing when she was economist of the year. She's going for the double trophy. Lindsay, one quick question then here. 12 months out, what's your real GDP number? Can you get over 2%?
I think it's going to be a challenge to get over 2%. I think a realistic target is about 1.5 to 1.7. Volatility quarter to quarter aside.
Did you hear that she said after a while, inflation goes up?
Yes.
They may raise rates?
I know.
It's too much.
I don't need
Lindsay, thank you so much. Lindsay P.A. Stiefel, their chief economist here, and just did a killer job. We had Neil Dutta 1 year.
Yep.
And then Lindsay showed up.
Yeah.
And she
doing
was
a great
great.
job. Great job helping us out.
She just nailed it on a week-to-week basis. Down negative 363 with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. House Speaker Mike Johnson says Republicans have agreed to increase the state and local tax deduction to $40,000. That's a key issue in President Donald Trump's economic bill. Johnson spoke to CNN.
That's the agreement we came to, and I think the SALT caucus, as they call themselves, it's not everything they wanted, but I think they know what a huge improvement that is for their constituents, and it gives them a lot to go home and talk about.
The $40,000 SALT limit will phase out for annual incomes greater than $500,000, and the cap is the same for individual taxpayers and married couples filing jointly. Johnson says the bill could head to the floor late tonight. However, a House panel is still debating the measure even after meeting overnight. The family of Representative Jerry Connolly says the Democratic congressman died after his esophageal cancer recently returned. Connolly, who was just months ago and winning the House Democrats' top spot on the Oversight Committee, had represented his Northern Virginia district since 2009. He is the third House Democrat to die in less than 6 months. The vacancy will bring the House margin to 220 Republicans and 212 Democrats with 3 empty seats on the left. Jerry Connolly was 75. 5 down and 5 to go. Half of the inmates who escaped from a New Orleans jail Friday are back behind bars. The latest captured, 19-year-old Corey Boyd, was being held on charges that include second-degree murder. when he and 9 other inmates at the Orleans Justice Center escaped. Louisiana Attorney General Liz Murrill says she wants to know if overcrowding led to the breach in the security at prisons.
I'm also looking at contributing factors that may not be in the control of the sheriff at that facility, like the number of people that she has housed there and how long they're staying there and what they're there for and whether there's a backlog in the court system that could address some of this problem.
Meanwhile, a maintenance worker at the prison facility has been charged with aiding the inmates by cutting off the water to a toilet so that they could escape through a hole in the wall behind it. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
So the tax cut, Paul, if I get a $30,000 SALT deduction and it's a 40% tax, I've got $18,000 cash savings. Yep. If I got a $40,000 deduction, I got a $24,000 cash savings. So they're arguing there about $6,000 of a SALT deduction, but they put a cap on it of what? How much, Michael Barr?
$40,000.
But a cap on it in terms of salary, $500,000.
Oh, $500,000.
Yeah.
Well, I went out to Matt Miller, which I consider him our SALT expert. He is not happy with $40,000.
Exactly.
He says it should be zero. Leave it up to the states. So he's a states' rights guy. So we'll have to see. But I think that's where the federal government's saying $30,000.
I go back to, if they take this much from New Jersey, how much do you get back from the federal government versus they take this much from name the state?
Yeah, I don't know.
I don't know. My head's spinning. Lisa Mateo explained it to me this afternoon. I mean, she'll figure it out.
A little tax discussion over lunch.
Negative 339 on the Dow. They won't be confused in the next hour. Paul Sweeney, Alex Steele. This is Bloomberg Surveillance.
Take your Bloomberg Radio listening experience to the next level. Download the Bloomberg Business app today and listen on Apple CarPlay or Android Auto. Get live radio, podcasts, and on-demand news updates no matter where you are, from coast to coast and across the globe. Plus, expanded details on your favorite shows at the click of a button. The Bloomberg Business app, now on Apple CarPlay and Android Auto. Download it free in the Apple App Store or on Google Play. Bloomberg Radio. Context changes everything.
Bloomberg Surveillance is your premier destination for the latest on global financial markets. And now we're live on YouTube. I'm Lisa Mateo.
And I'm Tom Keene. Join me, Lisa, Paul Sweeney, and Michael Barr weekday mornings.
Visit the Bloomberg podcast page on YouTube to hear and see the most influential voices on global markets.
The smart way to start your day is with Bloomberg Surveillance, weekdays, 7 to 10 a.m. Eastern.
Visit the Bloomberg podcast page on YouTube and click on the live feed to join us today.
Breaking political news from the team that knows D.C.
A breaking story. Greg Storer, Bloomberg Supreme Court reporter with us.
Joe Matthew and Kaylee Lines, along with D.C.'s most respected news team.
Nick Wadhams, he leads our U.S. national security coverage at Bloomberg.
Balance of Power with Joe Matthew and Kaylee Lines.
We welcome Gregory Cordy, Bloomberg Politics reporter.
Listen live weekdays at noon and 5 p.m. Eastern, or on demand wherever you get your podcasts. Bloomberg Radio. Context changes everything.
This is a Bloomberg Money Minute. Stocks opened lower across the board on Wall Street. Target is weighing on the market today. Shares were down more than 7% in the early minutes of trading after the retailer cut its sales forecast following a weaker than expected quarter. Target now expects net sales to decline this year. Lowe's sales beat expectations in the latest quarter, even though they fell. Shares were little changed to lower early on in trading this morning. You might be getting a surprise refund and an apology from Amazon if you returned products in recent years. Amazon told customers the issue stemmed from not being able to verify that correct items had been returned, but now it wants to make things right. The company faces a consumer lawsuit alleging it reversed refunds from customers who followed its returns policy by leaving merchandise at designated kiosks. Once again, it's a lower start for Wall Street on this Wednesday morning. Gina Cervetti, Bloomberg Radio.
On a recent edition of the Big Take podcast, Bloomberg Weekend editor-at-large Michelle Hussein sits down with billionaire Elon Musk at the Qatar Economic Forum. Hussein spoke with Musk about his future at Tesla, his ongoing feud with OpenAI CEO Sam Altman, the possibility of Starlink going public, and his work with Doge.
I want to ask you about the total amount that you're planning to save through Doge's work. Before the election, you said it was going to be at least $2 trillion. The number currently on Doge.gov is $170 billion. That's a big change. What happened to the $2 trillion?
Well, do you expect it to happen immediately?
Well, is it going to happen? Because DOGE is supposed to run till next July.
I mean, your question is absurd in its fundamental premise. Are you assuming that on day, within a few months, there's an instant $2 trillion saved?
No, I'm not at all. I'm just asking, is that still your aim then? Is it still your aim to get to $2 trillion?
Have we not made good progress given the amount of time?
That's exactly what I'm asking. So is it still your aim to go from 170 billion to 2 trillion?
The ability of DOGE to operate is a function of whether the government, and this includes the Congress, is willing to take our advice. We're not the dictators of the government, we are the advisors. And so we can advise, and the progress we've made thus far, I think, is incredible. The DOGE team has done incredible work, but the magnitude of the savings is proportionate to the support we get from Congress and from the executive branch of the government in general. So we're not the dictators, we are the advisors. But thus far, for advisors, the DOGE team, to their credit, has made incredible progress.
That's what's on a recent edition of the Big Take podcast. Listen to the full episode on Apple, Spotify, the Bloomberg Business app, or anywhere you get your podcasts.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Good morning on your commute across the nation. Good morning on YouTube, in America and worldwide as well. Ira Jersey with us now, Chief U.S. Interest Rate Strategist. This could easily be a 6-hour conversation. We don't have that time. Ira, let's just start with your appearance before Congress last week. Was the coffee good?
Well, I don't drink coffee, but the tone was pretty positive. I think that among the members of Congress on the task force that myself and Darrell Duffy and a few other notable folks spoke with understand how important the Treasury market is, and they're trying to make sure that there's not any fragilities that can't be addressed with maybe some changes in regulation.
How does the Ira Jersey trust market, the short-term banking relationship market, how do they react to higher 20, 30, and 40-year yields?
Yeah, so generally speaking, a steeper yield curve, which is what we've seen over the recent past, tends to be good for the banking sector just from a net interest margin perspective. But that's changed a bit, and that is in part have shifted because of the some of the regulations that went into effect after the global financial crisis, including things like the net stable funding ratio, which means that banks have to have more longer-term liabilities or longer-term debt outstanding. So the way that they used to transform maturities by borrowing short and lending long has actually diminished somewhat over time. Plus, they have all of these bank reserves outstanding now, and that's a large part of their interest income that they receive because the government, the Federal Reserve, basically pays them interest on this, $2+ trillion of reserves.
Ira, I'm looking at the 2-year Treasury, the 10-year Treasury. I got about 50 basis points of steepening. Just give us a sense of context. Is that a lot? Is it a little bit? What's it tell you?
Well, so in past cycles, like what has tended to happen is when the Federal Reserve was getting ready to lower interest rates, you'd wind up seeing that curve even much steeper than what we have now. So you wind up seeing that curve get to, the 2s, 10s get to 100, 150, and on occasion even 200 basis points. So we could go much further. Now I think that there's some mitigating circumstances to that during this cycle, but we do have a target of around 75 basis points for that 2-year versus 10-year Treasury yield curve. I actually put a note out just this morning noting that so far in the past couple of weeks we've had this bear steepening, so basically yields going higher and while that difference expands. I think that might shift though a little bit here, and one of the reasons is that if we do go into a more prolonged and deeper slowdown in economic activity, 2-year yields can wind up going from 4% down toward 3%, and that will cause what we call a bull steepening of the yield curve, and that's where you get that 75 maybe to 100 basis point difference in those two yields. 1 minute for Ira Jersey. It's a long 1 minute. What do we take away from 30-year gilt UK, 20, 40-year Japan yields spiking higher? Does that matter to our U.S. audience? Well, it certainly does, and I think that's one of the reasons why you've seen some of the weakness in the long end of the U.S. And yes, some of it's because of domestic concerns over budget deficits and the like. There's no doubt that that's part of it. But global interest rates, particularly for those names that you just mentioned, so the large sovereign debt markets, they're very correlated. So when the Bank of Japan says that it's going to pull back from buying very long-term debt and that their yields go up 12 basis points, our yields in the U.S. are going to respond at least to some level. Now, that beta is not going to be 1-for-1, but it's certainly worth a couple of basis points at least in terms of the long end. And, this 5% level is going to be very key to hone in on for the 30-year because it is an area where some investors really like to buy the bond. But is there enough of them right now?
Ira, thank you. Brilliant. 5.01% on the 30-year. We'll get Mr. Jersey in for a long, long conversation if he chooses to visit us somewhere before 2027. 1982, it is the single greatest call in TV history. Cheers was a failure. It was ranked 74th out of 77 shows. And somebody, I believe this is at Paramount, yes, Paramount Television, said this show's terrible, let's renew it. The greatest call in TV history. Boston 92.9, good morning.
And your third fiancé didn't show. Sometimes you wanna go where everybody knows your name, and they're always glad you came. You wanna be where you can see our troubles are all the same. You wanna be where everybody knows your name.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio. Now, an update from our partners at CBS News.
This is CBS News on the Hour, sponsored by Native Path.
I'm Stacey Lynn. No sleep for lawmakers on Capitol Hill who have been up all night debating the president's budget and tax bill for over 9 hours. CBS's Jared Hill reports.
We're here to finish the job.
Why are you trying to ram it through in the dead of night?
The bill would make the president's 2017 tax cuts permanent. It works in his campaign promises of no taxes on tips and overtime. The measure also increases spending on national security while making cuts to Medicaid, food stamps, and clean energy subsidies. House Speaker Mike Johnson is confident his caucus will pass it.
We are right on track to deliver.
GOP leaders are pushing to get the package through the House by the end of the week, but the details are still not finalized. President Trump welcomes the president of South Africa to the White House this morning, and an official confirms that Elon Musk will be there. He grew up in South Africa and has promoted the claim that there is a genocide being committed against white farmers there, a claim President Ramaphosa denies. Sales at Target are down. Here's business analyst Jill Schlesinger.
Although Target did cite tariffs as a complicating factor in its earnings miss, it also said that the rollback of their diversity, equity, and inclusion initiatives may have hurt its performance.
Now to the prison escape in New Orleans on Friday. Authorities say a worker at the jail's been charged with helping the 10 men get out. And correspondent Katie Weiss tells us.
The sheriff says that 3 other staff members have been suspended, others have been reassigned, and that more staff arrests could be coming today.
5 of the 10 inmates who escaped are still on the run. Defense Secretary Pete Hegseth has ordered a review of the U.S.'s withdrawal from Afghanistan in 2021.
13 U.S. troops died during the chaotic withdrawal from the airport in Kabul, as did 170 civilians. In a rare move, Hegseth has tapped his chief spokesman, Sean Parnell, rather than a military leader, to convene a panel to conduct the review. Parnell served in Afghanistan for 16 months as a platoon leader. Helping him will be former Lieutenant Colonel Stuart Scheller, who pleaded guilty to dereliction of duty and contempt after he recorded a video criticizing military leaders for the Kabul withdrawal. Michael Wallace, CBS News.
Levi's is breaking up with Dockers.
Levi's 100% cotton Dockers. If you're not wearing Dockers, you're just wearing pants.
Levi Strauss selling off the popular khaki pants company to Authentic Brands Group for $311 million. Levi's wants to focus more on its denim and athleisure wear as the company acquired Beyond Yoga in 2021. Stocks are sliding at the start of the trading day. This is CBS News.
The body produces 1 to 2% less collagen per year starting in your 30s. Slow the process with Native Path single ingredient protein. Visit getnativepath.com/CBS for 45% off plus free shipping.
Hi, it's CBS health and wellness expert Cooper Lawrence. You might be wondering, when's the right time to start adding collagen to my diet? How about today? Collagen production starts to dwindle in your 20s. By the time you've hit your 50s, decreased collagen contributes to wrinkles, sagging skin, and joint discomfort. Native Path Collagen can help. It's packed with only type 1 and type 3 collagen fibers, the ones your body needs most for healthy joints, skin, bones, hair, nails, and gut. Plus, it's third-party tested for purity with no fillers, no additives, and no artificial junk. 2 scoops a day of Native Path delivers 18 grams of protein. Mix it into coffee, tea, or any drink. It's completely flavorless and easy to use. Native Path changed my gut health completely. Right now, get a special bundle deal at a fraction of the retail price plus free shipping. Available at getnativepath.com/CBS. With over 4 million jars sold, thousands of 5-star reviews, and a 365-day money-back guarantee, this is your moment to take control of aging before symptoms get worse. Go to nativepath.com/CBS now. Supplies are limited and demand is surging.
.com. A new Trump administration move could be the start of a domino effect for those getting government food assistance.
For the first time, the federal government has approved a waiver for a state to ban purchases of soda and energy drinks through the food stamp program, now known as SNAP. The waiver affects Nebraska, which plans to start that next year, affecting more than 150,000 recipients. There have been similar moves in other states. Wisconsin Republican Chris Kapenga.
It seems like kind of a common sense thing to say. If it's going to be taxpayer-funded money, let's make sure that it's healthy food.
Steve Kathan, CBS News.
Economists often view a surge in frozen pizza sales as an informal recession indicator. Sales of the cheap meal have jumped nearly $7 billion in 2024, and now as fears of rising tariffs and a recession increase, analysts from Greenwich Capital Group predict frozen pizza sales will grow by 6.6% over the next few years. Stacey Lynn, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well. We're on that smart TV thing. You go to Bloomberg Originals, and that's where you find us. Think Roku and Samsung TV and all that kind of cool stuff here. Coming up, we're going to check in with Tyler Kendall, Bloomberg Television's Washington correspondent. Get the latest on some of this tax policy discussion going on in Washington, D.C. We're hearing about a $40,000 SALT cap. Matt Miller is not happy with that. He wants it to be unlimited. Karen Manna, investment director and portfolio manager at Federated Hermes, get her thoughts on these markets. Mandeep Singh, Bloomberg Intelligence, he's our senior tech analyst. We want to talk some tech. Google had some meetings yesterday with their big get-together. We'll get the latest on there. And Jen Bartashis, Target, reporting earnings. She covers all the retailers for Bloomberg Intelligence. She'll chime in with what's happening with our good friends at Target. But let's kick this thing off with John Tucker and a Bloomberg Business Flash. John.
All right, guys, this Bloomberg Business Flash being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/round-the-clock. The major stock averages lower as bond yields push higher. The 30-year back above 5%. Right now, the 30-year, the long bond is at, 5.0091%. How's that? Up 4 basis points. The Dow Jones Industrial Average, 260 points lower. The S&P 500 down 23 at 59.16. And the Nasdaq Composite Index right now, 47 points lower. Oil prices climbing on a report that Israel could be gearing up for a possible strike on Iran. And energy, kind of counterintuitive, the worst performing industry group in the S&P 500. Need an Al-splain for that. Why is energy the worst performing if oil prices are up?
Okay, so my take here is that you got Phillips 66 is down 7% in the S&P, and that's dragging down the whole sector, even though the whole sector in general is trading a little heavy. It's a proxy vote fight with Elliott. They got a fight on board members. It's it's been really rough for the company. It looked like Phillips 66 was going to win. Now it looks like Elliott's going to win, hence the stock slide.
Okay. Lori Calvasina at RBC Capital Markets, meantime, she is sounding a note of caution for investors.
We know that these periods of turmoil end up being buying opportunities. We don't know exactly, sort of how quickly you get back to past highs and when you exit the period of chop. And I am increasingly coming around to the view that we're in an extended period of chop, that this is not off to the races.
And Canada Goose here is pushing higher. The maker of those winter coats, I Can't Afford, reported fiscal fourth quarter revenue and adjusted earnings per share that beat analyst estimates. They sell a vest for $750.
Yeah, it's crazy.
Like, what?
I mean, I'm sure the vest does a dance for you and does your taxes and cleans your house, but still.
Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and it's your Bloomberg Business Flash. Alex and Paul.
Thank you so much. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. Let's take a look at some of the stocks on the move today. We're joined now by Bloomberg's Denitsa Sekova. All right, looking at United Health, lots of layers to the sell-off today.
So many layers. That story. It's been a very volatile week, month to the stock. To date, it fell as much as 6.7% in trading. In earlier trading, it was even more. The latest move lower comes after The Guardian reported that the health insured secretly paid nursing homes to reduce hospital transfers. Nursing home residents who needed immediate hospital care under the program failed to receive it after intervention from United Health staffers. There are a lot of layers to this. There was recently, last week, the company had like a 18%, 20% drop after report that it was under investigation for possible Medicare fraud. The stock is down about 40% year to date. We have a great story on the terminal about how very few, actually just one of the analysts saw this coming. There was only one sale rating before the sell-off started. Actually, United Health was the highest rated S&P 500 company. It had a ratio of 97% buys. Now we had a downgrade from HBC. Obviously, things are changing fast, but it's just fascinating how few people were expecting this big drop in the stock.
Doesn't reflect well on my whole research business.
Yeah. No, it's tough. But hey, one got it right.
One got it right.
So there's something there. Also looking at, speaking of $700 vest, Canada Goose.
Yes, a great day for $700 vest. Canada Goose rose 21%. It really keeps going up. We saw the outwear maker reporting first fiscal fourth quarter revenue and adjusted earnings per share that beat what the street was estimating. The company said it would not provide an outlook for fiscal year 2026. And this, of course, come with the macro uncertainty, the dynamic consumer patterns. So this is yet another company where we see that the outlook going forward is very hard. Where we're seeing a very bright spot is the strong direct-to-consumer sales in Asia. This is excluding China, so perhaps that's one reason investors are so optimistic today. The stock is actually up year-to-date, 7%, in a year where we've been so worried about the consumer, and clearly this is targeting the very high-end consumer. Canada Goose says that consumers are responding well to an expanded lineup of products, maybe the vests. In an earning calls, executives said apparel has been one of its biggest segments of growth. So an interesting place to watch and really a sentiment indicator, I would say.
All right, one more. Lowe's, what's happening there?
It was interesting. The stock was up a little bit in earlier trading. Now some of those gains are erased. It's similar to the Home Depot story we saw yesterday. The company beat expectations during the last quarter. Shoppers continue to buy those home supplies. One interesting trend we're seeing is that maybe they're stepping back on those big renovation projects. They're doing smaller ones. So clearly the consumer is doing okay. But this is a space where everyone is watching, everyone is very worried, and especially that space is very vulnerable to tariffs because many of those products are sourced overseas. So everyone is looking at that space to see cracks as we're getting more news about how this affects supply chains and the consumers. The company is down 6.5% year to date. This is obviously a company it's really relevant to discretionary saving, discretionary spending, and we're all looking for cracks there too. So interesting intersection.
All right. Thank you so much, Denitsa Sakova, joining us from Bloomberg News. For more conversations just like this, subscribe to our Stock Movers Report. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere that you listen. The main action, though, taking place in D.C. The latest is that Speaker Mike Johnson says there has been agreement reached on the $40,000 SALT cap increase. Joining us now is Tyler Kendall, Bloomberg Television Washington correspondent, and she joins us now from the White House lawn. Is this a done deal?
Yeah, hey, Alex. At this point, it really isn't. And there's a few different things that need to be worked out. Our understanding that right now the agreement on the table would be lifting that SALT cap, as you said, from the $10,000 cap to $40,000. And then people familiar also tell us here at Bloomberg News that that cap would then phase out for individuals that make an income above $500,000 per year. It also appears that the marriage penalty is not included, has not been agreed to as part of this, something that those lawmakers from high tax states really did ultimately want to see. So we'll have to see if it really is enough to get all of these SALT Republicans on board, because keep in mind, yesterday President Trump went to Capitol Hill and he really downplayed the idea that he would be in favor of lifting the SALT cap higher than what was a $30,000 cap proposal that was on the table. A senior administration official tells us that the message in the room was that these lawmakers could address this down the road, but that they want to see the reconciliation package get through the House as quickly as possible as it is. So we're going to have to see how this ultimately develops, because another thing that is throwing a wrinkle in this, of course, is that we are already starting to hear from fiscal hawks on the Hill that they're not happy about this proposed agreement.
Tyler, what's the timetable here? I've seen, remember, a Memorial Day weekend kind of being thrown out there as a deadline. How do you think about that?
Yeah, so House Speaker Mike Johnson still says that this can get passed by Monday, Memorial Day. That is, of course, important to the broader timetable for this White House, which is that the administration wants to see the entire reconciliation package wrapped up by July 4th. You have to keep in mind that once this goes over from the House to the Senate, they're going to make a bunch of changes, and we're going to be having this conversation again as this legislation really starts to shift. At the moment, the bill is currently in the Rules Committee. It convened at 1 a.m. Eastern. If you were as lucky as I was to be able to tune in early this morning, you will know that it has been slow rolling so far. Democrats have introduced a whole slew of amendments that is really starting to make this process go on even longer as they try to hold Republicans' feet to the fire on a few different issues as part of this. And it really does seem that these negotiations are continuing, and that potentially that could delay this timeline for House Speaker Mike Johnson.
Tyler, it does seem also that the Medicaid work requirements have been moved forward quite a bit. Now, that also is a sticking point.
Right, definitely. This is something that members of the House Freedom Caucus have wanted to see moved up. The original proposal of the bill had them going into place by 2029. It appears the sweet spot might be 2027. We're also hearing reports that it could be around December of 2026. I did speak with Chip Roy on the Hill this week, one of perhaps the loudest members of the House Freedom Caucus, who told me that he really wants to see those work requirements go into effect immediately. That has raised some really politically fraught issues for the Republican Party, including President Trump, who yesterday on the Hill said that there will not be cuts to Medicaid beyond waste, fraud, and abuse. But some recent analysis out, including one that Bloomberg News cites, does show that potentially 7.7 million people could have their benefits at risk if these changes do go into effect. Of course, that issue here is that these work requirements could, of course, add some complications to people who have been applying and make that process a little bit more complex and opaque as they try to get their benefits.
Very good. Tyler, thank you so much for joining us. Tyler Kendall, Bloomberg Television Washington correspondent, joins remotely from Capitol Hill in Washington, D.C., where apparently it's raining. You can hear that in the background.
It's coming our way.
I thought it was applause.
What's that?
I thought it was applause.
Well, we would all applaud Tyler's reporting. That's
Exactly.
a definite. And also, it's rain.
And that's like a 24-hour gig, because when this stuff's
Oh, my gosh.
You know, when they're doing all this, they go around the clock and they're doing crazy hours. And you can't, if you're reporting on this stuff, you got to be there all the time.
I know.
It's tough going. So she does a great job for us there. So Chevron, I don't know. I mean, I'm looking at oil. Can you, in 30 seconds, tell me what upstream and downstream and midstream are?
Yeah, I can. Upstream is getting stuff out of the ground.
Okay.
Midstream is moving it.
Okay.
Downstream is making it into stuff.
Ah, okay. All right.
How'd I do?
Yeah, I mean, for decades, my entire career, I never knew upstream, midstream. I hear all these energy people talk about that. I'm like, What stream are you talking
So-
about?
It's getting expensive at the Wawa.
Upstream,
Yeah.
upstream, oil rig.
Okay.
Midstream, pipe.
Pipeline.
And then downstream, refiner.
Okay.
If we need to put it into more official terms.
Yeah, that's what
I
we need
love
to
these
go.
Al Explain questions, guys. Keep them coming.
You're on a roll.
I like it. All right, coming up, we're going to talk to Karen Mana, is Chief Investment Director and Portfolio Manager at Federated Hermes, for her outlook on these markets. The sell-off definitely happening here. We'll see if it can continue. And Mandy Singh will be joining us on what's happening in tech.
Bloomberg Radio brings you influential voices on the stories that matter. Tesla CEO Elon Musk.
Yes, we've lost some sales perhaps on the left, but we've gained them on the right.
Citadel CEO Ken Griffin.
It takes time to thoughtfully deregulate our economy.
JP Morgan CEO Jamie Dimon.
I think it's a mistake to think we can go through all the things we're going through and the volatility itself will come down.
The names that matter on the news you need. Listen on Bloomberg Radio or anytime on the Bloomberg Talks podcast.
How is Africa riding the crypto wave? Why are record coffee prices a double-edged sword? And what do China's economic woes mean for African debt? I'm Jennifer Zabasaja. Join me for Next Africa, a podcast from Bloomberg that offers a weekly dive into one business or economic story from across the continent. Listen to Next Africa on Apple CarPlay or Android Auto with the Bloomberg Business app or wherever you get your podcasts.
I always had to be so good, no one could ignore me. Carve my path with data and drive. But some people only see who I am on paper. The paper ceiling, the limitations from degree screens to stereotypes that are holding back over 70 million stars. Workers skilled through alternative routes rather than a bachelor's degree. It's time for skills to speak for themselves. Find resources for breaking through barriers at tearthepaperceiling.org. Brought to you by Opportunity at Work and the Ad Council.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Daybreak U.S. edition podcast, we discussed reports Israel may be preparing an attack on Iran's nuclear sites with Bloomberg's Rosalind Matheson.
There's been these reports periodically for quite some months now that Israel is looking more in depth at the possibility of making a strike on Iran's nuclear facilities. We saw this with some of the tit-for-tat strikes that happened between the two countries last year, and whether this would be one of the options that came onto the table. So in essence, in itself, the fact that Israel is looking at this is nothing new. And you can see the oil didn't move massively on it as a result. So maybe the markets doesn't think that something is imminent. The question is, though, is anything shifting in the Israeli thinking on this as part of these reports? Is this pointing to them perhaps hardening their position towards something? And if so, why would that be happening? Is it because that the Israeli administration of Benjamin Netanyahu is frustrated with the situation in Gaza? You know, they are talking about a much bigger scale military operation there against Hamas. They feel that Iran has been weakened and their proxies in recent times. They're worried about the pathway towards nuclear enrichment and see perhaps a window closing for them to take action against these nuclear sites. So it's a bit hard to know if there's been a shift in the calculus for Israel and whether this is becoming more of a prospect. But to say it has been something we know that they've discussed on and off for quite some time. What we need to understand is whether there's anything that has changed that might make this more realistic.
Hear the full conversation on the latest edition of the Bloomberg Daybreak U.S. edition podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. 10 of the 11 major industry groups in the S&P 500, they are lower. The one group that's actually in the green, that belongs to communication services, and that's home to Google parent Alphabet. Those shares right now 3% higher. Target shares right now, they are lower after cutting the sales forecast. The CEO attributed the results to weakness in discretionary spending, declining confidence on the part of consumers, and uncertainty over tariffs. Target shares down 5.1%. And then you had Lowe's, those shares right now down 1.3%. Inline first quarter results are better than some analysts actually had feared. They reaffirmed the annual comparable sales guidance. VF Corporation shares falling. This is the owner of brands like Timberland and Vans, forecasting a bigger than expected loss. How old are your wheels? You know? Your car?
Oh, I do know this.
Yeah.
Not that old. We had to get them replaced. Couple
Not
years?
the wheels, I mean the cars.
Car itself.
Oh, the car itself.
That's what we cool kids call
it's
cars.
6 years.
6 years. According to a new analysis from S&P Global Mobility, the average age of a U.S. vehicle is now 12.8 years.
That shocks me every time I hear that number.
Yeah. That's an increase of 2 months for the second consecutive year. Also, passenger cars continue a steady decline. The consumer preference is shifting more to light trucks.
That's
and
why you
SUVs.
see all these garages and all these auto repair places. Every town in USA's got like a gajillion of them.
Yeah,
Because
I mean,
the
they
average
still
age
can,
is- yeah.
you know, before everything turns electric and you won't be able to repair them. S&P 500, 23 points lower. The Dow down 301. The Nasdaq right now, 36 points lower. And the 30-year yield up 3 basis points, just above 5%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Alex and Paul.
So funny enough that you say that is that we sold my parents' car to like a kid in the neighborhood up in Massachusetts, and now that kid is selling it to another kid. So that car is literally 20 years old.
Wow.
And it's still apparently kicking and being sold. So
Exactly.
Nice.
take that for what it is. Anyway,
I do a 3-year lease because I'm like, I don't want any hassle. So, by the time stuff starts happening, I'm like,
It's fair because then you get a new one.
Yeah.
Absolutely.
Yep. That's
I want
fine.
the ones that have the side mirrors with the little flashing lights for your
we got
blind
that.
spot.
Yeah, we've got that
That's
in the new Beamer.
cool.
Yeah.
That's pretty much standard of course.
I don't have one in my Subaru, man. That
Really?
2019
And
Subaru
I
Forester.
tell you, it works and it helps a
No,
lot.
it really helps, yeah.
But my kids, they rely upon the cameras. They don't even look over the shoulder and do that kind of stuff that we learned. So that's
I'll still look over the shoulder, but I don't have to like twist my whole body and hurt my neck.
Okay.
Oh, this is a really old conversation we're having. Okay. Alex Steele here, Paul Sweeney, John Tucker. This is Bloomberg Intelligence Radio. Karen Manna is investment director and portfolio manager at Federated Hermes, and she joins us now. Take us out of the blind spot conversation. So when I'm looking at the 30-year yield, 5%, what is the correct term premium for the bond market right now?
Good morning, Alex. Good morning, Paul. Thanks for having me on again. Isn't that really the question of this era, the return of term premium, and what level should we lend at to the U.S. government, particularly in 10s and 30s? I think the answer is far higher and steeper than we had grown accustomed to in the decade after the great financial crisis. So setting that level is what the market is attuned to this week as we swing to the ring of not tariff policy, but move on to extension of current tax policy and how do we get there and get agreement on that. So seems some resistance to directly answer your question around this 5-ish mark, but do the headlines steer us north of there? It's possible.
So, is it fair to look at a 2-year at 4%, a 30-year at 5%, nice round numbers, 100 basis points of premium there? Give us just some historic context. Is that a lot? Not a lot?
It's getting steeper, Paul. I typically would look at Fed funds to 10 in my research.
Okay.
In evaluating that, and you would usually see that on average over the very long period of closer to 150 basis points. We've been teetering around that level and pulling back, but 150 basis points is about fair there, Fed funds to the 10-year. So a little bit of room to go, perhaps, usually that metric, but that's something that we've been talking an awful lot about here at our shop. We do invest, and we have a separate allocation or positioning around that yield curve. And we have re-entered a steepener and have been slowly wading into that trade in a diversified way, looking at 2s and 10s and 5s and 30s to try to capture that movement in momentum in the market. Interestingly enough, that steepening had faded around late January and into February, but it seems to be back here with a renewed spirit and perhaps some energy around it. So what we ultimately could see happen is, as the economy slows, and if the data cooperates, again, it's that tension between the hard data published on jobs reports and inflation and all of those sentiment surveys and indicators. They're moving in different directions. One is staying pretty firm or reasonable, while the other shows continued angst. But what we could see ultimately happen is the 2-year goes down, but the 10 and the 30-year don't cooperate, and they continue to either hold near current levels or actually push up slightly higher.
What should the relationship be between your yield thesis and the equity market?
Well, that gets tricky too, and not to always talk my fixed income book, but it's who I am. But I think you do start to struggle with financing growth equities as the 10-year eclipses 475, approaches 5, and if there's any sort of attitude or feel that the 10-year could stay elevated above that 5% mark, I think you could see equities roll over for that financing cost reason. And then folks take a different look at fixed income, more apportioned to the income. Because when your yield exceeds your duration, you do have some protection from volatility around interest rates. So it's bringing that conversation in fixed income back to the income component, but also recognizing that the 10-year is largely the broad strokes base or funding costs for many elements of not just private finance or the public markets that we watch, but also public markets, aka munis.
Credit risk.
Munis.
I know.
There you go.
Munis.
Let's talk about the muni market, because we do love the muni markets. Even though it's not Friday, we'll talk munis. What's the exposure you want to have in the municipal bond market?
Well, of course, that's up to the individual, their financial advisor, their portfolio needs. But if you're need that tax advantaged investing, I would be using it to the full extent that's reasonable within your portfolio construct. Munis here are priced attractively. The credit quality is attractive. It's sound. Nothing is without its risk. And there are definitely corners of the muni market that are more attractive than others. Active managers have peeled back those exposures. They're always assessing credit risk. They're always looking at valuation within the construct of risk and exposure and managing those and trimming and adding as appropriate. But we're very bullish on the muni market right now. Particularly, you had a trade-off because of headline risk surrounding perhaps feeding the budget by eliminating the tax exemption. That has faded somewhat, but created, I think, a real buying opportunity.
All right, Karen, thanks a lot. We really appreciate it. Karen Manna, investment director and portfolio manager at Federated Hermes. All right, we are seeing somewhat of a comeback within the market. It looked like it was going to evolve into a pretty ugly trading day when we were looking at futures, and now you're seeing the Nasdaq just down by about 0.2%, the S&P off by about 0.5%. Joining us now is Mandeep Singh, Bloomberg Intelligence senior technology analyst. Mandeep, there's a lot on your plate right now. We get NVIDIA earnings next week as well. I'm just curious as to what is front and center in your mind in the tech world.
I mean, this week we had two big developer conferences from Microsoft and Google, and both of them showcase plenty of Gen AI features to tell. Basically, they are going all in when it comes to rolling out Gen AI across their products. And Google, literally they had at least 20 big product announcements yesterday packed into a 2-hour keynote. And to my mind, there is so much to be excited about. At the same time, the thing that really stuck out was the $249 monthly subscription that they're rolling out for their AI products. They've pretty much created a consumer bundle with YouTube, with Gemini, with all of their latest products. And they're asking users to pay $249 because that's the only way for them to run this profitably. They can't make it a $20 bundle as, they had in the past because it's just not profitable. It costs so much more for these companies because of their AI infrastructure. And the only way they can, be at parity or generate some profit is by pricing it at $249 per month. I don't know what kind of adoption they'll get.
So what is I interact with Google AI through the Gemini search result. Is that how most people are interacting with it? And what's the economics of that?
I mean, they've changed the search page completely. So the Google search will have an AI mode. They talked about how AI overviews is driving 10% query growth. Visual search is growing. So all the products are changing, and it's incorporating Gen AI features, but they are creating the most valuable bundle out there. I mean, everyone uses YouTube. So they have packaged YouTube Premium. It's like the Microsoft approach. Microsoft has the best enterprise bundle, with the Office and all the things they give you with the Copilot and all the features. What Google is saying is, we'll make it so attractive for a consumer to kind of use our bundle, because think of it, Gmail, Maps, all these are apps they give you for free. Now they are layering on Gen AI features within these apps and saying, okay, if you want to use the extensive features related to Gen AI, then you got to pay up, because that's the only way, we can kind of run our AI infrastructure profitably.
I mean, $249 though is really steep.
Yeah.
I mean, for an enterprise level, if you're a business, right, that's a different kind of subscription ability and different model. But me paying $250 to get better Gen AI features in my Google Maps and my Gmail when it's been working fine, that feels like a long road for me to get there.
So, look,
ideally, I'm not their ideal customer.
Yeah, but if they're giving you an assistant, so the whole idea is we'll give you a personalized assistant that works very well across these family of apps. Now, everyone is a Gmail user, everyone is a YouTube user. What if you had a very powerful kind of assistant that's personalized for your taste, that works on these apps? And that's why, they'll give you the storage as well. I mean, a lot of these models require very big storage. They'll give you the storage in that $249 bundle, but literally they'll make it so attractive that, across the 8 apps that they have, they will have native Gen AI features. And it's hard to compete with for an open AI, which is more of a prompt-based. Again, it's a great search result, but you can't match the distribution that Google has.
My man's got passion for this technology stuff. Mandeep Singh, he's all in, folks. Senior tech industry analyst, Bloomberg Intelligence. We send him anywhere around the world, and he can talk to any audience about tech. A lot more coming up. This is Bloomberg.
CBS News Brief. House lawmakers debated the president's budget bill all night long, and they're still at it. Democratic Congressman Jim McGovern.
What planet does this make sense? That you rob from the people with the least and give to the people with the most. That is the heart and soul of this legislation.
The bill has to make it through the House Rules Committee before a vote can take place. When President Trump welcomes the president of South Africa to the White House today, Elon Musk will be there. CBS's Natalie Brand.
Musk has been one of the people who has amplified those claims, debunked claims about genocide and also land being confiscated from white Afrikaners.
Because sales are down at Target, the company's now cut its full-year outlook. Bob Dahl is with Crossmark Global Investments.
I think the takeaway is the consumer is slowly slowing.
CBS News Brief. I'm Stacey Lynn.
The stories that moved markets today.
Concerns about iPhone sales in China.
And the insight that will shape trading tomorrow.
Traders are waiting to hear from Fed Chair Jay Powell.
The Bloomberg Business Week Daily Podcast with Carol Massar and Tim Stenbeck.
Technology and consumer staples among the biggest winners.
The rally taking a bit of a breather.
Bloomberg Business Week Daily. Listen live weekday afternoons at 2 Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app and anywhere you get your podcasts. Bloomberg Radio. Context changes everything.
This is Caroline Hyde.
And I'm Ed Ludlow. Join us for Bloomberg Technology, a daily podcast focusing exclusively on technology, innovation, and the future of business.
We bring you the latest headlines from Silicon Valley and conversations with tech's biggest decision makers.
You have to have a pro-innovation mindset.
We were partnered with OpenAI.
We've all experienced this incredible revolution.
Bloomberg Technology.
Listen on Apple CarPlay and Android Auto with the Bloomberg Business app and anywhere you get your podcasts.
Bloomberg Podcasts. Context changes everything.
This is a Bloomberg Monday Minute. One of the country's biggest retailers wouldn't be blamed for feeling like it has a target on its back. Today, Target is cutting its sales forecast due to a tall stack of challenges, including low consumer confidence pulling spending lower, tariffs pushing costs higher, and shopper backlash to the chain's rollback of DEI efforts. Target now thinks comparable sales will fall slightly this year. They fell nearly 4% last quarter. Target shares are down 6%. Clothing giant VF Corp is now warning of a bigger-than-expected loss as it rushes products to the U.S. to beat the 90-day window of tariff clauses from the Trump administration. The owner of brands such as Timberland and North Face now sees an operating loss nearly double the loss analysts were expecting, shares tumbling 11%. Rising worry over the U.S. budget deficit and its potential economic impact are getting the blame from analysts for what's happening on Wall Street. Dow is losing nearly 1%, Nasdaq down 0.25%, S&P down 0.5%. Andrew O'Day, Bloomberg Radio.
Bloomberg Radio, on demand and in your podcast feed.
On the latest Masters in Business podcast, my conversation with Bridgeway's John Montgomery on why the firm gives away half of its profits to charities.
Sometimes I get into conversation with a prospective client and you might hear something like, it sounds like you're good guys, you're philanthropically geared and you get awards as a great place to work. But all of that, put that aside, I just want to talk about the investments. And what I would say is culture is everything. It's the housing within which we do what we do. So it's very important. And you can measure that in some statistical ways, like turnover. I would say there are proxies for commitment at Bridgeway, and then returns of the strategies. Why would you think that's independent of the culture that you've built up?
You also have an internal rule. The highest paid employee earns no more than 7 times the lowest paid employee. Is that right?
So statistically, that's probably true. We don't measure it that way. There's a new statistic that came out from the SEC required of public companies, and those are some of the metrics that we look at currently. Some people think is like, so you underpay. That is absolutely not the intent. It's just not to pay outrageous salaries on the top. And
Makes a lot of sense.
If you want to make the most money that you can make in our industry, you probably wouldn't come to Bridgeway. If you want to make an absolute livable wage, and if you save and invest, you should do very well over a full career. Then we're a purpose-driven firm, and we ascribe to Daniel Pink's what really motivates people is not money, but it's purpose.
Hear the full conversation on the latest edition of the Masters in Business podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Concerns about the ballooning federal budget and deficit and debt weighing on stocks and treasuries right now. We have the S&P 500 27 points lower. That's down about 0.5%, 59.12 on the index. The Dow Jones Industrial Average down 369 points. Nasdaq 100 30 points lower. That's down about 0.1%. And 30-year yield back above 5%, 5.01%. So that's 4 basis points higher right now. UBS economist Abigail Watts says the Republican tax cut bill is the immediate focus for investors.
I think in terms of the timing of the bill, the kind of tax cuts versus kind of tax hikes and when spending cuts might come into play, I think that's going to be the really key thing, rather than just the focus on the overall deficit widening that could come from the bill.
United Health Group shares tumbling. The Guardian reported the health insurer, another problem, secretly paid nursing homes to reduce hospital transfers for ailing residents. Those shares right now down close to 5%. Home loan rates closing in on 7% again as those yields rise. The average rate on a 30-year, 6.92%. So let's do the best performing stock. Keysight Technologies up 6.3%, best performing the S&P 500. This is the electronic measurement services company. Second quarter results beat expectations. No obvious news here, but the worst performing stock in the S&P 500 belongs to Fair Isaac Corporation. Put on your thinking caps. What do they do? P.A.R. Isaac Corporation of Bozeman, Montana.
Tax people.
These are the people. P.A.R. Isaac Corporation. FICO scores.
I was sort of not close, but yeah.
Down 12.8. I don't know what the news is, but the stock is taking a hit today. Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Allison Paul.
All right. Thanks so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. Also, go ahead and check us out on YouTube. And you can also check us out on Originals on your smart TV as well as Roku. So look at that as well. Jen Bartashis joins us now, senior retail staples and packaged food analyst for Bloomberg Intelligence, as we delve into Target here. So Target cutting its outlook on a shopper pullback, on a tariff hit, on a backlash, on rolling back DEI initiatives, you name it. Why is the stock getting punished so much? Because in some respects, none of this was a surprise.
Yeah. Hi, Alex. You're right. None of this really was a surprise. It's really about the degree to which it was a surprise. So sales came in softer than expected. Profit was a little softer than expected. And it's just, I think people are waiting for Target to say how they're going to fix it. And, they came out today talking about a new office, to accelerate their plans. But I think people are just waiting for something tangible that they can really hold the company accountable for to reignite growth in what they're trying to do.
What does Target need to do specifically? Because it seems like, I don't know, every time I walk into a Target, it's lots of people doing stuff. The shelves are in good shape. What do they need to do?
Well, a lot of it is continuing what they've started, which is improving their merchandise mix. Target does best when their assortment is new, it's fresh, it's relevant to people, and they've made good strides in that area. But those types of changes take time for consumers to see and to start to embrace. And it's just a hard environment where people are still being a little bit conservative for those changes to really create some momentum in the business.
So where are they with the pricing stuff in terms of their inventory, in terms of tariffs, in terms of where they source their material?
Yeah, so from a pricing perspective, when people look at value, price is one of the first things they look at. They're fairly price competitive, and we've seen an uptick in the number of promotions that they're doing. So, buy $40 of these kinds of essentials and get a $5 gift card. They're doing a lot more of that kind of promotion to pull people in. But one of the issues is that they talked today about inventory and having to, adjust and right-size their inventory. And that's a little bit concerning because that's been a topic that it's not new for Target. It's come up a couple of times in the past few years. And so the fact that they are expecting, some inventory adjustments and markdowns to weigh on margins and profit, for the next quarter is a little bit concerning that they still haven't quite figured out how they're going to navigate that.
Jen, I know Walmart said on there recently that they would pass along probably some of their tariff-related cost increases to consumers, and then President Trump came out pretty publicly against that. What is Target saying about their ability to take whatever price increases, cost increases may come about through tariffs, either in their margin or passing it along to consumers?
Yeah, it's definitely a good topic, Paul. And this morning on the call, what they said was that price increases would be the last resort, but they didn't count them out. Instead, they focused on the tactics that they can use to try to mitigate some of the pressure from tariffs. But they're the same levers that every company is pulling. It's using your scale. It's working with your suppliers. It's trying to negotiate better, better sourcing and better prices on the purchasing side. So, Target is certainly able to offset some of the cost of tariffs, but it would be surprising if they can offset all of it. And ultimately, there's most likely going to have to be some selective price increases that get pushed through.
Oh, what's their inventory like in terms of that part and how that filters into their pricing?
Yeah, so inventory has actually been getting a little bit better in terms of on-shelf availability and tracking through the supply chain. It's just, I think because they skew so much more to discretionary, if there's, like, for example, in first quarter, we had some very unseasonably cold weather. That impacts apparel sales. That impacts a lot of those things. So, that increases markdowns. Hopefully, that's a transitory type of thing. But they are talking about getting their inventory right-sized as they head into back to school and the holiday season.
Hey, Jen, this stock is down 30% just this year. It trades at 11 times earnings. It seems cheap to me. Is it cheap on a historical basis, or how are people thinking about valuation?
Yeah, it's definitely, at a discount from a historical, valuation perspective. But I think part of the reason that it is where it is that for a long time, what has differentiated Target was their private label selection, their own brands, things that the quality of those brands where people could get value and style at a really compelling price. In the last couple of years, a lot of their competitors, whether you're talking about Walmart or Kohl's or companies like that, have invested in their private label. They've improved the quality. They've become a little bit more fashion forward, and that erodes the differentiation that Target has always enjoyed, and part of what has catapulted their success in recent years. So until Target gets that newness and that assortment readjusted again to be a leader and a differentiator, you may see that kind of valuation discount persist.
And here's something I don't think I've ever seen before. On a trailing 12-month basis, Walmart's up 49% and Target's down 39%. I mean, that just goes to your point, right, Jen?
It really does. I mean, Walmart has done a very good job of bringing in a bigger universe of consumers, dealing to them in the way that they want with price, adding convenience, and improving the quality and the breadth of their offering. And that just shows in the results that Walmart has been posting.
Wow, that's amazing. I mean, you look at this thing, 11 times earnings, I'm getting almost a 5% dividend yield. It's almost like, boy, if you had some long-term money, that might not be a bad place to hide out. Jen Bartashis, thank you so much for joining us. Jen Bartashis, Senior Retail Staples and Packaged Food Analyst. She sees it all on, when you go to the packaged foods folks, to buy actually the price you pay in the grocery store. Jen Bartashis is the person to go to. So you want to talk inflation. She's like our inflation analyst.
Oh, yeah. It also feels like Walmart wins in that they don't have fresh produce, so they don't lose on that, right?
Well, Walmart, I guess that's the other thing. They bring in traffic just with this.
Well, Target has groceries too.
Is it as big?
It's not as big.
Okay.
But they have fresh food also. But it's a weird selection. I mean, this is literally personal experience. But yeah, so it's a one-stop shop, sorta, but not really. I don't know. It's interesting. I wonder how many levers they really have in order to pull. All right, coming up, Brett Gibbs is Bloomberg Intelligence refining and renewable fuels analyst. Here we go. Yeah. Yep, sure. This is exactly on John Tucker's point. Phillips 66 facing off with Elliott Management. 2 votes on the board for Phillips 66, 2 votes for Elliott. We'll see where that actually leaves the company. Elliott was pushing for a breakup. This is Bloomberg.
Get the best in finance, investment, and economics with the Bloomberg Podcast channel on YouTube.
We are seeing stocks rise around the world.
We have a massive rally in the bond market.
Record revenue out of Apple.
We've got inflation moderating.
I'm Tom Keene, inviting you to watch and listen to the best analysis on business and investment. Visit the Bloomberg Podcast channel on YouTube to hear from the smartest names on Wall Street. Just head to YouTube and search Bloomberg Podcasts today.
This is a Bloomberg Monday Minute. One of the country's biggest retailers wouldn't be blamed for feeling like it has a target on its back. Today, Target is cutting its sales forecast due to a tall stack of challenges, including low consumer confidence pulling spending lower, tariffs pushing costs higher, and shopper backlash to the chain's rollback of DEI efforts. Target now thinks comparable sales will fall slightly this year. They fell nearly 4% last quarter. Target shares are down 6%. Clothing giant VF Corp is now warning of a bigger-than-expected loss as it rushes products to the U.S. to beat the 90-day window of tariff clauses from the Trump administration. The owner of brands such as Timberland and North Face now sees an operating loss nearly double the loss analysts were expecting, shares tumbling 11%. Rising worry over the U.S. budget deficit and its potential economic impact are getting the blame from analysts for what's happening on Wall Street. Dow is losing nearly 1%, Nasdaq down 0.25%, S&P down 0.5%. Andrew O'Day, Bloomberg Radio.
Economics.
A slower inflationary environment is what we're seeing here.
Finance.
How do you frame the Magnificent Seven?
Investment.
We're seeing a market move here and yields higher.
Bloomberg Surveillance. Tom Keene, Paul Sweeney, and the names that shape the world's markets.
My conversation with Christine Lagarde.
Listen live weekday mornings at 7 Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Watch us on YouTube. Go to the Bloomberg podcast page and click on the live feed or catch us on Bloomberg Originals.
Join us in Seattle, July 14th and 15th for Bloomberg Green, 2 days of powerful conversations and meaningful connections. We'll explore what's next in the climate economy, clean tech, policy, and greener living. Featured speakers include Jane Fonda, Brian Gellert, and Vinod Khosla. The title sponsor is Amazon. Official airlines are Alaska and Hawaiian Airlines. Learn more at BloombergLive.com/Green Seattle. That's BloombergLive.com/Green Seattle.
The data that matters for your investments.
Single stock volumes really surge.
And analysis on the companies making news on Wall Street.
Supermicro is catching our eyes.
Take a quick look at crypto stocks.
Listen to the Stock Movers Report from Bloomberg.
A big bounce in the market today. We're on a brutal 3-day stretch.
It's your short audio report on the day's winners and losers in the stock market.
The highest intraday jump since 2020.
Subscribe to the Stock Movers Report on Apple Podcasts, Spotify, or wherever you listen. You're listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, happy Wednesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. We love staying on the top stories all over the finance world. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. So in my world, something that's been very interesting is Phillips 66. It's been hit on the S&P. It's the worst performing stock within the energy sector, and the energy sector in general is getting hit hard today as well. Phillips 66 is a refiner, so they make products out of oil and stuff, and it faces its first ever proxy vote with Elliott Investment Management that was really pushing for a breakup of the company. Phillips 66 owns also pipes like midstream operations, and Elliott really wanted to spin out that midstream operation to unlock some value. Joining us now for more is Brett Gibbs, refining and renewables fuels analyst from Bloomberg Intelligence. He joins us from D.C. What are the results as of now?
First off, thanks for having me, Alex. Yeah, so the results that we've got this morning is that there's a split decision, like you mentioned earlier on the program, 2 for 2 between Elliott and Phillips 66, as well as some additional votes that were had during the shareholders meeting was on a declassification of the board. Essentially, Phillips 66 has a structure where board nominees go on a 3-year cycle. So, the board now is 12 members, so 4 each year. And the result from that was that Phillips 66 isn't going to declassify the board, which again makes Elliott's, push a little bit more difficult on a go-forward basis to elect more board members. But we think ultimately this is a more measured approach to Elliott's intention to, break up the company, push for a midstream and chemical sale. And we think ultimately Elliott's 2 elected board members will push a little bit more aggressively on a midstream evaluation where we see kind of the opportunity.
I mean, Phillips 66 is one of the great all-time American companies here. What do they really want them to do here?
Yeah, so Elliott had a successful campaign with one of Phillips's peers, Marathon Petroleum. And it really was a turnaround story. And if you're charting, Phillips 66 performance against their 2 largest peers, the most comparable of Valero and Marathon, they've underperformed, since 2019. And Elliott really is trying to target that underperformance, whether it's the fact that if you were to build up a valuation on the sum of the parts of Phillips 66's integrated story, which is rather different than some of its peers. There's a clear disconnect. And then specifically on refining alone, if you were to look at refining profitability of Phillips 66 relative to Marathon and Valero, they're trailing. So Elliott's intention was to try and find some of that valuation disconnect and then also push for, sharper refining targets to bridge that gap between Valero and Marathon.
Now, what Phillips 66 is going to say, and if you talk to the CEO, Mark Lashier, he's going to say, look, we know how this works. We're refiners. We benefit in the long run from owning lots of parts of this value chain. Elliot, you don't know anything about our business. What's true in that?
Yeah, it's certainly true. So there's components within the midstream, roughly about $500 million of EBITDA a year for a midstream business that's about $4 billion of EBITDA. So, a healthy chunk that's integrated there. And there's also some difficulties in just breaking that up that I think Phillips 66 knows, and the board has evaluated and kind of looked at for certain. The other component of that too, though, is when you were to stack all this up on the sum of the parts disconnect. Even if you were to take into account some of Phillips 66's materials about whether it's dyssynergies or implications of a spin, there's still valuation opportunities here that I think have some credence. And then more broadly, one of the components that is a challenge is just the capital allocation priorities of a midstream entity versus a refining entity. So midstream entities, right, can lever up to about 4 times. Right now, you're in an environment where you're trying to grow that business. Specifically, their wellhead to market or wellhead to water strategy that's natural gas liquid focused. And in order to do that, right, you want to kind of keep leverage high, continue to kind of invest in growth, whereas refining is a very, very low levered business. Investors want, sub 20% net debt to cap, and they want high exposure to crack spreads. They want when refining markets take off, about 100% of discretionary cash flow is, distributed. And those two are kind of at odds, which makes the structure for Phillips 66 a little bit complicated.
I'm looking at the board, and I see Doug Terreson is on the board of Chevron, former Morgan Stanley energy analyst, smart dude. I've met him a few times. Brett, thanks so much for joining us there. Brett Gibbs, refining and renewables analyst at Bloomberg Intelligence. He's based down there in Washington, D.C. Wait, I don't think we've spoken to Brett before, have we?
Not in my memory, but my memory is like a goldfish, so it's been hard to say.
I didn't hire him, but
I rely to you on that.
He seems to know what he's talking about. So.
Yeah.
All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Looking at the markets right here, the S&P 500, it's kind of paring back a little bit. Some of its losses are off 22 points here. It's about 0.4% of 1%. The Nasdaq actually turned positive. We're up 4 points. How about that, kids?
How about that?
So a little turnaround there. So 10-year Treasury yield, 4.52%.
Here's a fun one for you.
Go.
So the Knicks game that's coming up, Timothée Chalamet apparently is going to be there, and that is causing the tickets to soar. Apparently, seats for Game 1 could cost you as much as $62,000 near Celebrity Row.
Man. That's it?
Yeah, there you go.
I'll be walking through Penn Station.
Otherwise, it's $1,200. More coming up. John Tucker's going to buy us some tickets. This is Bloomberg Intelligence. Happy Wednesday.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, happy Wednesday, everybody. Alex Steele here, alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We have a great hour lined up for you. We're going to keep on all the company news and hit the pressing stories of the day. Drew Redding will be joining us from Bloomberg Intelligence on Lowe's earnings. Mike McGlone will be joining us on commodities, taking a look at oil as well as gold, continuing to kind of beat to its own drum. Marianne Bartels, one of the best from Sanctuary Wealth, will join us for her take on the markets. And Mary Ross Gilbert of Bloomberg Intelligence will join us on TJ Maxx and what we learned. Home goods. I have kept home goods in business. I just want to put that out there in the last month or so. Yes.
I'm into it now. I've been there buying stuff.
And it's like so much cheaper.
So much cheaper. I actually bought a TV console there.
Yes.
And it's just like,
John, you're at the stage of your life you should be getting rid of things.
He's replacing things from the 40s. It's very different. All right, well, let's kick it all off for you right now with John Tucker and his home good shopping.
Stocks drifting lower, on track for a second straight drop after breaking that 6-day winning streak. So you have the United Health Group among the biggest drags on the Dow right now, down 4.6%. You had that story in The Guardian that the health insurers secretly paid nursing homes. They were trying to reduce hospital transfers, according to the report anyway. Healthcare, as a result, of worst performing industry group in the S&P 500. As you mentioned, Nasdaq 100 has pushed higher, 17 points higher right now. That's up about 0.1%. And you can thank in part Google parent Alphabet. Those shares are right now up close to 5%. Stocks also feeling pressure overall from the higher treasury yields in the bond market. We're seeing those growing concerns about the U.S. deficit and debt. Seema Shah, Principal Global Investors, meantime, says stocks are vulnerable.
We're not anticipating recession, but we are expecting there to be an economic slowdown. So as some of that hard data begins to show signs of that weakness comes through, I think the market has some concerns that, again, investors need to be a little bit wary of.
Right now, the 30-year yield up close to 4 basis points, 5.007%. S&P 500 down 22. That's down 0.4%. The Dow Jones Industrial Average 367 points lower. And again, the Nasdaq 100, that is in the green right now, 19 points higher, up just about 0.1%. All right, so you did the tickets, but in fact, everybody does like a winner. And let's hope they continue to win. Sales of NICS products up 80% compared to last season's playoffs. This according to the NBA's e-commerce partner, Fanatics. You want to guess the best-selling jersey? It's not just the Knicks best-selling jersey, but for all, across all sports, Alex.
No fair, Paul.
Jalen Brunson.
Oh, yeah. So they've got more than 50 years without a championship, the Knicks.
Yep, I was 9 when they won the championship.
Really?
Yes.
So that would be
73.
Will Chamberlain.
It was 73. It was Willis Reed coming out of the.
Willis
Wasn't like Larry
Reed.
Bird
Walt
really
Frazier. Walt
good?
Frazier's my favorite player.
Oh no, that was the
Earl
Celtics.
Monroe, Dave DeBusschere, Bill
Earl
Bradley.
Pearl.
Yep.
No. This is why I shouldn't
Come
participate.
on, weigh in, Alex.
I did, and I thought that Larry Bird was for the Knicks. Which I know.
whatever.
That's why I should not participate in these conversations.
We check the markets
Celtics.
for you
Right?
all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex
It's
and
just
Paul.
so sad for me. Okay, thanks, JT. Save me, Paul.
All right. The old town of Plovdiv. If you're going to Bulgaria, that's where you go. I heard that from somebody who knows this stuff. I'm looking at Plovdiv in Bulgaria. It looks awesome. Denitsa Sakova, cross-asset reporter. She happens to be Bulgarian. I don't know how that happened. Denitsa, what are the stocks you're looking at here?
This is my regular segment for Bulgaria, but let's look at Target first. Target cut its sales forecast. It's having a really rough day as a continuation of pretty strong start of the year. It's coming among a sharp pullback in spending, and we're having a combination of tariffs, falling consumer confidence, and really all those forces we're worried about in the economy are hitting Target at the same time. The stock is actually down 30% year to date, and what we're seeing today, the biggest issue is that Wall Street analysts are worried that this not may be the last guidance cut, that there may be more coming. And it's interesting that obviously a lot of companies in that space have felt the pressure, but Target has been especially vulnerable because apparel, home goods, non-consumable items are really the majority of their sales. Like, for example, Walmart, they rely on groceries, and that, the company is doing much better year to date. But Target, really rough start of the year, and, tariffs, consumer, all those forces are weighing on sentiment there.
Yeah, definitely. I was a big Cat and Jack buyer for my kid. They have really good stuff. Cat and Jack, they make kids' clothes for Target.
Oh, okay.
But, then as she grows, that changes. So there you go. They lost me there. Okay, you're also taking a look at Palo Alto Networks.
Yeah, let's talk about cybersecurity. Obviously, that's been a big story earlier this year. We saw so many cyber attacks that has been a space a lot of analysts are watching. And it's having another tough day. Palo Alto Networks is down about 7%. Results fail to ease those growth fears. And we've had, obviously, a lot of issues with that space. The infrastructure software company reported third quarter results, and gave outlook that failed to ease all those worries. That said, we haven't seen any big downgrades. We've seen Barclays maintains overweight but lowers price tag, but there isn't like too much negativism among analysts. JP Morgan says, although some metrics were a bit lighter than expected, we continue to view Palo Alto as one of the best positioned vendors. So yeah, it wasn't that bad of an earnings report, but analysts are clearly worried and sentiment hasn't been so good. The stock is flat year to date, so maybe from here we'll see some upside, but it's definitely not bringing relief, this earnings report.
Take-Two, big follow-on equity offering for Take-Two. Now, this is what happens back in the day when I actually had a job on the street. Anytime a stock moved 10 or 15% in a short period of time, I had a little alert pop up for all my companies there. And I called the CFO and I said, let's hit the market. Let's go put out $1 billion worth of stock right here. Your stock's moving and the momentum's good. And 1 out of 100, maybe they say, okay. Well, here's Take-Two, I think, said okay.
It's interesting. When you were setting those alerts, I was actually playing Grand Theft Auto 5. That was many, many years ago. And I was expecting to get the new one. And it's taken years. So that's one reason the company has had a pretty volatile few months. And of course, today the company announced plans to sell 1 billion. Not today, sorry. Yesterday they announced plan to sell 1 billion of new stock to investors. And this is going to be used for repayments of debt, futures acquisition. But of course, that's a name everyone's watching. It's all connected with that game everyone has been expected for years, and that keeps getting delayed. That said, the company is having a strong start year to date when you zoom out of the volatility of the last few months. So it's an interesting name to watch. Yes, today definitely not a good reaction from what we heard yesterday.
Again, they intend to do a underwritten public offering, $1 billion worth of stock. It's a $42 billion market cap company, so it's not about a lot of dilution, but that's still a good move for the company.
How long did it take you to make those 100 phone calls?
Well, it depends on the company. The alert
enough.
would have to go off. And then I call the CFO, say, come on, I'll bid you right now on $1 billion worth of stock or $500 million worth of stock. Usually they said, no, thanks. Click. But every once in a while they said, okay.
Let's do it.
I'd say, give me 2 minutes. I'll get right back to you.
Amazing. All right, Denisa, thanks a lot. Denisa Sakova joining us from Bloomberg. For more conversations just like this, subscribe to our new Stock Movers reports. Listen to 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere where you listen. All right, let's get to Lowe's here. That stock now down about 0.4%. The company beating expectations, in theory, kind of bucking any kind of volatility we've seen over tariffs. Drew Redding is Bloomberg Intelligence housing analyst, joins us now. Drew, can you just do a little compare and contrast to Home Depot and Lowe's situation?
Yeah, so I think, big picture, both Lowe's and Home Depot are executing very well in a challenging environment. The main difference between the two, obviously, is their customer exposure. Lowe's has about 70% exposure to the DIY customer compared to about 50% for Home Depot. So that's really what's driven the relative performance of Home Depot. That being said, I think if you take a step back, Lowe's has really been making all the right investments over the last couple of years by expanding their presence in pro customers and improving their online platform. And that's what we saw in their results. If you look at those two segments, comp sales were up in the mid-single digit range compared to a slight drop overall. But what I also think that reveals is that the DIY customer remains pretty weak and actually decelerated a little bit from the fourth quarter.
Drew, we have our own DIY customer right here in studio, John Tucker, and I'm thinking of him walking the halls of, the aisles of Lowe's, picking up some power tools. That probably comes from Asia somewhere. Maybe he's picking up some plywood. That probably comes from Canada. How are these companies talking about the tariff exposure and maybe how they plan to manage through it?
Sure. So we got an update on the call. They source about 60% of their products from the U.S. and about 20% from China, which, to be honest, was a little bit more than we had previously thought. What you have to keep in mind, though, is that this includes their direct and indirect exposure. So both the products that they're directly importing as well as ones that their suppliers in the U.S. are importing. So every retailer is going to do it a little bit differently. Just like Home Depot, I think Lowe's is in a pretty good position to be able to manage this. They actually guide it for their operating margin to be unchanged compared to their prior guidance, which was certainly a positive. And they're going to do some of the same things you've heard from other retailers. They've got a lot of scale, so they're going to be able to push back on their suppliers. They also said that they don't plan to donate market share in this environment. So I think you'll see them take a portfolio approach to pricing, just like Home Depot. And basically what that means is that they'll look at the elasticities of their various products, and they'll take prices on certain products where they think they have a little bit wiggle room. So you won't necessarily see it in the products that they're importing, but it may be hidden in some other products.
I really appreciate Drew. Thanks a lot, Drew Redding, joining us from Bloomberg Intelligence. So I can't believe what just happened.
I know.
I'm sitting in the radio studio, and in walks in Mike McGlone. I didn't think he came up north anyway. Miami Mike McGlone.
Yeah,
so good to see you.
It's that season, as he kind of follows, like when the snowbirds go home, he feels a need to kind of come back a little bit. I think it's just a little bit of that genetics.
I see. Or they told him to come for a day.
Yes.
Yeah, or that
we
too.
We need you in New York.
Michael McGlone is Bloomberg Intelligence Senior Commodity Strategist. It's so great to see you in person. Bitcoin hitting another record. Is Bitcoin moving like gold as like a protection against what we're seeing in the bond market? Is that what we're seeing right now?
I think that's part of it. Mm-hmm. It's this year it's unique. It's actually following gold, because we know gold made a new high a few months ago, and Bitcoin's catching up today. And all the crypto people say, oh, Bitcoin's going to outperform. But I think the key risk for Bitcoin is I like to put them in the same category, because they basically are just the one's much more speculative and excessive, like Bitcoin, and the other one's a store of value. But it's that ratio, the ounces of gold per one Bitcoin, about 33 right now. That's the same as 2021. So this rock is outperforming this hot-performing crypto asset, which is I'm a bit concerned about. The key thing is, as I like to point out, Bitcoin will do fine, and it'll do fine versus gold as long as the stock market's going up. And then we proved in Q1 that if the stock market's going down, Bitcoin's one of the first things people sell.
So, all right, let's go to gold here, because I'm going to just front run Alex a little bit here.
Do it.
I mean, I don't like what I'm hearing out of Israel, out of Iran potentially. There could be some more stuff going on over there. I'm surprised oil's not higher.
Yes, well, here's the problem with oil. Last year's low was 65. It's looking up at that level. I mean, it's a bear market.
Yep.
And just the latest data from even, we have excess of supply, increasing inventories. The driving season is just getting started this weekend, yet gasoline demand somewhat declining. The whole picture for crude oil is bad. It needs some kind of supply shock to really get it to go higher.
We're not going to get a supply shock if the dudes in, the basins and they're fracking rock all over the place. The U.S. is putting out a lot of oil.
Exactly. Finally, Paul, you're heading towards the low price cure. We're hearing stories now of the declining potential production from the Permian, which is way, in Alex's space. The key thing is it's taking low prices. That's what it typically takes. And the big spike in prices we got to the peak in 2022 just brought on that excess supply. Now we're getting to that scale, but typically you have to get below the U.S. cost of production, which is between $50 and $55 a barrel, to really shut that off and curtail it. That's what we've done for the last 20 years. It's around $40 a barrel. So I stick with that call. And the key thing for crude oil right now is it's the macro, increasing demand and excess supply out of the U.S., decreasing demand from China, and it's the U.S. stock market has to stay buoyant. If we just roll over a little bit, that takes crude oil down to $40.
Which brings me to the question that John Tucker smartly asked. With WTI at 62, but then the energy stocks getting hammered, and I realize it's disproportionate because a lot of that says Phillips 66. I'm wondering why that discrepancy, and if it's just lack of confidence in 62 oil.
Yeah, I think that's what it is. Well, the good news is we're starting to refill the SPR, the Strategic Petroleum Reserve.
So there's some kind of support.
Right? Yes, so that's support underlying the market.
How does that happen? Who buys and who do they buy from?
Well, that's a better question for people digging in the market closer than I do.
Whoever they want. I mean, it depends on what they need to fill it.
So from the U.S. government, I call up Exxon and say, I want to buy some of your oil that's sitting there in the tanks in Jersey?
Okay. I mean, it just also depends what oil you want.
Okay.
So if you want like heavier oil, which is what a lot of the refiners here use, you can't really call up anyone from the U.S. You're going to have to call overseas operations. That could still be a Chevron or Exxon, but it's the oil needs.
But when you talk about producers, the key thing I look at is the futures curve. and it's very flat. It means these producers have been selling out on the futures curve for years. It's called normal backwardation, and right now it's flat across the curve around 60, which is pretty rare. I think they're hoping for some kind of reason, some kind of spike, so they can sell forward and add to their production. And right now, it's just every time we get these little bounces, you see the curve come back a little bit. You see more selling out in that curve.
So it's May 21st. You're in Miami. Do you notice people going back north? I mean,
sure.
You can get the reservation. Maybe you couldn't get at the restaurant before.
Yeah, well, as soon as the tulips start popping up in New York, they're out of there. And Easter weekend's a big weekend.
Is that the one? And when do they come down?
Typically by November, Christmas. Typically they're coming down. Yeah, and definitely by December.
And then it's just madhouse.
Yeah, it's madhouse, but I don't really. My wife and I never have a problem getting reservations because we go early. I'm usually I'm early.
It is.
I usually in bed by 8 or 9.
Doesn't everybody else in Florida go to bed at?
Well, I guess when they're down there, they stay late. Usually it's a later crowd.
All right, so the Miami still awesome, right?
Well, it's the power of the tax. You can't stop it. Zero tax.
Zero tax. Is it still considered? Are they still trying to attract Bitcoin and crypto? Because we don't talk about that as much as we used to, crypto in general.
There is definitely some of that. That's the key thing we have to rope in today. Bitcoin's made a record high.
Yep.
The thing that I've really noticed is that money goes to places where I don't live.
Right.
I'm more of the, I'm a commoner.
Yep.
But but it's just it's the thing. It's the flow from all wealth is coming there. And the key thing here's a quote like to end with. They say Miami's the money laundering capital of South America. Well, what is New York for the whole world?
Right.
That hurts, Mike. That hurts. Mike McGlone in studio, Bloomberg Intelligence commodity strategist, senior commodity strategist, joining us there. Coming up, Marianne Bartels, chief investment strategist at Sanctuary Wealth. Her outlook on the market. What's the relationship between the 30-year yield and the S&P? That term premium, definitely key going forward. And we'll break down TJX's earnings as the outlook sets the stage for some upside.
The Fed's top names are on Bloomberg Radio. Atlanta Fed President Raphael Bostic.
Right now, I would say in my S&P, I have one cut only for this year.
Fed Governor Christopher Waller.
The tariffs are a one-time price level effect that's going to pass through.
New York Fed President John Williams.
Having well-anchored inflation expectations is very important for price stability and also for economic stability.
For the latest headlines from the Fed, listen on Bloomberg Radio or anytime on the Bloomberg Talks podcast.
One of the most urgent documentaries of 2025 is streaming now on Jolt. Based on groundbreaking reporting by Bloomberg's Olivia Carville, Can't Look Away reveals the hidden dangers social media poses to our kids.
It's invasion of your home. These kids have no safe place.
The social media companies are targeting them.
We're going to have several lost generations of kids.
From award-winning filmmakers Perry Peltz and Matt O'Neill, watch Can't Look Away now on Jolt.film. That's JOLT.film.
I'm Scarlett Johansson. My family relied on public assistance to help provide meals for us. These meals fueled my involvement in theater and the arts as a child, which fostered my love for acting. The Feeding America network of food banks helps millions of people put food on the table. You can join the movement to end hunger by donating, volunteering, and advocating. Because when people are fed, futures are nourished. Join the movement to end hunger at feedingamerica.org/act now.
Brought to you by Feeding America and the Ad Council.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Surveillance Podcast, Stuart Kaiser of Citigroup.
Near term, like the next month or so, it's a lot about positioning. And now that you had that Moody's downgrade, it's going to be what happens in the long end of the bond curve, as you guys were chatting about earlier. Medium term, let's call that July through September. It's going to really all be, to me, about EPS and GDP growth.
Okay.
Both the Fed and corporate America took a wait and see approach in the first quarter. I don't think that's going to be sustainable through the summer. So we're ultimately either going to see relief and the recession risks get priced out, or we're going to see EPS and GDP numbers come down, and that's going to be kind of a waiting on the market. So I think, frankly, let's call it July through September, through the September Fed. This is really going to be about the growth outlook.
Do institutions call you up? It's like industry when they got to go to break and get to the next season. Do people call up and say, go to cash at that size and scale? People don't do that, right?
I mean, look, it depends. Like a mutual fund long only can't really be in cash, right? Regulatory-wise, they can't be. Hedge funds, yes. I mean, hedge funds will go cash.
Call up and say, clear out these 4 positions.
Yeah.
Then how do you do that?
We push a button these days, I think. No, man, I think what's interesting, and Tom, you're raising an interesting point, is The selling that we saw earlier in the year was much more what we call low touch, going through the pipes, going through the computers, going through the algorithms. We haven't had those days where they're calling up our high touch sales desk and just saying, get me out quick. And I think part of the reason for that is something you touched on earlier. People are so long these stocks that if you're trimming up your positions, you need to do it quite quietly.
Hear the full conversation on the latest edition of the Bloomberg Surveillance Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. All right, so let's start with the biggest of the coins, Bitcoin. Right now, those are up. Right now, up 1.9%, so right around 109,000 per token. It's been at a record this comes after the advancement of stablecoin legislation, the industry-backed regulatory bill now set for a debate on the Senate floor. There's a bipartisan group hoping to pass it as soon as this week. Treasuries extending a sell-off due to investor anxiety about the growth in the financing needs of the U.S. Right now, we have the yields on the 30-year 3 basis points higher. Remember, price down, yield up. It is right around 5%. And later today, I know you're excited about this, Paul.
Yep.
20-year auction. This is going to test demand at the current yield levels. Tangentially, by the way, the House Freedom Caucus chair says the Trump tax bill cannot get done today. The Nasdaq 100 getting a lift with the help of Google parent Alphabet. Alphabet analysts are saying positive things. This comes after an event that was focused on artificial intelligence. They're writing it helped ease concerns about Google's ability to succeed in artificial intelligence. And, you used to get a lollipop when you got a shot.
Yep.
CVS pushing hard to make sure people get their vaccines. They're giving bonuses to their staff whose stores exceed the vaccination goals. The pharmacy chain also raffling off pizza parties, taco lunches, donuts, and ice cream for the staff. Just give more money. Another prize is a day off at the beach. Vaccine's a pretty significant source of revenue for CVS, by the way. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right. John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube. And then if you've got the smart TV thing, you can find us under Bloomberg Originals. That's where you'll find our video effort here. Marianne Bartels joins us, Chief Investment Strategist, Sanctuary Wealth. Marianne, I'm just looking at a chart here on my Bloomberg terminal, the S&P 500 performance year to date. Boy, talk about a roller coaster. 20% decline at the trough there. We've made most of that back here, I guess, and we're kind of flat for the year. What are you telling your clients these days?
That this is a very bullish move. Although the markets went down very sharply and came back very sharply, it's a sign that we're still in a bull market, that this was just a correction within a longer term uptrend. The pattern that formed is called an inverted head and shoulders pattern that we broke out of.
Nice.
It's going to allow us to test the high, and if we can break and hold, we can make new highs. And I think that would be one of the most startling surprises outside of the tariffs this year. So just from, I guess, that's the technical side, which is great because I know you have a phenomenal career in technical analysis. On the more fundamental side, I guess we still have tariffs that are a lot higher than they were at the beginning of the year. And I got a lot of companies, they don't know how it's going to impact their business. So I guess we have got a lot of earnings uncertainty out there. How do you factor that in? You know, you're right. There is earnings uncertainty. And one of the things I learned many years ago is when you have scarcity of earnings or the concern of scarcity of earnings, growth outperforms value. And what is growth? Technology. Where are most of the earnings coming from? Technology. Tech is still the leader. And I really like how it's come back very strongly, how the earnings are there. So although we have earnings uncertainty, what we know is when we have uncertainty, growth tends to outperform, which is tech, which is the leadership. So I still think even in an environment where it's hard for analysts to estimate earnings, I do think companies are going to figure this out, and they'll manage their cost structure. And I think we'll adopt artificial intelligence faster. And that's going to allow margins to improve. And I don't think analysts know yet how to put that in. And that's not a negative criticism. It's something that's new. But I bet you companies show us that they're able to do it. And then the numbers will wind up being there.
How long do you think you have to wait? So you have Federal Reserve officials looking at like a 3 to 6 month window where they'll get more clarity on the macro and the hard data. To your world, what does that mean?
So I think we can go through the summer. And once we start getting earnings in the summertime, we may see some volatility. So I see a couple of months. I think the markets can move, and we can get a peak somewhere in new highs around July or August, and then have that seasonal volatility around September and October, get a little bit more clarity on what tariffs are doing, not only to corporate earnings, but what's happening with employment. What's happening in terms of the economy, inflation. So I think it's a back half story, the tariffs.
How about in the fixed income market, Marianne? I mean, if I want to just be hide out somewhere, I could go 2-year Treasury and get 4%. If I want to take some duration in 30-year, I can get 5% on the U.S. Treasury. What do I do with fixed income?
So we're neutral fixed income because we do like it for the yield pickup. We don't want to take a lot of duration here because of the uncertainty with inflation. I think if you go, 5 years down, you can get some very, very attractive income, some nice diversification. We're not looking for a recession, so you can pick up some yield in the high yield market, and we haven't had a lot of supply there. Also, you can go into select corporates. So bonds can still add a diversifying factor because I don't think we're out of the woods for volatility. And so you get that buffer and you get the income.
What do you think is the next catalyst? Like you said, the summer. What are we going to learn by then?
I think we'll have a better understanding, or at least I'm hoping we have a better understanding of where the tariffs stand, that we'll have some kind of resolve on what the final outlook will be on tariffs. And what are the positives, because there's going to be some positives, and where are going to be some of the hiccups and some of the negatives. But I don't think they're sustainable over time. I think that the impact of tariffs are a 1 or 2 punch, and then we'll continue on to do business as business is done, and companies will figure out how to operate in the new tariff regime.
All right, Marianne, thanks a lot. Marianne Bartels, Chief Investment Strategist at Sanctuary Wealth. We appreciate your time today. All right, let's get to another stock on the move, and that is TJX. Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst, joins us. She covers retail. Mary, what was your takeaway from TJX?
Yeah, so when I look at the results, they beat, for the quarter. They beat on the top line, for total sales, and they came in line on comp sales being up 3%. And that was at the high end of their guidance. The real issue, I think, is the forward guidance. So when you look at the second quarter, analysts were looking for EPS of about $1.04. And the top end of their guidance, it's 97 cents to $1. And so I think there's a disappointment there. But frankly, this management team really executes. They tend to provide conservative guidance. So we really view this as whatever guidance they put out there, we see upside to it. They certainly have seen a strong start to the second quarter. Concerns around tariffs, they're saying that they can mostly mitigate most of the impact when it comes to directly sourced merchandise. And then with regard to indirectly sourced merchandise, this is where they're buying, overstocks. They'll be able to negotiate. And they see plenty of availability, and so they see a lot of opportunity in terms of the buying there, and they'll make sure that they always maintain that gap, and that gap being 20 to 60% versus what you'd see at department and specialty store.
Oh, I know.
Oh, yes.
I was telling these guys that I feel like I'm single-handedly keeping home goods in business, having to furnish a house, like all the outdoor furniture.
Gotta go.
Like a whole bedroom furniture, and like the whole thing was probably like under $1,000 for like 2 whole rooms.
I did buy something there, but I had to mix and match because it was missing parts. It was
but don't
a lamp.
we like that? Oh, the parts.
So I had to go to another lamp and take the top off.
Oh yeah, hello, welcome to Home
Change the
Goods.
shade. They didn't seem to have a problem with
No,
that.
they don't care. You just
They could care less.
You just get in it.
Hey, Mary,
do what you want.
Who is the TJX consumer other than Alex Deal and Lisa Mateo, who I know? Who is that consumer? Who is that customer? And what's the company saying about their customer?
So, Paul, TJ Maxx's customer, Marmaxx and Home Goods, it spans from low income all the way up to high income. So within the Marmaxx, which is where you have TJ Maxx and Marshalls, they carry brands as high as Gucci, Fendi, Chloe, you name it. And we see a lot of that merchandise there. They have stores where you can walk in and you'll see these high-end handbags in glass cases, just like you would in a department store where it's really tethered. And so they have that as well. But then they also have, more moderate brands like a Tommy Hilfiger and a Calvin Klein, or Juicy Couture, even, at a lower end there. So they're able to attract all income levels, and they know how to merchandise their stores appropriately all around the country and actually all around the world, because we're seeing strength in all of their markets. And you raised a good point, Alex. I think you talked about Home Goods, and you're absolutely right. Home Goods actually led the comps. They were up 4%. And so when you look at the comps that were at Marmaxx, they were up 2%. So they definitely saw strength in Home Goods.
Yeah, also I have to tell you, those people know how to put furniture in a car. It's like Jenga and Tetris, and they crush it. It's amazing. Mary, I'm curious as to why the stock is down, to be honest with you.
Yeah, I think I always see a lot of volatility around earnings, but we also had news out this morning from Target, and that kind of cast a pall, I think, over retail. But I really think that's related to Target issues and just execution there. Like I said, when you think about TJX, they are superb in terms of execution, and you see very consistent performance. I mean, they've beat top line and bottom line estimates for the past 8 quarters. So, like I said, I sort of view whatever guidance and consensus is out there, we see upside.
Yeah, I'm looking at this stock. It's up 9% year to date, TJ Maxx. So the market likes kind of what they're doing. It's up 35% on a trailing 12-month basis. So solid performance in this rocky market we're seeing. Mary Ross Gilbert, thank you so much for joining us. Mary is a senior equity analyst covering the retail space for Bloomberg Intelligence. She's in our Los Angeles office, which is a phenomenal office, by the way.
I've never been to that one.
Century City, brand new. Like the first time I went to their office on Wilshire, I was like, that's the first office that underwhelmed me. And sure enough, I went back 6 months later. They upgraded to this amazing office in Century City overlooking the Bel Air Country Club. And I'm like, that's more Bloomberg.
It's the Paul Sparkle, apparently.
So I had to say, they upgraded big time there. So we got Mary. She's in our LA market. We got a couple other BI analysts in Los Angeles as well. Looking at the markets here, a little bit of a sell-off here. Coming up, Garrett Watson, Director of Policy Analysis at the Tax Foundation. And we're talking about a little bit of tax policy. Folks, our good friends down in Washington, D.C. are trying to get something done. They keep stumbling over this SALT tax. We need that deduction higher and higher. This is Bloomberg.
CBS News Brief. Marathon work in the House of Representatives as Republicans push to get reluctant members of the party to sign on to the Trump spending bill. CBS's Caitlin Huey-Burns says House Speaker Johnson wants final action soon.
He wants this bill, the overall bill, final passage, to happen by Thursday. It could come later tonight, but likely tomorrow.
Officials in New Orleans under fire after last week's big jailbreak. 5 inmates are still on the loose. Sheriff Susan Hudson.
As your sheriff, I take full accountability for this failure, and it is my responsibility to make sure it is addressed with urgency and transparency.
They're cleaning up in parts of 6 states in the South after a spate of tornadoes yesterday. This man says he had little to no warning at his home in Arkansas.
I heard the roof fall in the living room. I heard water going all over the house, but we never was getting wet.
CBS News Brief. I'm Steve Kathan.
The next generation of Wall Street Week is here.
What could be the story of the century.
Bloomberg's David Weston brings you stories of capitalism.
The train station felt like the right kind of project.
Teaching kids, above all else, is a mission.
The hardest business to change is one that's succeeded for a long time.
The new Wall Street Week.
More than what you need to know, it's what you need to think about.
Fridays at 6 p.m. Eastern on Bloomberg Television and Radio. And anywhere you get your podcasts. Bloomberg Radio. Context changes everything.
It takes a village to tell a story. And at Bloomberg.com, our village spans the world. With over 3,000 journalists and analysts and more than 100 global bureaus. Because if your focus is narrowed on your individual village, your tiny sliver of Earth, you'll miss out on the big picture. When you look at the world, what do you see? Learn more at Bloomberg.com. Context changes everything.
This is a Bloomberg Money Minute. Wall Street is keeping a close eye on the budget wrangling in Washington. Stocks, bonds, and the dollar are down. And following a surge from its April lows, the S&P 500 dropped for a second straight day. The latest figures from retailers were mixed, with Target cutting its sales forecast and Lowe's comparable sales beating expectations. Toyota is revving up to compete with its competition in the smaller, more affordable truck market. The company is considering offering a compact pickup as it responds to dealer requests for a smaller truck compared to its Tacoma midsize and Tundra full-size pickups. The company sees the compact truck market as an opportunity to attract budget-minded buyers who want the utility of a pickup without the premium price. And consumers can get into trouble using buy now, pay later programs. The Swedish company Klarna offering interest-free short-term loans for retail purchases in the country. It reports its losses more than doubled in the first quarter because of a growing number of customers who have failed to pay. Kimberly Adams, Bloomberg Radio.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Daybreak U.S. edition podcast, we discuss reports Israel may be preparing an attack on Iran's nuclear sites with Bloomberg's Rosalind Matheson.
There's been these reports periodically for quite some months now that Israel is looking more in depth at the possibility of making a strike on Iran's nuclear facilities. We saw this with some of the tit-for-tat strikes that happened between the two countries last year, and whether this would be one of the options that came onto the table. So in essence, in itself, the fact that Israel is looking at this is nothing new, and you can see the oil didn't move massively on it as a result. So maybe the markets doesn't think that something is imminent. The question is, though, is anything shifting in the Israeli thinking on this as part of these reports? Is this pointing to them perhaps hardening their position towards something? And if so, why would that be happening? Is it because that the Israeli administration of Benjamin Netanyahu is frustrated with the situation in Gaza? You know, they are talking about a much bigger scale military operation there against Hamas. They feel that Iran has been weakened and their proxies in recent times. They're worried about the pathway towards nuclear enrichment and see perhaps a window closing for them to take action against these nuclear sites. So it's a bit hard to know if there's been a shift in the calculus for Israel and whether this is becoming more of a prospect. But to say it has been something we know that they've discussed on and off for quite some time. What we need to understand is whether there's anything that has changed that might make this more realistic.
Hear the full conversation on the latest edition of the Bloomberg Daybreak U.S. Edition podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages, they've turned mixed. Nasdaq 100 pushing higher, helping lead the way there. Google parent Alphabet climbing over 5%. The people behind the FICO score, Fair Isaac Corporation of Bozeman, Montana, worst performing stock in the S&P 500, down close to 13%. And then you have shares of D-Wave Quantum, the ticker symbol QBTS, QBTS. That right now most actively traded up 2.25%. The company announced the general availability of its most advanced quantum computer. So I guess you could go in and, run your programs on it. Mark Howard at BNP Paribas says, what the recent market moves, at least to him, are signaling caution.
It folds into a very low confidence in the equity market. You have to be invested, but you also have to be prudent. So staying close to your benchmark, perhaps going up a little bit in terms of quality and predictability. You don't try to pick the bottom with a company that's struggling.
Right now, the Nasdaq Composite Index 64 points higher. That's up 0.3%. The S&P 500 down just about 10 points. That's down 0.2%, 59.31 on the index. And the Dow Jones Industrial Average 304 points lower. That's down 0.7%. The long bond right now 4 basis points higher, 5.01% on the 30. TikTok telling U.S. e-commerce staff they can work from home today. But they're not happy about it. That's because they're waiting for emails from the company that'll probably tell them whether or not they still have a job. And finally, the luxury market's still struggling. LVMH said to be warning investors and analysts that demand trends in the current quarter remain soft. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well, so check us out there. Hey, let's have some fun, kids. Let's talk tax policy. Garrett Wilson, Director of Policy Analysis at the Tax Foundation. He's zooming in from Fayetteville, Arkansas. All right, here's one of my lasting images from the early days of the lockdown and COVID is the people down in the Ozarks on the lakes partying their brains out. And none of this social distancing stuff. You can't tell those people not to have a good time in the summer down in the Ozarks. They're out there to have a good time. And that's where our next guest is. Hey, Garrett, talk to us about what's happening down in D.C. I mean, it seems like this SALT tax thing, which is really important in Metro New York. I'm not so sure about Fayetteville, Arkansas, but it's really important for us here. That seems to be a real sticking point, isn't it?
That's right. The leadership in the House is trying to get together the final votes in what is a very narrow margin in that chamber amongst Republicans. And the big sticking point right now is the fate of the state and local tax deduction. Currently, it's capped at $10,000. You can write off your state and local tax payments against your federal taxes. It's been that way since 2018 and expires at the end of the year with the rest of the 2017 tax law. But there's been a lot of intense negotiation about where to put that cap, going anywhere from making the current cap, making it permanent, extending it, or making it more generous, upwards of, we're now hearing a $40,000 cap, maybe putting in income limits. The big sticking point is they haven't come to a compromise design that everyone can agree on that fits with the revenue needs for the rest of the package and the SALT folks can live with to deliver to their constituents back at home.
What do you think realistically winds up getting done? Since everyone loves to also hate SALT caps.
So at this point, it seems like it's just a matter of the give and take on the exact numbers here. It seems like there will be definitely an increase in the cap, but a continuation of a cap, be it 30,000 or 40,000 or something north of there. It does look like leadership wants to have some sort of additional income limit that would be new. So if you are a very high earner earning, say, north of $500,000, there may be additional limits that are new there that could also limit the benefit of this expansion. The other thing that's sort of flown under the radar is there is some partial new limits for those folks who are working around the caps using their businesses through pass-through firms. That's been a common tactic, and this bill would partially remove that for certain types of business income. So that's another thing for folks to watch out for if they're planning what this might do for their tax bill in the coming years.
Hey, Garrett, when President Trump was on the campaign trail, he was talking about eliminating or lowering eliminating the taxes on tips, for example, overtime, that kind of stuff that really works well on a campaign trail. Is that something that can get done in this package?
So there's several I would say, trial balloons here that are temporary over the next 4 years that would deliver on a deduction for tipped income, for overtime income. There's a special $4,000 deduction for seniors in here, and even a deduction for car loan interest for those payments for folks who are itemizing and non-itemizing alike. So you don't have to itemize to get it. The big headline there is those are fairly open-ended deductions for most taxpayers who are not very high earners, but they do expire at the end in the next 4 years. And so that will line up with potentially another debate about whether or not those are extended. One way to think about that is we'll have to see if they're popular, right? If people find them helpful. There's of course also the revenue costs. They add up to a few $100 billion over 10. So they would need to figure out how to extend those moving forward. What that means is there may be another tax fight at the end of Trump's term heading into 2029 if it goes forward like that.
As an energy person, I'm obviously really interested in what happens with the tax cuts in the Inflation Reduction Act. What do you think, and then the credit phase outs basically, do you think that those stick where they are right now, or does it get more severe for some of the alternative energy players?
Yeah, for the IRA credits, it's really been a balancing act, both at the committee level and amongst leadership, right, to try to balance the concerns of members who are more sympathetic to those credits amongst Republicans who may have a lot of projects in their districts, worried about the disruption if they're phased out too aggressively, and other folks who are worried about the fiscal costs of these credits and want to see them phased out in a more aggressive timetable. And so right now we're seeing, in the current package, a phase out over the next 5 years through the early 2030s for projects that have not been underway at that point. But there's been a negotiation right now to move that up as soon as 2027. I think that will be the question is to what extent do folks who are more on the sympathetic side, are they okay with that, right? Will that be too disruptive for projects that are currently being penciled out within their districts? And of course, the other thing looming over the IRA credits, I think that's worth saying is even if it does pass the House, the Senate may have very different ambitions on this. That's true of the general package, but specifically with the IRA credits, we may see something very different, much less aggressive in there. But that comes with its own trade-off in terms of the revenue cost. It will bring in $500 billion over 10 years, according to the Joint Committee, and in additional revenue to offset other parts of the tax cuts. So they don't have a lot of wiggle room there, but we'll see if the Senate has different ideas.
Hey, Garrett, I spent my whole career on Wall Street, so I'm all about making money, minimizing taxes. But even I have to admit, the favorable tax treatment that carried interest receives is just extraordinary. Can you give us how that came about, and is there any pressure to change that? Because it's kind of tough to see some of these private equity guys, with effective tax rates in the single digits or the low teens when everybody else is paying 40 to 50%.
Yeah, carried interest has come up time and time again in all these major tax battles. Of course, we had a small change on carried interest treatment in 2017, basically lengthening the amount of time it was required to hold a position to qualify for that carried interest, which is subject to the lower qualified capital gains and dividends rate, upwards of 20 or 23.8%. And there have been efforts to try to tax that income as ordinary income, right? With that, of course, I think two things. One, it isn't a major revenue raiser either way. So if you were to tax it at ordinary rates, it only raises maybe about $20 billion over 10, which is a lot of money, but in the big picture is not a lot when you're talking about trillions. So the major sort of policy debate is on, as you're hinting at, right, the fairness question of what is the appropriate tax treatment of that type of income. On the one hand, if it's just basically like wages, right, like labor income, that would be an argument in favor of taxing at ordinary rates. Folks who are more defensive of the current treatment would say it's more like capital gains income. It's more like investment income, and we don't want to penalize that kind of investment in the U.S. But the big trend, as you mentioned earlier, is it's been an uphill battle to make that treatment stick. We did see the president express some interest in that change earlier, but that's been dropped out of the package, along with other things like raising the top rate on higher earners. These are also issues that could come back up again in the Senate potentially if they're looking at how to make the revenue numbers work.
Yep, sounds super easy, not at all complicated. Garrett, thanks a lot. Garrett Watson, Director of Policy Analysis at the Tax Foundation. We appreciate that in the latest news that it looks like Speaker Mike Johnson has secured an agreement on a $40,000 $40,000 assault cap increase. We, of course, keep you updated on all the latest. All right, coming up, we're going to take a turn here and talk about J.P. Morgan creating a new part of its bank, a geopolitical arm. Really interesting development. Hannah Levitt will be joining us on that. This is Bloomberg.
The latest global headlines are now at your fingertips.
Subscribe to Bloomberg News now and get news when you want it on your schedule.
These are short audio reports that bring you the latest headlines with context.
Check in throughout the day for just a few minutes to stay on top of the latest news from around the world.
Bloomberg News Now is available 24 hours a day right on your smartphone.
Subscribe today on Apple Podcasts, Spotify, or anywhere you listen.
Bloomberg News Now. Context changes everything.
This is a Bloomberg Money Minute. It's costing more money to borrow money if it's a house. Today, the Mortgage Bankers Association says the average 30-year fixed mortgage rate rose to a 3-month high last week, 6.92%. That helped pull down the number of loan applications, both to purchase a home and to refinance, by 5%. It's takeoff for Boeing as the company reaches a key 737 production target. Boeing informed customers that it's loading its 737 final assembly lines to build 38 of the narrow-body aircraft a month, the maximum allowed by the FAA. It's a key milestone for the company, its customers, regulators, and investors after a series of issues, including the near-catastrophic panel blowout on an airborne 737 MAX earlier last year. At CVS Health, dangling new perks for its employees in an effort to make sure people get vaccines. Bloomberg News saw an email sent to staff showing that CVS is giving bonuses to some workers whose stores beat vaccination goals, including the option of raffling off a pizza party. Kimberly Adams, Bloomberg Radio.
Bloomberg Hot Pursuit, a weekly podcast that gives car lovers the inside look they crave.
When you get behind the wheel, it's just a beast.
With Matt Miller in New York and Hannah Elliott in LA.
It's very Mad Max / Burning Man.
Listen for the latest trends, new car releases, and anything else that drives us.
Porsche setting altitude records.
That's actually a very drivable Lamborghini.
Bloomberg Hot Pursuit. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app and anywhere you get your podcasts.
I'm Barry Ritholtz, and I'm excited to tell you about my new podcast, At the Money. Each week, I sit down with an expert to have a 10-minute conversation on a single topic involving your money.
Investing tends to reward simple.
We weren't wired for this.
Use that volatility to your advantage.
Spend the money, for heaven's sakes. What's it for?
Listen to At the Money every week in the Masters in Business podcast feed on Apple, Spotify, YouTube, or wherever you get your podcasts.
The best way to listen to Bloomberg Radio is on Apple CarPlay or Android Auto. Download the Bloomberg Business app on your smartphone today, then listen to us anywhere from coast to coast and around the globe. Get it all, live radio, podcasts, and news updates on demand at the click of a button. The Bloomberg Business app, now on Apple CarPlay and Android Auto. Download it free in the Apple App Store or on Google Play. Bloomberg Radio. Context changes everything. You're listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over there and check us out. Bloomberg Podcast Live, that's where you'll find us. JP Morgan, interesting what they're doing here. I mean, it kind of goes to the fact that geopolitics has been certainly for 2025, and before that certainly, but a huge driver of what happens in the global markets here. And if you don't have a handle on geopolitical issues around the world, you're going to be left behind in a lot of instances. And JP Morgan's really focusing on that. Hannah Levitt joins us here, senior finance reporter for Bloomberg News. She covers all the big financial companies, but she really focuses on JP Morgan and Morgan Stanley with some in-depth research on those names. Talk to us about JP Morgan Chase creating a unit aimed at guiding clients through geopolitical risk. How are they doing that?
Yeah, totally. So thanks for having me. Jamie Dimon, who's the longtime CEO of JP Morgan and, you know, kind of the dean of Wall Street, if you will, began warning about geopolitical challenges shortly after Russia invaded Ukraine in 2022. And his language around that has gotten increasingly strong in the years since. So, you know, he said it dwarfs any other concern in his career. And he said it's the most dangerous and complicated state of the world since World War II. And, you know, even Monday at the firm's investor day, he was saying it's very, very, very high. And so last year he asked one of his deputies to set up a unit to really provide clients with insight on all of this. So they hired a man named Derek Chalet, who was at the Pentagon until January, to run it, and then also a woman named Lisa Sawyer, who was also at the Pentagon, and she had worked in government relations at JP Morgan earlier in her career. So it's a small group, and what they're doing is really, you know, liaising across JP Morgan, all the different, you know, everything from the people in charge of country risk, because they're in all these countries, to research, and then doing these reports, client events, and so on.
What's interesting is that it really dovetails with what everyone seems to be saying, is that investment theses will have to be driven in part by nationalistic policies because of all the geopolitical risk, right? Like, you can't rely on Russia for gas, so Europe has to figure out its own policy. Do they want to rely on the U.S., or do they want to find their own source of energy? So it's like, in my world, in energy, that's what everyone's kind of talking about, is you nationalize your resources, and that's sort of along the same lines. Like, geopolitics now runs the table.
Yeah, totally. And like, at least the reports that came out today, you know, they weren't instructive to clients so much as they were kind
picture painting.
Yeah, and giving, you know, here are the potential outcomes, and here are the percentages as far as likelihood of each outcome. So I think they said for a deal between Russia and Ukraine, it was like 15% for best case scenario, 20% for still okay, 50 for not great, and 15 for worst case. So, and then it kind of outlines what those scenarios would look like. And so, you know, it presents clients with those scenarios, that information, and then they can think about their businesses, you know, whether it's a huge company or, you know, so a small company that is concerned for, you know, whatever reason dealing with their business about the outcome there.
And you think about JP Morgan, I mean, they just have a presence everywhere on the globe, and you know, just like the local country manager would probably have a really good insight. We certainly get the benefit here at Bloomberg News by having journalists on the ground and having bureaus and bureau chiefs, and it's probably something similar for these big investment banks. Are other investment banks thinking about this as something they need to address, geopolitical risk, providing some advice to their clients?
Yeah, absolutely. So this has been a trend, you know, among Wall Street firms in recent years. Really, since COVID, they've been adding, you know, former military leaders and former diplomats, even former spies, to try to, you know, last year JPM brought on Mark Milley as a special advisor. And so we've seen a lot of things like that across the street as they're trying to, you know, get a grip, both for themselves internally, their own executives, and then also their clients. And Jamie Dimon is on the road all the time. Yep. And so this was something that he, you know, it was his thing that he wanted to set up, and really a result of talking to people around the globe.
How do things like that normally work? So you have this geopolitical, basically research division, right, that gives all the percentages and outlines that. Then does that have to filter into all the other branches of research? And if I'm an equity analyst over there, then I have to take that into account when I'm making my allocation?
No, it's more, I mean...
Or is it just like a thought leadership thing?
Yeah, it's more of a thought leadership thing. It's not instructive to, you know, our official call. You know, you'll have like an equity strategist or something that's like bullish or bearish on the S&P.
Right.
It's not so much like that. It's more...
framing out kind of the risks and opportunities. Real quick, any bombshells from the Investor Day this week? Anything of note?
No, really. It was very, I mean, I've been going to their Investor Day for the last few years. They do one every year. This one was about a half a day. Sometimes they're a full day. And it was a lot of, you know, all the things we said last year, we're on track for those. So it was pretty tame.
All right. Thanks so much, Hannah. Really appreciate it. Hannah Levitt, Bloomberg senior finance reporter, joining us. And JP Morgan opening a geopolitical arm, or geopolitics arm, I should say, as Jamie Dimon, as we know, talks about a hinge point for the global economy. All right. For our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on SiriusXM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM channel 121 is presented by ShipStation. Stay with us. Your top stories are coming up right now in a market that's kind of turning around, at least on the tech side. This feels the opposite of what it was a few weeks ago, where you'd sort of rally in the pre-market and then you just sell off into the close. Now it's the opposite. You're kind of selling off in the pre-market and then modest buying, and then equities go absolutely nowhere on light volume. So, what does that mean?
Yeah, there you go. I don't know. I mean, but let me call out Bitcoin.
Okay.
Why not? Up 2%, 109,000. I think that's like certainly darn near. I think that's an all-time high.
It is
We'll
a
give it to
record
it.
high.
All right, there you go.
All right, Balance of Power is up next. Happy Wednesday, guys. This is Bloomberg.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio. Now, an update from our partners at CBS News.
This is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. Republicans in the House of Representatives are pushing to get party holdouts to sign on to a domestic policy bill that's key to the Trump agenda. CBS's Caitlin Huey-Burns.
This bill directs at least $800 billion in cuts to government spending. A lot of that is aimed at programs like safety social net programs like Medicaid, food stamps. But what's also key here is that it increases money for defense spending and increases money for immigration enforcement and fulfillments of campaign promises, extending the Trump tax cuts, for example, making those permanent. Also instituting no tax on tips and overtime pay.
The Justice Department's beginning the process of dismissing lawsuits against the Louisville and Minneapolis police departments, ending investigations and proposed police consent decrees after the deaths of Breonna Taylor and George Floyd. CBS's Scott McFarland.
The Department of Justice and its Civil Rights Division in the Trump administration is trying to disentangle itself with oversight of local police departments. They call it micromanaging. They call it an overreach. So they are trying to take those types of missions away.
Officials in New Orleans say more workers at that prison where 10 inmates escaped last week could face discipline. One staffer's been criminally charged, 3 suspended. CBS's Katie Weiss.
The sheriff in New Orleans, it's important to mention, is starting to make some admissions as to how this manhunt even began in the first place, even saying this is on her. That we're finding out for the first time, she says that her staff missed the warning signs, that they weren't even doing proper checks at the time when this escape happened.
5 inmates are still at large. At the Sean Combs sex trafficking trial, CBS's Katrina Kaufman is following testimony.
There's another personal assistant taking the stand today, and potentially Kid Cudi, who dated Combs' ex, Cassie Ventura, which supposedly angered Combs.
Hurricane season's just days away, and the forecast for what could be in store for the years ahead is not good.
Engineers at the University of Illinois used machine learning to project how future hurricanes made stronger by climate change could affect homes along the southeastern U.S. What they found was by 2060, wind and rain damage could rise by as much as 76%. By 2100, worst case scenario here, those losses could more than double. Dave Malkoff, CBS News, Atlanta.
The reports say NFL teams can keep using the tush push after a ban proposal fails at the owners' meetings. Wall Street, right now the Dow Jones Industrial Average is down 330 points. This is CBS News.
Follow and listen to the CBS Evening News podcast on the free Odyssey app or wherever you get your podcasts.
Are you paying too much for term life insurance? There's a tremendous price war among the major term life companies. Rates have dropped dramatically in the past 2 years. For example, a man age 45 non-tobacco user, $1 million of coverage is only $75 per month, level for the next 10 years. Or a man age 50 non-tobacco user can buy $500,000 of coverage for a monthly premium of only $110. Guaranteed not to change for the next 20 years. That's right, level rates for 20 years. And if you're a smoker, we have great rates for you as well. At the Term Lifeline, we specialize in policies of $500,000 and above. So if you're looking for new or replacement term life insurance, call right now for a free quote.
Rates and availability may vary by state. Sample rate quotes are based on preferred non-tobacco underwriting exam required to qualify.
800-620-8909. 800-620-8909. 800-620-8909. That's 800-620-8909.
/free. Beginning tomorrow, hundreds of thousands of people stand to lose their access to cheap weight loss drugs because of a federal crackdown. Here's CBS's Chris Van Cleve.
Brittany Fenley is worried she won't be able to stay on medication that's helped her lose 70 pounds since October.
This drug has changed my life.
At 270 pounds, diet and exercise weren't working, so she looked into weight loss drugs such as Wegovy, costing more than $1,000 a month.
It wasn't until I saw an ad on Instagram, and it said starting at $2.99 a month, and I was like, wait, I could do that.
She could do it because the surging popularity of the GLP-1 drugs created a shortage, prompting the FDA to take emergency action, allowing compounding pharmacies to essentially make generic versions of the drug for a fraction of the cost. The FDA has ordered compounding pharmacies to largely stop selling their version of the drugs.
I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The Speaker still does not have the votes. Welcome to the Wednesday edition of Balance of Power on a wild day here in the Capitol with a Rules Committee hearing now approaching its 12th hour. A deal on SALT upsetting the fiscal hawks on the Freedom Caucus and a looming meeting here at the White House. We're going to get the latest from Jack Fitzpatrick at Bloomberg Government. He's on Capitol Hill in the middle of it all right now. This as the South African president just now arrives at the White House for what could be a contentious day with the president and a meeting in the Oval straight ahead we'll discuss with our political panel. And as the White House cracks down on DEI, Bloomberg finds a lot of companies continuing their efforts under a different name. Simone Foxman will join us live from New York with more. So let's strap in for an interesting couple of hours together here. We start, as always, on Wall Street. His look at the markets right now. Charlie Pellet in New York. Charlie?
I thank you very much, Joe Matthew. Indeed, good day from New York. With the Dow, the S&P, they are both lower. You use the word interesting. We've got Nasdaq higher, up by 77 right now. Stocks are rebounding. Big tech companies like Alphabet jumping 5%, driven by optimism around regulations and a revised trade proposal from the European Union. Right now, the S&P is down 10, a drop there of 0.2%. Dow Industrials down 345, a decline there of 0.8%. And the Nasdaq Composite Index ripping higher right now, up 77, up by about 0.4%. The Russell 2000 Index down 1%, the 10-year 4.54%, the 2-year 4.00% now on the 2-year, with gold up $23 the ounce, up 0.7%. West Texas Intermediate crude oil down 0.4%, 61.83 a barrel. And Bitcoin, we are looking at a record today. Risk on for Bitcoin up 1.8% at 108,890 on a Bitcoin. As for markets and Washington, Sarah Malik is head of equities and fixed income at Nuveen Asset Management. She was interviewed this morning on Bloomberg Surveillance.
Beyond the tariff issues and the Moody's downgrade, and downgrades of U.S. credit has generally not been positive for the markets, we have bubbling up geopolitical issues between Iran and Israel. So there's a lot of things for the markets to contend with, and I think that's why equities are experiencing a hangover this week.
Indeed, S&P today down 6 points, down 0.1%. By the way, you can hear more of that conversation on the Surveillance podcast, and you can download it wherever you get your podcasts. Target cutting its sales forecast due to a sharp pullback in spending, tariffs, boycotts, and slumping consumer confidence. Target right now down by 3.5%. Also reporting earnings, the home improvement retailer Lowe's, that stock down by 1.5%. Rival Home Depot down by 0.9%. And VF Corp shares are plunging after forecasting a bigger than expected loss. VF is the owner of brands including Timberland and Vans. Right now, VF Corp down by 11.7%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thanks for the setup. As always, our good friend Charlie Pellet will be back later this hour for more on the Wednesday trade. And so welcome to the Wednesday edition of Balance of Power here on Bloomberg Radio, on Satellite Radio Channel 121. Of course, on YouTube, where you can find us now, search Bloomberg Business News Live. Our stream rolls all day, and now we're on Bloomberg Originals. You add the podcast, and it's pretty hard to avoid the fastest show in politics. Here's the state of affairs. We've got a lot going on right now. The President of the United States just now, 1 moment ago, weighing in on the tax and spend bill on Capitol Hill as the South African delegation rolled up to the South Portico, the North Portico, I should say, just arriving about 5 minutes ago. The South African president is in the White House right now. They've got a lunch set in the cabinet room. They're going to have a bilateral in the Oval, and we're going to bring you in there. The press pool has been assembled, as they say. We'll bring you in for the conversation as soon as it begins here, as we straddle both ends of Pennsylvania Avenue. The president was asked, as I mentioned, about the bill. Very well, he said. His big, beautiful bill doing very well. It's very close. Sounding not unlike the Speaker of the House, who does not have the votes to pass this right now. I'll point you to the House Rules Committee, now entering its 11th hour. They started at 1 o'clock in the morning. Jim McGovern's head has not exploded yet. But we're keeping tabs on this process that would eventually lead to a floor vote today, maybe tomorrow, if they can get this done. If you look at the latest from Chip Roy, maybe not so much. As he takes to Twitter, this is the Freedom Caucus member who's not happy about a deal on salt, a $40,000 cap. Chip Roy says, imagine if Congress chose inspirational policy to lead America rather than buying a handful of seats with $350 billion in parochial tax subsidies in the form of salt, while giving 7 times more money to the able-bodied than vulnerable Americans on Medicaid wait lists. Does that sound like someone about to vote yes? The Speaker of the House, a short time ago, here's Mike Johnson on the SALT deal.
That's the agreement we came to, and I think the SALT caucus, as they call themselves, it's not everything they wanted, but I think they know what a huge improvement that is for their constituents, and it gives them a lot to go home and talk about.
But we have no sense of exactly where we are, when this vote's going to land, if it happens in time for Memorial Day. Though all signs are leading to a yes, with reporting now that members of the Freedom Caucus, I'm assuming Chip Roy has an invitation, will be meeting with President Trump later on today. Jack Fitzpatrick, watching all of this happen from his perch at Bloomberg Government, joins us live from Capitol Hill right now. Jack is our appropriations expert and just the voice we need to hear from now. How many hours does this Rules Committee go, Jack, and what does it look like when it comes out? Will it pass?
The Rules Committee can wait as long as necessary. I think if you look at the usual strategy of the House, the bill comes out when you have support and have what it takes to bring it to the floor. We're waiting on this manager's amendment. The issue isn't that they're printing out a massive document or they're fine-tuning the details. They don't have enough support among conservatives right now, who are, on one hand, are unhappy with the SALT concessions, and on the other, have always pushed for a little bit more of an aggressive approach to Medicaid cuts and a faster timeline to pull back the clean energy tax credits. So even if they don't block what we've heard about the SALT deal, they want something more conservative as a counterbalance. This Rules Committee, they could gavel out and say we're leaving subject to the call of the chair and we'll be back whenever we have a deal. I wouldn't be surprised if that happens, because the Freedom Caucus members are saying this isn't really likely to come together this week. So this can drag out in a procedural way as long as it takes until you get enough support from the conservative holdouts.
Interesting. Are all of the SALT members of the SALT caucus on board? We're going to talk with Congressman Lawler next hour, Jack. We've got a $40,000 cap reportedly here. That would quadruple the current cap. Is that enough for them to go home with?
If anybody is unhappy about it, they're being very, very quiet about it. I'll admit there's a huge spotlight on the conservative complaints, and they've kind of seized the attention today. And because we're not voting, it's hard to catch everybody in person. But I have not heard any complaints yet about that SALT deal from the SALT members, who appear to have won a pretty hard-fought victory. Now the question is, can you get the other ideological end of the conference on board with that?
Well, I just read the tweet from Chip Roy, and I guess nobody would be surprised if he ended up being a no vote when this gets to the floor. Are we running odds here, Jack? How do you frame the chances of this getting a floor vote this week?
It's looking really tough this week. The Freedom Caucus members were pretty confident that this is not going to come together with enough support this week. Now, you can hold a failed vote to try to pressure them, and they can change their mind if they really get some great offer that the president pushes and leadership gets on board with. But the latest that we've heard from the Freedom Caucus holdouts is this probably needs a number of days, and maybe they could just take that recess next week and come back after that and vote. So it's a big discrepancy in terms of that timeline.
What do we know about this meeting reportedly with the members of the Freedom Caucus, at least some of them, and President Trump today? It's a lot harder to say no to Trump than it is to Speaker Johnson, but he was already up there yesterday, Jack, and that didn't work.
Yeah, we don't know much about the specific meeting happening. There's a lot of communication in different forms between the Freedom Caucus members and the White House. To take it back just a moment, the Freedom Caucus members are saying that they had an agreement with the White House very late last night about some specific concessions on Medicaid spending, and now the Speaker is not holding up that bargain. So they want some sort of communication between the Freedom Caucus, the Speaker, and the White House. We also saw Mark Meadows, the former White House Chief of Staff and the former Freedom Caucus Chairman, go into the Speaker's office just a little bit ago today. So there is communication. It could be a meeting in the White House. It could be phone calls, but the White House is critical right now.
Mark Meadows is up there right now, Jack?
Yeah, if there's a good bridge between House Republican leadership, the Trump administration, and the Freedom Caucus, it's Mark Meadows. And our colleague Ken Tran just saw him walk into the Speaker's office very recently.
This is good stuff. Wow, yeah, that is a throwback, CC. So let me ask you about the CBO. Jack, we got a score at the urgence of the minority leader, Brendan Boyle, as well, the ranking Democrat on the budget panel, urging the CBO to put a cost on this thing. Finding that the plan would increase the deficit by $2.3 trillion over a decade, that would trigger automatic spending cuts in Medicare and other programs without congressional action. Republicans are not accepting this as the baseline, right?
Yeah, the Republicans have a lot of complaints about the CBO, about the score, about what it would add to the deficit, about the effects that it would have. There's another graph that the CBO put out showing bigger benefits for the top 10%, worse benefits for the lower 10%. There's been a lot of messaging from conservatives and from House leadership saying we don't buy that. But yes, you add up the numbers committee by committee from the CBO. It says this would add $2.3 trillion to the deficit. That doesn't include the interest costs, so the number actually ultimately might be higher. We'll see if they can get something out in time. But we are talking about something that at face value would add a couple $1 trillion to the deficit over the next 10 years, according to the official score.
Back to that Rules Committee meeting. When we get to the top of the hour, it'll be underway for 12 hours here, Jack. And I know that some lawmakers have literally been falling asleep here at the dais. They started, in the wee hours of the morning. Will there be any attention paid to Democratic amendments? There are 537 of them, apparently, or is that just noise?
Probably not. That's a good opportunity for the Democrats to get their messaging in. It's fair for them to offer amendments. You'd expect that. But there's exactly one amendment that people really care about that's critical to its chances on the floor, and that's what's called the manager's amendment, which includes all those changes that the Speaker has been negotiating.
Fascinating. That manager's amendment out today, Jack?
It'll be out whenever they have a handshake deal. They need the conservatives to get on board and feel like they have the votes before they can put that out.
This has been incredibly helpful, Jack. Thank you so much. I love the fact that we can bring you Jack Fitzpatrick in the throes of this debate right now. That is truly the latest. Anything you read is probably dated already, which is why we need to stay in touch with Jack Fitzpatrick on Capitol Hill, with Tyler Kendall, who's reporting on both ends of Pennsylvania Avenue today, and the full force resources of Bloomberg News covering what's happening here in this debate over the tax and spending bill. We're probably going to hear from the president on this as well, even though that's not the point of why we find him in the White House with the president of South Africa, who arrived a short time ago. Cyril Ramaphosa is going to be sitting down with President Trump here for lunch and for a bilateral meeting, knowing that the Trump administration has accused South Africa of genocide against white Afrikaner farmers, some of whom have been given refugee status here in the U.S. Let's bring you live in the Oval right now with the president of the U.S. and the president of South Africa.
We also have a few of my friends. Ernie Els, a great golfer. He's a truly great golfer. Retief Goosen, who's another really, we call him really a great golfer too, Ernie, right? You two guys are fantastic. And we could add Gary to the group, Gary Player. What a group of golfers South Africa's had.
Yes.
There must be something in the water, right? It's something good. These two guys are unbelievable.
It's the water, sir.
Yeah, Gary's Gary. And David Frost, also another one that I know is such a great one. Indeed. Was he as good a putter as they say, David? He's a putter. He's a putting machine, right?
Absolutely.
But he's another one. So something very good about South Africa in golf, and golf is still doing great in South Africa. And they have young players I hear coming up that are going to be very good. but it's an honor to have you here. And my friend, it's an honor to have you, one of the greatest businessmen in South Africa and long beyond. Thank you for being here. It's very, very great honor. Appreciate it. So we're going to be discussing certain things. As you know, we have the G20 is going to South Africa. When is that going to be?
In November.
In November.
And thereafter, I hand over to you. And
yes, we have it next.
You originated the G20, so I'll hand over the baton to you, and then you lead the G20.
We're going to have it the following year.
Yeah.
So we'll be discussing many things, and some of the things you've been reading about in the papers and the media. And I would say that, look, the president is a truly respected man in many, many circles, and in some circles he's considered a little controversial. But we're going to be discussing some of the things that are taking place in South Africa and see if we can help. And we want to help. And we've had a long relationship with South Africa. I have, because indirectly I have so many friends that live there. I have a lot of friends. I mean, these are famous guys, but I have a lot of friends that live there that are tremendous people. And we'll be discussing that. We'll have a nice conversation. And I really appreciate that you guys came along. It really helps us in our thought process. But it is a great honor to have you, and I appreciate you called. He called. I don't know where he got my number, but I picked up. He said, I want to come over and see you. And that was my honor, and thank you very much for being here.
You're most welcome.
Thank you very much.
Well, thank you very much for welcoming us to this reformed White House. I've been here before, and it looks really fantastic. I must congratulate you.
Thank you.
But I also thank you for allowing our delegation. This is a very mixed delegation that you've got. We've got people from government, my ministers. I've got someone from the trade union movement who we really collaborate with, and from business as well, and our sporting legends. When I spoke to you, you said, yes, come along and bring Gary Player, bring Annie Els and Retief Goosen. I've brought the two of them. Gary Player, I spoke to him, and he said, look, I'm getting rather on in my years, but wishes us luck in this discussion with you. So it's a real joy. And I'd also like to thank you for allowing your people to start discussions with us at the trade level. I mean, we are essentially here to reset the relationship between the United States and South Africa. We are long-standing partners in many, many ways. We've collaborated in many fields, in space issues, in energy, and in trade, and we therefore need to reset that, particularly in the light of some of the announcements that you made on trade and investment. Right. So we want to advance more trade between the two of us, two countries, and our people now have been empowered by yourself and by myself to start engaging, and we hope that we will be able to fuel that engagement during our talks. And we also want to discuss issues that have to do with how we promote further investments in both countries. We've got about 22 companies from South Africa that have invested in the US, thus creating a number of jobs. And similarly, you've got almost 600 companies that have invested in South Africa, and some of them have been in South Africa for more than 100 years.
That's true.
So our links are really long-lasting, and we would like to recalibrate those relations between our two countries and discuss a whole range of issues, geopolitical, the work that you're doing to bring peace around the world, in Ukraine and in the Middle East. So we value that, and we are also a great contributor to peace processes that are going on around the world. And of course, we want to discuss how we can support each other. You are a much bigger economy than we are. We're just a tiny economy, but we rely on each other on a number of issues. We've got critical minerals that you want to fuel the growth of your own economy and reindustrialize. So we have that on offer, including rare earth minerals. So all that combination of opportunity and the products that we buy from you as well as what we sell to you, I believe makes up a really good and powerful relationship, which we need to strengthen, which we need to engender, and that is really what has brought us here. And we are really privileged to have, great South Africans in the mix. As you said, you'd like to see them as well. And I brought you a really fantastic golf book. Weighs 14 kilograms.
Oh, that sounds good.
And it showcases the golf courses in our country. Johan Rupert wrote preface, so did Annie Else. And I want to showcase our golf courses. You might remember when I spoke to you and we spoke about golf, you said I should start practicing. And I've started practicing, President, so I'm ready. But let me end just the introductory remarks by thanking you. You may not recall that 5 years ago I spoke to you during the COVID period.
Right.
And it was at a time when the whole world was going through a really cathartic moment.
Right.
And we asked for assistance, and you were able to assist us with respirators, and you kept to your word, and you delivered respirators to us. We didn't have as many in our country, and it really helped to help us deal with COVID. So I'm here also to say thank you and to thank the people of America for having helped us during a really difficult time. Being the small economy that we are, we needed help from around the world. And you were there to provide that. So thank you very much.
I remember the call.
Yeah.
We sent 150 respirators. We became the respirator king. We started making them. Nobody had them. We had very few of them.
That's right.
But they were very helpful. But we sent 150, and I appreciated the letter. You wrote me a letter.
That's right. Yeah.
I appreciate that very much.
Thank you very much for that. It really touched my heart after I spoke to you and you delivered. So,
great honor.
Thank you very much. Yeah.
Any questions, please?
Mr. President, we welcome white Afrikaner refugees here. Can you explain to Americans why it's appropriate to welcome white Afrikaners here when other refugees like Afghans, Venezuelans, Haitians have all had their protected status revoked?
Well, this is a group, NBC, that is truly fake news. They ask a lot of questions in a very pointed way. They're not questions, they're statements. We've had tremendous complaints about Africa, about other countries too, from people. They say there's a lot of bad things going on in Africa, and that's what we're going to be discussing today. When you say we don't take others, all you have to do is take a look at the southern border. We let 21 million people come through our border, totally unchecked, totally unvetted. They came from all over the world. In many cases, they're criminals. They come from prisons. They come from mental institutions. They come from street gangs. They're drug dealers. So don't say that we didn't take them. We take them. We're trying to get them out as fast as we can. And we're doing record business on that. And we just won a big case where we're allowed to send back hundreds of criminals to Venezuela. Just won that today in the Supreme Court. I'm happy to hear. But we do have a lot of people are very concerned with regard to South Africa, and that's really the purpose of the meeting, and we'll see how that turns out. But we have many people that feel they're being persecuted, and they're coming to the United States. So we take from many locations if we feel there's persecution or genocide going on. And we had a lot of people. I must tell you, Mr. President, we have had a tremendous number of people, especially since they've seen this. Generally, they're white farmers, and they're fleeing South Africa, and it's a very sad thing to see. But I hope we can have an explanation of that, because I know you don't want that. It's a kind of a different meeting. Normally we have meetings, we talk about trade, and we'll be talking about trade and other things. But that certainly will be a subject that comes up. Yeah. Yes, please.
Brian? Thank you very much. I'd like to get your thoughts on Letitia James, Director Polte. According to him, Letitia James says that the alleged mortgage fraud was simply a mistake. I want to get your thoughts on that. She put down that her father was her husband, in order? And this is very similar to, I guess, the false attacks they had on you.
Well, I don't know what it is currently, but Letitia James, who's the Attorney General of New York State, it seemed, I'm not involved in that at all. I know it's being handled by various groups, I guess, but it's major fraud, mortgage documents, and fraudulent everything. I think she said the father was her husband, which she had to have a husband, so she chose her father, and she put it down, and she had didn't she sign in Virginia, yet she said she lived in Virginia, yet she's the New York State Attorney General. She did that for tax reasons, so she could take advantage of taxes. And she had the wrong number of units. She had a much different number, which wouldn't have allowed her to qualify and scam the government. So I don't know. I think she's very bad for New York, but I really don't know too much about it, but I appreciate the question. Yes, Thank you very much. Yes.
Mr. President, what's it going to take for you to be convinced that there's no genocide?
Please.
Thank you, Mr. President. So May 25th will be the celebration of Africa Day, which pretty much a lot of celebration will be taking place around the world, including here in the United States. What is your message to the entire African continent, African people, in this important occasion?
Well, I want to see peace, and I want to see happiness. I want to see health, and you have incredible land. There's tremendous value. A lot of countries don't have that value in the land, the value you have. We have a situation, I think you probably heard about it. We've done, through some very talented people, helped settle a war that's been raging for years, Rwanda and the Congo. And I think we've done it. Believe it or not, I think we've done it. And could you just say a few words about that, my friend?
Yes. A couple of weeks ago, the two parties signed a declaration of principles in which they've agreed on the way forward. And they have both submitted their draft peace agreements. And we have put together one that incorporates both of their suggestions, and we've given it to them. So we're in the process of finalizing this peace agreement. Right? Looking very good.
We have to thank you for even those efforts, because the African continent, particularly SADC, our Southern African Development Community, has for years been seeking to foster peace in the Democratic Republic of the Congo. So all efforts, including those from outside the continent and inside the continent, are really worthwhile. We are removing our troops from there so that peace can then prevail in that whole area. And we hope that with the support of the international community, we will really have peace in that area. It's so vital, it's so important for the whole region.
Well, we sent our people there, and I think we did a very good job, as headed by my friend, and that was great. That was great. I mean, I'm just hearing phenomenal reports, because all I'm hearing is death, and they're chopping heads off, and it's horrible over there. And it was really brave of you to go there, and I really appreciate it. And it looks like we have something very, very substantial. We also talked about trade with them in terms of rare earth and all, but really more for it's like, if you take a look at what we just did with Pakistan and India, we settled that whole thing, and I think I settled it through trade. We're doing a big deal with India, we're doing a big deal with Pakistan, and I said, what are you guys doing? Somebody had to be the last one to shoot. But the shooting was getting worse and worse, bigger and bigger, deeper and deeper into the countries. And we spoke to them, and I hate to say we got it settled, and then 2 days later, something happens, and they say it's Trump's fault. But Pakistan has got some excellent people and some really good, a great leader. And India is my friend, Modi. And he's a
mutual friend.
Yeah, he's a great guy. And I called them both, and we just did something good. We're trying to settle Russia-Ukraine. We spoke with President Putin for 2.5 hours the day before yesterday. I think we made a lot of progress, but that's a bloodbath. 5,000 people are being killed a week, 5,000 soldiers a week, not including people in cities and towns that are also being killed. So we're trying to help And it doesn't affect us. It's not our people. It's not our soldiers. It's Ukraine and it's Russia. But if we can save 5,000 souls, we'll do it. We're pretty good at it. But that's a bad situation. That is a really bad situation.
Well, you'd recall when President Zelensky was coming to South Africa, that's when I spoke to you.
That's right.
We both agreed that we need to push the peace message so that there can really be peace. And we've been involved in the Ukraine-Russia conflict for quite a while through my Minister of State Security here. We've been dealing with them, the exchange of children who were taken away, going through names and addresses and all that. So we've been invested in that whole process as well. And the moves that you are making are fully supported by us because we would like to see the end of that war.
That's true. I called Zelensky and they said, he's in South Africa. I said, what the hell is he doing in South Africa?
He was talking to us.
We got to speak. I said, that's a strange one. I said, what are you doing in South Africa?
Yes.
That's a strange one.
He's trying to make peace.
He's doing something.
We were lucky because we had the great Nelson Mandela who taught us how to create peace, to make peace. So we were imparting some of those lessons to him, some of those learnings. And I specifically mentioned to him that this is how Nelson Mandela taught us that when you want to have a peace in a country, do it on an unconditional basis and sit down and talk. And that's precisely what I'm sure he's going to heed.
Well, we're going to see what happens with that one. There's a lot of hatred.
Yeah.
There's a lot of death. It's a bloodbath.
It is.
I get
unfortunately.
I get the satellite pictures of that field, of that killing field. Mm-hmm. You never saw anything like it in your life. It's horrible. It's a horrible thing that it goes on, but I think we've made big progress. Yeah, please, go ahead.
Thank you, Mr. President. Gaza,
not yet.
I wanted to ask Mr. President, what is that? From South Africa. What are you expecting on the ICJ case? Are you expecting South Africa to drop that? Is that what you tried to raise?
On which case?
The ICJ
the International
case
Criminal Justice.
International Criminal Court.
I don't expect anything, to be honest. I really don't. I don't know. It's they've got a case. There's a lot of anger there, tremendous anger. I don't expect anything. We'll see what happens. We'll have a ruling, and who knows what the ruling is going to mean. Yeah.
On that subject of Gaza, Mr. President, are you going to be speaking to Prime Minister Netanyahu about Israel's renewed offensive there? There's been a lot of concern from European countries. The Pope has expressed concern. Are you going to be asking Prime Minister Netanyahu to tone down the offensive in Gaza, to let more aid in?
Was that a question or a statement?
It's a question.
This guy's, you never change.
Mr. President, this time, what will it take for you to be convinced that there's no white genocide in South Africa?
Well, I can answer that for the President. It's for him. No, seriously.
I'd rather have him answer.
Yeah, I'd rather answer. It will be.
Our President will respond to you.
Yeah,
Thank you, Mr. President.
It will take President Trump listening to the voices of South Africans, some of whom are his good friends, like those who are here. When we have talks between us on the around a quiet table, it will take President Trump to listen to them. I'm not going to be repeating what I've been saying. I would say if there was Afrikaner farmer genocide, I can bet you these three gentlemen would not be here, including my Minister of Agriculture. They would not be with me. So it'll take him, President Trump, listening to their stories, to their perspective. That is the answer to your question.
But, Mr. President, I must say that we have, wait. We have thousands of stories talking about it. Sure. And we have documentaries, we have news stories, and that. Is Natalie here, somebody here to turn that? I could show you a couple of things, and it has to be responded to.
Yeah, sure.
Let me see the articles, please, if you would, and turn the lights down. Turn the lights down and just put this on. It's right behind you, Johan.
There's nothing this parliament can do. With or without you, people are going to occupy land. We require no permission from you, from the president, from no one. We don't care. We can do whatever you want to do. Who are you to tell us whether we can occupy land or not? We are going to occupy land. South Africa.
All right. The president is now apparently showing a video inside the Oval Office. President Trump is showing this to a room full here, including the president of South Africa, amid allegations of genocide against white Afrikaners. We're going to try to walk you through this as it happens. They're both sitting on the golden chairs in front of the fireplace in the Oval Office, having brought down the lights to watch this video. You can hear the audio, but it's difficult to hear exactly what they're saying here. We should note that Elon Musk, who has forwarded many of these allegations, is in the room right now. He's standing right behind Vice President J.D. Vance, who's seated on the couches, along with Howard Lutnick and Pete Hegseth, the Secretary of Defense. Let's let this breathe for a moment here. Live from the Oval Office on Bloomberg, something we're not likely to see very often, as President Trump hosts the President of South Africa.
Go after a white man. They feel a terrible pain because you have touched a white man. Not because Mashama and Sodi will not be touched. They will be touched.
This could go on for some time, I suppose. We're not going to bring you this in full because we can't verify exactly what it is that we're seeing. But apparently a multimedia presentation now in the Oval Office as the president tries to make a point here on genocide, saying earlier, we have had tremendous numbers of people, especially since they've seen this. Generally, they're white farmers and they're fleeing South Africa. And it's, as you know, a very sad thing to see, but I hope we can have an explanation of that, Donald Trump said, because I know you don't want that. That was, of course, a statement that drew a reaction from the president of South Africa, saying that it will take President Trump listening to the voices of South Africans, some of whom are his good friends, alluding to Elon Musk in the room. If there was an Afrikaner farmer genocide, he said, his agriculture minister would not be there. I'm Joe Matthew in Washington. Mike Shepard is with me as well as we watch this unfold, and we will bring you back to the Oval if this gets back to Q&A here. Mike, you've covered a lot of Oval Office meetings and a lot of visits from foreign leaders. This is something new, isn't it?
This is something new, seeing a video displayed like that, and perhaps in a way to shock or knock his visitor off course.
Yeah.
It started off quite differently. The tone was cordial, even chummy, as you and I were noting as we listened to it. The South African president seemed to hit all of the right notes with President Donald Trump. He talked about the partnership between the two countries. He expressed appreciation for the donation of respirators during COVID in 2020. He even brought a 14.5 kilogram golf book to the president. You can only imagine how big that is, Joe.
Noting the weight of this.
And then he talked about critical minerals, too, and touched on the peace process also in Ukraine. These are all subjects that are very dear to the U.S. president, and they seem to really try to set him in the right place.
Yes.
And strike a good
Seemed to be
tone
a
with them.
well-rehearsed presentation on his part.
Very much so.
A lot of smiles, a lot of congratulations. He talked about the golf courses, as you mentioned. He even took a bit of a swipe at Volodymyr Zelensky, saying that they tried to impart the lessons learned from Nelson Mandela on how to achieve peace.
Right, exactly. And Joe, remember Nelson Mandela in 1993 won the Nobel Peace Prize, something that we know that President Donald Trump has not so secretly desired.
Indeed.
And, you know, being able to achieve some sort of an end to the war in Ukraine and peace elsewhere certainly would, in his view, help his arguments and his case there. The South African president is also interested in diffusing any trade tensions that might be simmering between the two countries, as they are certainly with the rest of the world. And we've seen a number of nations step forward to try to negotiate those agreements with the U.S. China, of course, we saw the talks in Geneva, but other major trading partners, including Japan, India, South Korea, and even the European Union, are stepping forward with their proposals, their visions for how to reduce the tariff burden and maybe some of the other trade restrictions that the U.S. has talked about.
They're still watching this video in the Oval Office. It's obviously we have no idea how long this is going to go for, but this is an interesting use of time here for a president who brought the leader of South Africa into the White House For what exactly? Is this supposed to be a public shaming, or will there be other takeaways? Are they going to hammer out some kind of a trade deal?
It's a great question about where they are with trade, because we have not heard very much about talks being very advanced with South Africa. In fact, there have been a flare-up of tensions at the start of the administration, including over these unproved allegations of genocide against white farmers. And Trump has even altered refugee rules to restrict the entry of asylum seekers from many countries.
Now, I believe. Mike, let's bring him back to the Oval Office and listen live. This is President Trump again on Bloomberg.
States Air Force, which is a very nice thing. They also gave $5.1 trillion worth of investment in addition to the jet. Go back, you ought to go back to your studio at NBC, because Brian Roberts and the people that run that place, they ought to be investigated. They are so terrible the way you run that network, and you're a disgrace. No more questions from me. Go ahead. Go ahead, talk about that.
Please, may we have a South African
His name is Peter something. He's a terrible
If they're
reporter.
committing genocide, why invite them to the White House?
Quiet.
I'll be quiet. Sure, that's my question now.
Let's go.
Thank you so much, President Trump. Annika Larson from ENCA in South Africa. Thank you very much
Thank
for
you very
hosting
much,
us.
dear.
What would you like President Ramaphosa to do about the situation
I don't
just
know.
seen on the screen?
I don't know. Look, these are articles over the last few days. Death of people. Death. Horrible death. Death. I don't know.
But you know that
To
there
pick
are young
anyone,
people who are
white
dying
South
of-
Africans are fleeing because of the violence and racist laws. And this is all, I mean, I'll give these to you. So when you say, what would I like to do? I don't know what to do. Look at this. White South African couple say that they were attacked violently.
President Trump, when will you go and see for yourself if it is?
Well, I can do that. Look, here's burial sites all over the place. These are all white farmers that are being buried.
President Trump-
And he asks about a jet that was given. You ought to be ashamed of yourself. You know, you are so bad. You're such a bad reporter.
If they're committing genocide, why invite them? So if they are committing genocide, why invite the South Africans to the White House?
May I finish, please, President Trump? Mr. President
This
Trump,
is one after another. This family was wiped out. I'm just looking.
Can we get a
President
response from
Ramaphosa, can you give us your
Ramaphosa?
reaction to those videos, Mr. President?
President Trump,
Well, I think the videos are so. No. When you look at the videos, I mean, how does it get worse? And these are people that are officials, and they're saying that kill the white farmer and take their land. That's what it is. And I have other friends in South Africa. I have people that left. One in particular that says you can't go there. He said they want to take your land. They take your land and they kill you. It's okay, and they say it's okay to do. Now we're going to talk about it.
We're going to.
But this is a tremendous look. This is a story recent.
Yeah.
These are all people that recently got killed.
Yeah.
And I don't know how it can get any worse. These are. And you know, the men that you saw, the people that you saw in that movie, those are officials. Those are people that were in office. They had one march. They had a dance in your parliament, whatever you may call it, legislature.
But let me clarify that.
Yeah.
Let me clarify that, because what you saw, the speeches that were being made, one, that is not government policy. We have a multi-party democracy in South Africa that allows people to express themselves, political parties to adhere to various policies, and in many cases, or in some cases, those policies do not go along with government policy. Our government policy is completely against what he was saying, even in the parliament. And they're a small minority party, which is allowed to exist in terms of our constitution.
But you do allow them to take land.
No.
You do allow them to take land.
Nobody can
and then
take
when
land.
they take the land, they kill the white farmer. And when they kill the white farmer, nothing happens to them.
No, there is
nothing happens to them.
There is criminality in our country. People who do get killed, unfortunately through criminal activity, are not only white. Majority of them are black people. And we have now
The farmers are
utilized.
black. The farmers are not black.
We have
I don't
now-
say that's good or bad, but the farmers are not black. And the people that are being killed in large numbers, and you saw all those grave sites, and those are people that loved ones going, I guess on a Sunday morning, they told me, to pay respect to their loved ones that were killed. Their heads chopped off. They died violently. And, you know, I mean, we're here to talk about it, and I didn't know we'd get involved here. But I will say this, that if the news wasn't fake, like NBC, which is fake news, totally, one of the worst, ABC, NBC, CBS, horrible. But if they weren't fake news like this jerk that we have here, if we had real reporters, they'd be covering it. But the fake news in this country doesn't talk about that. They don't want to talk about it, but now they have to talk about it. But they won't. This won't even be a subject. They'll have him talking about why did a country give a free, think of this, why did a country give an airplane to the United States Air Force? Okay, the United States, not to me, to the United States Air Force, so they could help us out, because we need an Air Force One until that's Air Force One, it's being built. 2 of them being built. But Boeing's a little bit late, unfortunately. So why did they give us a plane to the United States Air Force? That's what that idiot talks about after viewing a thing where thousands of people are dead.
I'm sorry, I don't have a plane to give you.
I wish you did. I'd take it. I would take it. If your country offered the United States Air Force a plane, I would take it.
Okay. But coming back to this issue, which I really would like us to talk about, and talk about it very calmly. We were taught by Nelson Mandela that whenever there are problems, people need to sit down around a table and talk about them.
Well, there are
and this is precisely what we would also like to talk about, including, of course, trade matters, investment matters. So the issues that concern you as the United States,
those are all recent. Those are all deaths.
Yeah, in many ways, I mean, one should say you are a partner of South Africa, and you are raising concerns, and these are concerns that we are willing to talk to you about. Let me just add quickly, you know, the criminality that we are experiencing in our country needs quite a lot of technological capability. And in one of our areas in South Africa, we're using US technology, which is able to, in many ways, identify where shootings are happening and all that. And I'd like to talk about that, because there is support that we can get from you and the United States to help us deal with all these acts of criminality. And that is what I believe partnership is all about. And we are here as a partner so that we can help each other whenever there are challenges. So I'd like us to discuss it, and of course outside of the media, so that we sit down and have a really good discussion that will lead to good outcomes.
Are there any other further punitive measures that could be in place should you not be satisfied that South Africa is fixing some of the very bad things, in inverted commas, that you tweeted are happening?
Well, there are a lot of bad things happening in many countries, but this in particular has been very, very bad, very bad. And because of we're going to have the whole world watching in another short period of time, because you have the G20, and that's a big deal. And it seems like, I want you to look good. I don't want you to look bad.
Very good.
But we have hundreds of people, thousands of people trying to come into our country because they feel they're going to be killed and their land is going to be confiscated. And you do have laws that were passed that gives you the right to confiscate land for no payment. You can take away land for no payment.
I want to clarify that, because we have a constitution. Our constitution guarantees and protects the sanctity of tenure of land ownership. And that constitution protects all South Africans with regard to land ownership. However, we do say, because we've got to deal with the past, the government, and as your government also has the right to expropriate land for public use.
And you're doing that.
And we've never really gotten underway with that. And we are going to be doing so.
You're taking people's land away
we have not.
from them. And those people, in many cases, are being executed. Yeah. They're being executed. And they happen to be white, and most of them happen to be farmers. Mm-hmm. And that's a tough situation. I don't know how you explain that. How do you explain that? They're taking people's land away, and in many cases, those people are being executed. And in many cases, it's not the government that's doing it. It's people that kill them and then take their land, and nothing happens to them. But we have thousands of people that want to come into our country. They're also going to Australia in a smaller number. But we have thousands of people that want to come into our country, and they're white farmers, and they feel that they're going to die in South Africa, and it's a bad thing. Yeah, please.
What can South Africa do? What concessions would you like to see them make to improve relations with the United States? Then I have one more for President Ramaphosa afterwards.
Well, we just spoke about, I got them a very, very complex machine, 150 of them. I was asked by the president if it could help, and I did that. And, I have great feeling for all countries. I deal with all countries. But I have a great feeling for South Africa because I have friends. I have a couple of friends, a few friends here today. I have many friends from South Africa, but many of those friends are not, they can't go back. I have, Elon is from South Africa. I don't want to get Elon involved. That's all I have to do, get him into another thing. But Elon happens to be from South Africa. This is what Elon wanted. He actually came here on a different subject, sending rockets to Mars, okay? Yes. He likes that better. He likes that subject better. That's right. But Elon is from South Africa, and I don't want to talk to him about that. I don't think it's fair to him.
That's right.
But I will say that people are fleeing South Africa for their own safety. Their land is being confiscated, and in many cases they're being killed. And that scene of, you see how many crosses they have. Those crosses, that's a dead person in every one of them. And those trucks or cars are paying their respects to all of those dead people on a Sunday morning. That's a rough thing to explain away. And the problem we have, and the way, a correct and a fair media exposes things. But we have a very corrupt media. They won't even report this. If this were the other way around, it would be the biggest story. Now, I will say apartheid, terrible. That was the biggest story. That was reported all the time. This is sort of the opposite of apartheid. What's happening now is never reported. Nobody knows about it. All we know is we're being inundated with people, with white farmers from South Africa. And it's a big problem. Marco Rubio was telling me he's never seen anything like it. The numbers of people that want to leave South Africa because they feel they're going to be dead very soon. Yes, please.
I was going to say,
Brian, go.
If I could just ask you a question. 72% of farmers in your country are white. If they flee, do you feel that maybe the economy could collapse? You may not have a gap to fill in those people that need to replace those farmers.
I'd like my Minister of Agriculture, who is white, who comes from an opposition party to mine, who's joined my government at my invitation to address this very issue, including the question that you've just raised. John?
Thank you very much, Mr. President.
Yeah.
Mr. President, thank you for welcoming us to the White House. I would say we have a rural safety problem in South Africa. I don't think anyone wants to candy coat that. And it requires a lot of effort to get on top of it. It's going to require more policing resources. It's going to require a different strategy to be able to deal with it. But certainly the majority of South Africa's commercial and smallholder farmers really do want to stay in South Africa and make it work. And I've just come from the largest agricultural show in the Southern Hemisphere with organized agriculture and farmers, and the majority of them want to stay. But they too there have a memorial to those who've died as a result of farm attacks. And as the Minister of Agriculture, it is something that I'm particularly exercised with my colleagues at police and my colleagues in the justice cluster to start making farm attacks and stock theft a priority crime. And it affects all farmers in South Africa, particularly stock theft. It has a disproportionate effect on smallholder black farmers. I also want to just say this. that the two individuals that are in that video that you've seen are both leaders of opposition minority parties in South Africa. Mkhonto Wesizwe under Mr. Zuma and the economic freedom fighters under Mr. Malema. Now the reason that my party, the Democratic Alliance, which has been an opposition party for over 30 years, chose to join hands with Mr. Ramaphosa's party was precisely to keep those people out of power. We cannot have those people sitting in the union buildings making decisions. And that is why after 30 years of us exchanging barbs across the floor in Parliament and trying to get one over on each other, we've decided to join hands precisely to keep that lot out of government, because the day they get in to the doors of the union buildings in South Africa or control of our Parliament, that's what you're going to see. And that is why this government, working together, needs the support of our allies around the world so that we can strengthen our hand, grow our economy, and shut the door forever on that rabble getting through the doors of the union bodies, because then South Africa's future would be...
So you denounced that type of language in the video that you saw?
Oh yes, we've always done so. As government, as my own party, we are completely opposed to that. We, in 1955, adopted a document which said South Africa belongs to all who live in it.
But why wouldn't you arrest that man? That man said, kill the white farmers, kill the white farmers. And then he danced, and he's dancing, and it's kill the white farmers. I think, I'm not sure, but I think if somebody got up in Parliament and started saying kill a certain group of people, he would be arrested very quickly. That man is going all over South Africa, and that's not a small party. That was a stadium that holds 100,000 people, and I hardly saw an empty seat. That's a lot of people. That's a lot of representation. And those crosses, we have dead white people, dead white farmers, mostly. And you take a look at Australia. They're being inundated, and we're being inundated with people that want to get out. And their farm is valueless. It's valueless. And they just want to get out with their life. And this is a very serious situation. And if we had a real news or real press or media, we don't have that, because they won't talk about this, because they're all guys like that idiot. But if we had a real press, it would be exposed. And you know, the beauty of exposing it is it's like a cleansing action. When it gets exposed, it'll get fixed. That's when it'll get fixed. But people don't talk about it. And I'll tell you who's talking about the thousands of people that are fleeing South Africa right now.
We discussed USAID, the devastating impact the cuts are having across the African continent.
Yeah, well, it's devastating, and hopefully a lot of people are going to start spending a lot of money. And I've talked to other nations. We want them to chip in and spend money too. And we've spent a lot, and it's a tremendous problem going on in many countries. A lot of problems going on. The United States always gets the request for money. Nobody else helps, as you know. Europe doesn't help. Europe hasn't given anything. All they do is sue our companies. You know, they sue Apple, and they sue all of our companies. Apple had to pay $17 billion on a nonsense lawsuit. Very unfair. But we're going to always be there to help.
It's Sherwin Bryce with South African Broadcasting. If this Afrikaner resettlement issue is resolved, you're going to go into a room after this, you guys are going to talk. If it is resolved, what is the potential for the future-looking relationship?
It's fantastic. It's got to be resolved. It should be resolved. It's a little bit bad when you see a stadium with 100,000 people in it, because that means it's more than just a little movement. It's a pretty big movement in South Africa, so it has to be resolved. It'll be the end of the country if it's not resolved.
But is there potential for the relationship moving forward?
I hope so. That's why I'm here. I mean, I'm not here for my health. I'm here to see if we can do something. No, I'd like to see. I have friends. I can tell you, Ernie Els and Retief Goosen, they feel so strongly they wanted to be here on behalf of South Africa, not on behalf of me.
Yes.
And, you know, they said, can we be here for this? Because they love the country. Ernie, do you guys want to say a couple of words or anything? I hate to put you in this. This is tougher than sinking a 3-footer. They've sank many 3-footers.
Thank you, Mr. President.
thanks for the honor of being here. We've known each other a long time. We have spoken. You know, we're proud South Africans. I still have my South African passport. You know, we travel with this passport, you know, and I got my visa here. So, you know, but we want to see things get better in our home country. That's the bottom line. It's been 35 years since the transition. President Ramaphosa was right in the middle of the transition time in 1990 and before that. So it's been 35 years of ANC government. And I know there's a lot of anger, you know, through the transition. There was also a lot of stuff happening in the apartheid days. You know, we grew up in the apartheid era. But I don't think two wrongs makes a right. You know, President Mandela, when he came out of prison for all that time, didn't come out with hatred, you know, and really unified our nation through sport. You know, we won the Rugby World Cup in '95.
4 times.
We won the African Nations Cup, soccer. You know, we won some majors as golfers and so forth. So what I'm trying to say is, you know, this has been a long time coming. That's why we really wanted to meet you, meet the administration, and see our way forward, because we still want to see our country flourish. You know, we've got some great things going on. Business is getting involved with government. Farmers are getting involved in local municipalities, trying to rebuild some of the infrastructure that's been decaying for a long time. So there's a lot of coexistence going on and help from a lot of areas.
It's golfer Ernie Els speaking now live in the Oval Office, having heard quite the back and forth here. A remarkable event in the Oval Office between President Donald Trump and the President of South Africa, invited to the White House, interestingly, amid allegations by President Trump and Elon Musk, who is also in the Oval Office right now, allegations of genocide. A word that was used openly and repeatedly in the Oval Office against white farmers, Afrikaners, some of whom have been given refugee status here in the United States. I'm Joe Matthew in Washington alongside Kaylee Lyons here on Balance of Power on Bloomberg TV and radio. A pleasure to welcome our global television audience to the conversation. Kaylee, the optics of what we just witnessed here, and we're going to hear the word ambush, I suspect, against the South African leader, who clearly was watching tape on Volodymyr Zelensky in the Oval Office and came prepared to try to compliment and dazzle President Trump. We will go back to the Oval Office if this goes back to a conversation about genocide or actual policy here. But the president actually played a video to everyone in the Oval Office, including President Ramaphosa. Unclear exactly what that video was purporting to show. I guess genocide against white farmers, if you ask President Trump, but apparently was the leader of another political party, and we cannot obviously back up any of the claims that the president is making today.
Well, we also should point out that when asked by President Ramaphosa where in the video exactly in South Africa this footage was coming from, President Trump just said simply it was in South Africa without getting into specifics. We also should note these claims of genocide that have been propagated by both President Trump and Elon Musk are unsubstantiated, though they do, of course, have made a lot of noise about what they say is the persecution of white Afrikaner farmers in South Africa. To your point about Ramaphosa perhaps conducting himself differently than we saw with Ukrainian President Volodymyr Zelensky, he, of course, has not yet raised his voice with President Trump necessarily, though he did say at one point that it should be evidence to President Trump that this is not actually the situation in South Africa, that his agricultural minister is there in the Oval Office, part of this delegation with him, who happens himself to be white Afrikaner.
Yeah, that's correct. The ag minister said the majority of South African farmers, in fact, want to stay, taking issue with some of the reports. President Trump actually had hard copy of newspaper front pages, presumably, or online stories that he had printed out a stack of them and handed them over to the South African president, repeating death, death, he said, going through each of them, horrible death. This is clearly a meeting that's not done. And as we mentioned, we'll return to that if we have the opportunity, if we hear from the president again.
And we want to get more on this now with Bloomberg's Michael Shepard, who is here with us in our Washington, D.C. studio. Mike, obviously, in addition to the claims of genocide, there were other substantive topics that we expected to be on the agenda today for this meeting between Ramaphosa and President Trump, including perhaps South Africa's stance toward Israel. Also, trade, knowing a 30% reciprocal tariff was slated to go into effect against South African goods, which, of course, is now subject to the 90-day pause. But that's expiring in July.
You're right, Kaylee. We would have expected more of this conversation to actually focus and be dominated by those key issues of commerce between the U.S. and South Africa. And at the start, we even heard Cyril Ramaphosa talk about this. He talked about critical minerals, obviously an area of key interest to the president. And of course, South Africa is eager, like so many other nations and trading partners, to escape the U.S. tariffs, or at least feel the minimum pain possible from U.S. import levies through negotiations with the administration. But the negotiations that were carried out just now in the Oval Office were about something else entirely, and it was very much a one-way conversation. At one point, the South African president respectfully said maybe we should usher the press out to discuss this issue more fully in private so you could hear our view without the press present. And the president just kept going and pressed his point on the unsubstantiated claims of genocide against those Afrikaner farmers.
He's been listening and watching along with us. Bloomberg's Mike Shepard. Thank you so much, Mike, for the real-time analysis. One thing we have not been talking about as a result of this Oval Office visit and the meeting with the South African president is what's happening on the other end of Pennsylvania Avenue. And in fact, President Trump, we learn, will be meeting with members of the House Freedom Caucus about the tax cut and spending cut bill, the reconciliation process that's underway right now in a Rules Committee hearing. Kaylee, we're now, I believe, 12 hours into that process, and a lot of questions about whether we will see a floor vote on what the president calls one big, beautiful bill. Much of this hinges on a deal around raising the SALT cap, and that's why we're really glad to be joined by Congressman Mike Lawler. The Republican from New York is with us now live from Capitol Hill. And Congressman, we really appreciate you being so generous with your time and waiting for the president to wrap at least this part of the conversation in the Oval Office. There is news of a deal on SALT, a $40,000 cap. If that's real, Congressman, you managed to quadruple the current cap. Is that the kind of bacon that you can bring home?
Look, this was a critically important negotiation. I was very clear for over 2 years that I would never support a tax bill that did not adequately lift the cap on SALT. We put pen to paper yesterday, met with leadership, worked throughout the course of the day to come to an agreement that would lift the cap on SALT and provide real and immediate and lasting tax relief for hardworking middle-class families. The agreement would lift the cap to $40,000 with an income cap of $500,000 that would be phased out, and anyone making above that would go back down to $10,000, which is the current cap, and it provides for the entirety of the 10 years of the bill, which is critically important to make sure that folks are getting real relief. You look at a district like mine, 3 of the top 4 of the 4 counties I represent are in the top 16 highest property tax counties in America. So when we talk about these issues, this isn't about the rich. This is about providing tax relief to middle-class families who are besieged by high property taxes and high income taxes. And many of my colleagues will say that a lot of people don't itemize and they don't take the SALT deduction. Well, that's true because we doubled the standard deduction, and part of the pay for doubling that was SALT. And so we're seeking, after 7 years of having this $10,000 cap, to provide real relief to the middle class, and that's what this is about.
So, Congressman, should we take that to assume, with the terms of this deal, that you are now a yes on this legislation? And assuming you are you aware of any member of the SALT caucus who is not yet to yes with you?
I think the members of the SALT caucus, negotiated yesterday in good faith with leadership, with the administration, and we settled on something that we believe in, that we support. Obviously, we're waiting for the final details to emerge out of the Rules Committee, but obviously we made great progress yesterday, and I feel much better about where the bill is as a result.
There does seem to be some growing optimism over a possible floor vote as soon as today, Congressman, maybe tomorrow. I know the Speaker wanted to see it happen by the Memorial Day break. Will that be the case?
I know the administration and leadership are working to get that done, meeting with members today. Obviously, that time frame is something the Speaker set out to achieve. The objective here is to get the bill passed, ultimately to take effect, to make sure that we are providing real tax relief, that we are securing our border, that we are strengthening our military, increasing domestic production of energy, and protecting vital programs like Medicaid long-term, and cutting out the waste, fraud, and abuse, and making sure that illegal immigrants, for instance, are not receiving benefits, and taking away from the very people who rely on these programs, like the IDD community or our seniors or children. We want to protect this for the long term, get our fiscal house in order while providing real tax relief. That's what this bill is about. We've been working on it for months. Obviously, anytime you're negotiating, there's going to be give and take. There's going to be a back and forth. You work through these issues and come to an agreement. And, as I've said many times, anybody who's ever been married knows you're going to have to find compromises along the way. You're not going to get everything you want in life. So you've got to work through this, and that's what we've done in good faith.
Well, and it's not just compromises within the House Republican conference, but there also may need to be compromises made between the House and Senate, which will take up this measure next, assuming it can get off the House floor. Congressman, has the Speaker shared with you any assurances that the Senate will not make changes to the SALT deal that he just negotiated with you and your colleagues?
This obviously has been a big topic of conversation, and I'll keep those conversations private, but I certainly know that the Speaker understands how important it is that this agreement remain intact.
I want to go back to the case that you made for raising the SALT cap in the outset, Congressman. We heard from Chip Roy, of course, a loud member of the Freedom Caucus, who I understand is going to be meeting with the president later on today. He suggested that leadership is buying, quote, a handful of seats with $350 billion in parochial tax subsidies in the form of SALT. Is it possible to have a conversation with someone who holds that point of view, or are you counting him out?
Listen, I respect all my colleagues and their perspectives. The fact is, New York is a donor state. We send more money down to Washington than we get back. So we can get into the subsidy debate about which states are taking money from the federal government and which ones are actually helping fund the federal government. But the fact is that New Yorkers should not be double taxed. They should not be penalized for living in a high tax state. SALT was in effect for over 100 years, and it was used as a pay-for. And frankly, part of that pay-for was to double the standard deduction and provide tax relief to Americans all across this country. We're just simply saying, after 7 years of the $10,000 cap, which was arbitrary and capricious, that we need to have a much fairer approach. And that's what we have negotiated. Everybody has understood this for well over 2 years. I ran on this. I fought for it. I said it very clearly from the moment I came here that I would never support a bill that doesn't adequately lift the cap on SALT. We have been working to negotiate to an agreement. And so that's what we've done, and I stand by it.
Well, and of course, you and your fellow New Yorkers who have helped make the Republican majority have made the case that if that majority is to be retained, there needs to be changes to SALT. But as we look ahead to 2026, if the other side of this, getting what you want on SALT, is conservatives also getting a pulling forward of stricter work requirements around Medicaid to begin in December of 2026, as we understand, does that not put the majority at risk for a whole other reason? How do you navigate around that issue in the midterms?
Well, look, at the end of the day, I think there's broad consensus within the conference on a few key areas. Number one, eligibility verification, making sure that somebody who is not eligible doesn't remain on the program for up to a year, which is what the Biden administration allowed. Citizenship verification, making sure that illegal immigrants are not receiving benefits that they're not entitled to. And work requirements. Able-bodied adults without dependents should be trying to work. I mean, you're talking about 80 hours a month of work requirements or educational requirements or volunteering. Anybody who is able-bodied should be trying to improve their life by working. The fact is, Medicaid is a means-tested program. And so as part of that, you are trying to help lift people up, lift them out of poverty, lift them out of their situation. Work requirements are something Democrats fought for years. Bill Clinton was the biggest champion of work requirements. So I don't think the issue of work requirements speeding up from 29 to 27 is frankly an impediment. I think there's broad consensus that we should be trying to help people lift themselves up. Work requirements is a way to help facilitate that as we are providing them with support through Medicaid.
All right, Congressman, we appreciate you joining us here on Bloomberg TV and radio. Republican Congressman Mike Lawler of New York with us live from Capitol Hill, focusing, of course, on the issues that have dominated the conversation in the halls of Congress, the SALT cap and Medicaid. And that doesn't just go for the Republican side of the aisle, but Democrats as well. We spoke actually yesterday with a Democrat, the ranking member of the House Energy and Commerce Committee, Frank Pallone, on the late edition of Balance of Power about some of these issues. And this was the take that he gave opposite the congressman's we just heard.
Raising the SALT limit or getting rid of the cap altogether would certainly be a good thing, but it doesn't outweigh all the other problems with the Medicaid cuts and people losing their health care. So, again, the focus on SALT, I think, is misplaced because the real problem here is that most of this money is going to, for tax cuts for large corporations and billionaires, and all these cuts to Medicaid and health care are being used to pay for it.
We know that as ranking member on the committee, you helped to lead the charge on what I believe was a 26-hour-long markup of this legislation a couple of nights ago. Congressman, the Congressional Budget Office says more than 8 million people will lose their health care as a result of the bill that passed through Energy and Commerce, your committee, last week. I don't know how many people in Metuchen, New Jersey that impacts, but is your fight here done, or is there another lever that you can pull?
No, the fight is not done. First of all, these numbers keep going up because the bill does not address the ACA subsidies and renew the Affordable Care Act subsidies on the exchange and marketplace. CBO actually estimates now that 13.7 million people will lose their health care between their health insurance, between Medicaid cuts and the ACA not being renewed, and that number keeps going up. I mean, the Congressional Budget Office just put out a new report today saying that, basically saying that there would be $700 billion in Medicaid cuts and another $100 billion in ACA cuts. And you have to remember, Joe, that the Republicans said they weren't going to cut Medicaid, and it's simply not true. I mean, that's exactly what they're doing to pay for these tax cuts.
Democratic Congressman Frank Pallone talking with us on the late edition of Balance of Power to bring you the view from the other side of the aisle here, remembering this is, of course, an entirely Republican exercise because it is reconciliation we're talking about. I want to add the voice of another Republican. Congressman Kevin Hern of Oklahoma joins us now live from Capitol Hill amid the swirling debate over tax cuts, spending cuts. And as we just heard, Congressman, welcome back to Bloomberg TV and radio. Congressman Pallone talking about Medicaid cuts. And I know that there's been some evolving rhetoric around this. A lot of Republicans see this not as a cut, but as making the program more efficient and, in fact, work better. There was a time when you were known as the Mick Congressman. You owned, I believe, nearly 20 McDonald's franchises in the Tulsa area. How do you make that argument to an entry-level worker at McDonald's?
Well, first of all, thanks for having me. And it is, obviously both sides are talking about what's in the bill. I would argue that the Democrats are trying to do everything they can to make America afraid. But here's the reality. The reality is the waste, fraud, and abuse in Medicaid, as the president has talked, and I support everything he's talking about. He has said explicitly, do not cut the benefits to the American workers, the people who need Medicaid out there. He said it again yesterday. He said it in the press. He has not mixed words about this, and so he wants us to go after the people that are legally on Medicaid, and wants us to look at work requirements for those who are able to work, that don't have dependents, and that's going to make the Medicaid program more solvent. But we also know that the Medicaid program is probably the one area of government benefits that is going to explode and is exploding right now in exposure and cost that's going to be required to keep it afloat into the future.
Well, so if that is the case, Congressman, are we talking about long-term solves here with these measures, or does something more substantial need to be done? Do the members of the Freedom Caucus actually have a valid point that they're making?
Well, the only way that there's going to be anything that's going to make all of our programs, Social Security, Medicare, and Medicaid, solvent for all of those into the future is to come together in a bipartisan way. This will never be done in a reconciliation process where one party has control of the House, the Senate, and the White House, whether it's the Democrats or Republicans. There just will not be enough willpower to make that happen, because everybody knows to do it unilaterally, the other side, as you're seeing with the Democrats, will demagogue it so badly that nothing will get done. And that's why you're seeing that if we don't do anything with Social Security and Medicare, sit down together in a responsible way, Democrats, Republicans, then in less than 7 years, there's going to be a 21% across the board cut. And so we have to come together to work on these programs to make sure that they're solvent for those who deserve them.
I know this is still tied up in the Rules Committee as we speak, Congressman, and there's no sign of this hearing coming to an end while we're talking today, but there's an expectation that we'll see a floor vote as soon as tonight, maybe tomorrow. Do you hear that that's the case? Is that what you're planning for, or could this be an extended working weekend, maybe into the holiday for your caucus?
Yeah. So as part of leadership, I can tell you right now, it has been our mission to get this done before Memorial Day weekend, which, tonight's the night we're going to make this happen. Right now, as you mentioned, the amendments are being debated in the Rules Committee that started meeting at 1 a.m. this morning. And I think what this has proved, whether it's last week's markups, we're going to work day and night to make sure that America's taxes remain low. President Trump's fingerprints are all over this, starting with the 2017 Tax Cuts and Jobs Act, making that permanent. The tax cuts he's doing for the working class, upwards of $2,000 in additional taxes that will not be taken from our people making, working on tips or working in overtime. So all of these things are important, and including reducing the tax burden on our seniors by some $500 to $700 per year. All of these things the president has done. This is not about giving tax cuts to the rich, as the Democrats are wanting to use a talking point from 7 years ago. This is about making permanent. You all report on business outcomes. There's not a business person in America that says by me keeping my taxes where they are, that somehow that's going to cost the federal government. Only in the scoring of the Congressional Budget Office does that actually cost money.
Well, Congressman, you are right. We do focus on business outcomes here, and we also know that there are businesses that were counting on tax credits and other subsidies in the Inflation Reduction Act that may be rolled back now. You actually told our colleagues on Capitol Hill earlier today that it's your understanding the Freedom Caucus is going to try to talk to the White House about clawing back tax credits from existing projects. Can they do that? And is that something not only do you expect the House conference is willing to support, but would the Senate get behind an initiative like that?
Well, I don't know about the Senate, but that's my understanding. That's been reported that they're wanting to look at projects that have already been connected to the grid that are not yet complete, or are still being in work in process, and then having those costs borne by the ratepayers. That's if somebody has to pay them, and the way our utility system is set up, the commissions or the oversight groups of each state would be, those public utilities would be able to go back to the ratepayers to be able to make up for that, instead of the federal government paying, somebody in Oklahoma paying for a grid system in, say, Kentucky or somewhere. And so I don't know what the final details of that are going to be. They wanted to go to the White House to talk about this. So my assumption is that they're on their way over there to get support from the president on this. Again, this is really important part. It's a very, should that happen, it would be, I think it's $300 to $400 billion in possible scoring that would be additional savings. In Ways and Means, because we did all of our stuff working together, not, trying to work through these and hash out. We had a lot of dialogue. We have, folks from, very rich coal country. We have folks from oil and gas states like myself. We have people that have been in business for a long time like myself, and we've had others that have been in state politics that understand how these green credits work and how they, how they're important to states generating jobs and, encumbered by debt and equity situations. So all of this was fleshed out. That's why we came to $515 billion in saving on the green credits by shortening the phase out time, but still allowing for people that had projects going to be able to utilize those.
All right, Congressman, we appreciate you joining us here on Bloomberg TV and radio. Republican Congressman Kevin Hurd of Oklahoma here with us on Balance of Power as we continue to follow the movement on Capitol Hill toward trying to get to a vote on budget reconciliation. We're also following the markets. I would note we did see at the top of this hour a 20-year auction that tailed weak demand, and that has sent Treasury yields materially higher. We're now up 11 basis points on the 30-year to 5.08%, and you're seeing a subsequent move in equities as well. The S&P 500 has rolled over in a big way, now down about 1.3%. We'll get more on that with our colleague Charlie Pellet in New York in just a moment. But first, we want to check in with our political panel who is joining us today. Kristen Hahn is with us, partner at Rock Solutions and Democratic strategist, alongside Republican strategist Lisa Camusa-Miller, former RNC communications director. Welcome to you both. As we consider what is happening in the markets right now, especially in the bond market, may be tied to what's actually happening with fiscal policy. So it's great to get your perspective on the direction that this is really heading. Lisa, do you expect that this package, with the changes the speaker is negotiating, either has finalized with the SALT caucus, perhaps still working on the conservatives, can have a vote this week?
Haley, it really feels unlikely. It feels like everything that I'm seeing, every indication that I'm hearing, there's a movement from leadership that really wants to get this done by the week's end. The president is obviously asking for the same. But the Freedom Caucus has said that they do not feel like a vote this week it makes good sense. They feel like it's an arbitrary deadline. And so it feels to me like there are just far too many factions still undecided that would get us through and get this done. This is Wednesday. We still have a rules package. We don't necessarily have that through the Rules Committee. And then that goes to the floor and then more debate happens. So while the movement continues to go and advance itself, it doesn't necessarily, to me, at least right now, feel like it's likely to happen before the end of the week.
You've seen a couple of these, Kristen Hahn. What's your take? Because we spoke with a very optimistic Mike Lawler at the top of the hour. Chip Roy sounds exactly the opposite. Unclear if the president can change moods today. Is this bill gaining momentum or is it slowing down?
Well, I mean, I think Mike Lawler has a reason to be happy right now. So he's coming out of a very positive meeting. Meanwhile, a lot of his colleagues are not. So, I agree with Lisa. I think that, this is, the legislative process. Although I really do think that the president and the House Republican leadership, I mean, if I were in one of those tough seats to hold on to as a Republican, I would be very wary of taking a vote on a bill like this because it's going to come back to haunt them.
Well, and when we consider what will come back to haunt whom, and the positioning of President Trump specifically here, Lisa, who obviously would like to see a Republican majority maintained to the extent, and he wants to see this package, perhaps first and foremost, passed by Congress. He went to Capitol Hill yesterday to make the case. We understand he'll be meeting at the White House this afternoon with the Speaker and holdouts in the House Freedom Caucus. Is he able to convince them today of what he couldn't yesterday, or is he losing his power to exercise complete control over the Republican conference?
I think, Kaylee, I've said this before, and I continue to assert that this is a system where, in order to get what you want from the White House, in order for the White House to get the Congress to move, they have to have an agreement amongst the parties about how the parties of those, the Congress and that White House, agreement on policy issues. The president has the tariffs that are still overweighing and leaning over a lot of these districts where they're already feeling the pinch and already feeling the pain. And I think the difference between what the president is asking for and what the Freedom Caucus is looking for is still very, very far apart. So as much as the president's going to tell them to do whatever they can, they also know that when it comes down to midterm elections, the president is not going to have as much of a sway as he once did, because he is, in fact, in the second half at that point of his term, and it will make him less and less powerful. So over time, the president will have less control and less opportunity to really influence those members, because they, in fact, are really trying to defend their seats and stay in power. And also, they need to go home in just a few short weeks to defend their decision and defend this vote. And that, to me, would be the one thing that stands in between the president being successful and those members in those tough districts taking a vote that they won't necessarily be able to defend when they return in the summertime to their districts.
Kristen, if Democrats don't have a seat at the table, and they don't by the nature of reconciliation, this is a Republican-only exercise, are they scheduling town halls for this Memorial Day break to try to shine a light on what's happening here? We know that Republicans have been wary of doing so based on the DOJ, based on Medicaid. What are Democrats going to do when they go home?
I think it's interesting that you asked because, yes, I mean, the short answer is yes. And I know I was in touch with some friends over in the House yesterday about the extent of those plans. And it's not just going home to their own districts to talk to their constituents about what is happening and what this bill actually does, specifically with regard to Medicaid cuts. But they will be pointing those things out in these Republican districts as well. So the identified areas where this would particularly hurt some of these Republican districts, making sure that their constituents know, what at least this House bill is doing. And as we all know, this bill, if and when it does pass the House, is going to go over to the Senate, and there are going to be, a multitude of changes to this bill. So I think, when these members go home, they're going to have a number of things to answer for, particularly as these cuts begin to take place if the Republicans are ultimately successful.
Well, and they may have to answer a lot of questions about the impact this is ultimately going to have on the deficit and the long-term burden that the United States and the people within it are saddled with. Lisa, that seems to be what we're seeing evidence of in financial markets today, in the bond market especially, as we're seeing yields rocketing higher on both the 10-year and the 30-year. We're up more than 10 basis points. And we have seen President Trump in the past, granted it was related to tariffs earlier this year, take a look at what's happening in the bond market, identify what he saw as queasiness, and decide to change his course of action. If we are seeing material upset in financial markets, once again, over this legislative package that he campaigned on, that we know he wants very badly, would you expect any kind of similar change of heart, or is this already largely done and dusted?
It's really hard to tell, Kaylee. It does feel like he is, while he is saying, damn the torpedoes and let's go forward, the president also is mindful of the fact that if the market takes a hit, or if there are shifts in the underpinnings of the market, that he very well will adjust, because he doesn't necessarily want to have to answer for that, because he knows that those kinds of signs are signs of long-term pain and not short-term pain. And that's the other thing that I think he will be watching for, and his advisors will be watching for. But ultimately, Kaylee, he wants a win so badly. He wants this big, beautiful bill, one big piece of legislation, which, good golly, I'm as old to know. I mean, the last time we did that was in 2010 when we passed the Affordable Care Act. So it's been a long time since we've had a great, big, giant bill get passed in the Congress in the way that the White House wants to see it done. But, if anybody's willing to take the shot and take this unprecedented stance and way to move, it'll be Donald Trump.
Kristen, it's interesting as we consider what we're seeing in the bond market here, the concerns on Wall Street across the board about rising debt and deficits. This is something that the party in power frequently loses religion on. But it's going to be hard for lawmakers to hide from what's happening in the markets when it's right before our eyes like this. Was extending the current policy baseline the original sin in this process? How come we're not arguing about how to pay for it?
I mean, I think I do think so. And I think that you're exactly right. The reason why we're not arguing about how to pay for it is because you've got one party control in Washington. They want to extend these tax cuts, and it's very, very difficult to do that if you're looking at actually paying for it. So it's easier to saddle future generations with that debt. And I know it's people, who are in the minority party generally get religion on this and talk about saddling future generations, but it really is, and it has real impacts on our national security. And, you look at the CBO scoring, and you're going to hear a lot about from Republicans as they come out in support of this bill, talking about dynamic scoring and all of these things. I mean, it's a tale as old as time. At the end of the day, I do agree with the congressman that both sides are going to have to get together and figure this thing out. But as long as there's one party control in Washington, it's not going to happen.
The CBO says this plan would increase the deficit by $2.3 trillion over a decade, something that the market is looking at very closely here. The 30-year now soaring above 5%. After this 20-year auction, it's something that Charlie Pellet has his eyes on, and we want to update the markets with thanks to our panel, Lisa Camuso-Miller and Kristen Hahn. A great conversation. Charlie Pellet is live at World Headquarters in New York. This is fallen apart pretty quickly here, Charlie. What are you looking at?
Absolutely right about that, Joe Matthew. Indeed, since our last update, a dramatic turn lower and a dramatic shift in sentiment with the Dow, the S&P, Nasdaq all in the red. Treasury yields jumping after a weak $16 billion sale. We are seeing concern about a ballooning deficit, also America's status as a safe haven. Right now, we have got the S&P down 60 at 58.79. That is a drop now of just about 1%. The Dow lower by 1.5%. A lot of red, down 659 right now. The Nasdaq Composite Index down 157, down 0.8%. The Nasdaq 100 Index down 0.7%, but cannot ignore the move lower in the Russell 2000 Index. Small cap shares tumbling now 2.2%. The Bloomberg Mag 7 Index down by 0.4%. Your 10-year 4.57%. The 2-year 4.01%. Joe mentioned the 30-year 5.06%. Spot gold up $20 the ounce, up 0.6%. West Texas Intermediate crude down 5.10, 61.70 a barrel on WTI. And we absolutely cannot ignore the surge in Bitcoin today, up by 0.4% right now, but a $107,000 handle on Bitcoin, 107,460. Indeed, we are looking at a record today for Bitcoin. So recapping here, Treasury yields are jumping, 10-year 4.57%. Stocks are selling off, S&P down 52, a drop there of 0.9%. Balance of power continues right now. Back we go to Washington. More on the markets coming up. Once again, let's go back to Joe Matthew and Kaylee Lyons.
All right, Charlie, thank you so much. Real-time updates on the markets every day here on the fastest show in politics. Thanks for being with us on Bloomberg Radio, on Bloomberg TV, and Bloomberg Originals as we spin a couple of plates here, frequently the case on this program, straddling both ends of Pennsylvania Avenue, with not only the debate that we've been talking about over reconciliation on Capitol Hill, but Kaylee, an important visit to the White House today. We're going to be talking with Patrick Gaspard about a bit later on. The president of South Africa is in town. We've got to spend a little more time on these markets, though, because we've seen a wild turn since we came to air today.
Well, yeah, and it's hard to extract the stories we're tracking here in Washington from the stories that Wall Street is tracking. I mean, even in the case of what we saw go down between the South African president and President Trump, you're seeing the rand moving off the back of that. And certainly, as we track what's happening on Capitol Hill, bond markets are taking note of the potential fiscal situation we could find ourselves in if this one big, beautiful bill passes. And that was evidenced by weak demand in a 20-year auction. That tail sending yields higher, as Charlie was just running us through. We're now well north of 5% on the 30-year to 5.06%. And on that note, we turn to Mike Regan joining us from New York. He's Bloomberg senior editor, helping us keep track of these markets. Mike, we've seen before the bond market getting quote unquote queasy, if you will, to use the words of President Trump. At that time, it was over concern about reciprocal tariffs. This time, is this really all about what's going on in Congress?
I think it's a big part of it, Kelly. Obviously, you know, we also have basically the first big auction since the Moody's downgrade of U.S. sovereign debt on Friday, really eliminating that last AAA rating on U.S. bonds. And so hard to say if it's directly related to that, but certainly all the concerns that Moody's brought up, the fact that the deficits appear like they will get even bigger and bigger, especially if the 2017 tax cuts are extended, and that not only are the deficits getting bigger, but the interest rates to fund these deficits in the bond market are higher than they have been in many years. And that obviously just makes government borrowing much more expensive. And to your point, it was exactly that, what's known as a tail on Wall Street in the bond auction. In other words, this 20-year sale, $16 billion in 20-year debt, was auctioned at a higher interest rate than what was suggested in when issued trading before the auction. At the yield came in at 5.047%. So really only 1 basis point above when issued, but not a good sign as far as demand goes when you see an auction tail like that, especially at these elevated rates. There was some hope that this rate above 5% might draw in some demand for this 20-year issue, but not as much demand as the market had hoped. And really a pretty sharp cross-asset reaction to that. Not only yields spiking across the Treasury curve, equity markets extending losses, paring some of them back, but we're still looking at about a 1% drop in the S&P 500. As far as Bitcoin, it had reached that record earlier in the day, still marginally positive for the day, but back about $1,000 or $2,000 below that record. So at least from a knee-jerk perspective, the markets are not taking this auction today very positively.
Mike Regan, I'm confused because we saw all of this coming, didn't we? President Trump ran on extending the Trump tax cuts. There were estimates that it would add trillions to the deficit going back months ago, long before the election. He also ran on tariffs. He said it was his favorite word, the best word in the dictionary. Both of them hit after the election. We ran up in stocks, and now somehow we're disappointed that it's actually happening, or surprised. Shouldn't the market have been pricing all this in?
Yeah, Joe, I think the market sort of discounts what Trump is promising and what they believe will actually happen. What will be politically feasible for him to accomplish. And certainly, we've heard from a lot of investors who did not believe the tariff, the trade tensions would be as sort of acute as they've proven to be. And there's always a question of, well, Trump wants to do this. What does Congress, what are they willing to give him? Regardless of the fate of this bill, the big, beautiful bill being negotiated in Congress, it's becoming pretty clear that we're not going to be looking at a sharply reduced federal deficit, regardless of what Congress agrees on. At least that's the thinking in the market right now. And I think, just those bigger deficits mean more debt at these higher interest rates. It's just a lot for the market to swallow right now.
Great conversation, as always, with Mike Regan. Thank you for jumping on with us, Mike, with a real turn in the markets here following this 20-year bond auction. We'll keep tabs on this for you, of course, throughout the day here on Bloomberg. I'm Joe Matthew alongside Kaylee Lines in Washington. And on any other day, what took place today in the Oval Office would be our lead story. It's one of many at the moment, as the president of South Africa, Cyril Ramaphosa, arrives at the White House amid allegations of genocide put forth by President Trump against white Afrikaners, in many cases white farmers, some of whom have been given refugee status here in the United States. It started off as a cordial conversation. The president then started to dig into these allegations, going so far as to even show a video with unsubstantiated claims of this persecution. The South African president was given a chance to speak. Here's what he said.
It will take President Trump listening to the voices of South Africans, some of whom are his good friends, like those who are here. When we have talks between us on the around a quiet table, it will take President Trump to listen to them.
President Ramaphosa at the White House for lunch and a bilateral meeting with President Trump that presumably includes other issues, including trade. And we want to talk about this with Patrick Gaspard. A perfect day to have the distinguished senior fellow at the Center for American Progress, his former U.S. ambassador to South Africa in the Obama administration. Mr. Ambassador, welcome back to Bloomberg TV and radio. Donald Trump is talking about genocide today. What should be the response from South Africa?
Well, thank you so very much for having me on. But it's a bizarre day to be on here today. Donald Trump is talking about genocide in South Africa. Let's be really clear here. There is absolutely, positively no credible human rights organization in South Africa or anywhere in the world that says that there's a genocide taking place in South Africa. So the response from President Ramaphosa has to only be, one, there's no genocide. Two, the bilateral partnership between the U.S. and South Africa is incredibly important for both sides of the Atlantic on security, on the economy, on trade. And we've got to do things to bridge this gap, both in the facts and in the material relationship between the two countries.
Well, President Trump brought to the Oval Office the facts that he wanted to underscore, at least what was presented as fact, a video with monitors that had been rolled in and edited together for those in the Oval Office to see in person, printed handouts of stories in which he said they described horrible death of white South Africans, knowing that it did seem that a certain amount of this was staged, and knowing as well, Mr. Ambassador, that Cyril Ramaphosa, while not in the presidential role, was in the South African government at the time you were serving as ambassador, so you do know the players here. How did he conduct himself? Did he do well?
Well, I've known President Ramaphosa ever since he was a labor leader in the country when I first visited in 1991. President Ramaphosa did everything that he could to maintain his composure and not only his personal dignity, but the dignity of the nation that he represents. But it's really hard when you're sitting across from Donald Trump and he's laying out not facts, Kaylee, but propaganda. The film that he showed comes from an organization called AfroForum that's known to be aligned with the most extreme fringe right-wing elements, not only in South Africa, but in the U.S., Australia, and other places. They are adjacent to people who have been identified as neo-Nazis. So these are questionable characters. You should also understand that the black South African who's in the video exhorting violence against white Afrikaners is another fringe character who is not in the government, who Cyril Ramaphosa and the ANC soundly defeated in the last elections and who has no credible power in the country. So it's rhetoric, no fact, all propaganda. White Afrikaners, who make up less than 8% of the population, represent less than 2% of the murder victims in South Africa. Furthermore, that small Afrikaner population also happen to be some of the largest landowners in a country that has real asymmetries of economic inclusion. Those are the things that South Africans are trying to solve for with the partnership of the U.S. through trade, through hundreds of thousands of jobs that are reliant on the African Growth and Opportunity Act that I helped to renegotiate, that's up for renegotiation now, and that Donald Trump and the American people should be settling in a fashion that helps people along the supply chain in America, consumers in America, and workers in South Africa.
This is really helpful context, Ambassador. I'm sure you saw that Elon Musk was in the Oval Office. We didn't hear him speak. But when you step back and consider what just happened, was this an ambush?
It was absolutely an ambush, as evident by the video that you just made reference to being wheeled in. And then the President of the United States sitting there with printed out copies of alleged articles that lay out the crimes against Afrikaners in the country. A president who, by the way, has overturned the entire asylum system in the U.S. for every other nation, every other nationality, but is throwing open the doors to Afrikaners who are allegedly under assault. Elon Musk didn't have to speak. He is the silent partner in the negotiations here. Elon Musk and Starlink have been trying to get into the South Africa space. They're making all kinds of demands on the South African government. And I truly believe that Donald Trump is carrying water for Elon Musk in these conversations. And they're hoping that the South Africans will overturn a regulatory framework that has not made it possible for Musk to operate in South Africa in the way that he would like to. I hate to say this about an American president, but too often we see that there's some kind of a grift that's involved with pronouncements around national security and foreign policy. It's the case here too, I believe.
Well, there's another foreign policy issue, though, that the U.S. seems to take particular exception with when it comes to South Africa, and that's South Africa leading the charge in the International Court of Justice against Israel, claiming that Israel is committing genocide against Palestinians in Gaza. That was among the reasons that the Secretary of State, Marco Rubio, in testimony yesterday on Capitol Hill, suggested President Trump won't be attending the G20 summit in November in South Africa, though he didn't necessarily give us a firm answer on that in the Oval Office. Is that policy around Israel reconcilable between these two countries, Mr. Ambassador?
I so appreciate that question from you, and I really wish that dominated the dialogue today in the Oval Office, that and trade, instead of this ridiculous ruse around white genocide. Let's be really clear here. South Africa has had a long-standing relationship with elements of the Palestinian leadership, Palestinian civil society. No surprise to anyone that following October 7th, after South Africa appropriately denounced Hamas, appropriately talked about South Africa's right to exist and to defend itself, that it then in turn took up a defense of Palestinians when they saw collective punishment being taken upon tens of thousands of innocent Palestinians in Gaza and the West Bank. So that should not have surprised anyone if you know about South Africa's history and record as it relates to Palestinians and global human rights. So now Marco Rubio and Donald Trump, two actors who have not spoken out about the collective punishment in Gaza. Donald Trump, a president of the United States, who said that we should clear all the Palestinians out of Gaza and turn it into some kind of like beachfront property. No concern for that he's now suddenly talking about genocide, but not in a context anywhere else in the world. He defends Putin's incursion against innocent Ukrainians. He says nothing to speak up about what's happening to Palestinians every single day, where Netanyahu is redoubling down on his occupation and bombing in Gaza. And now he's singling out white Afrikaners who have been ginned up for him by fringe elements of his movement as victims of genocide. The hypocrisy is overwhelming here.
So this is a president of the United States, in your view, whose view has been corrupted by Elon Musk.
I never thought I would live to see the day where a president of the United States would be siding with Vladimir Putin against an innocent sovereign nation that has been invaded and surfacing myth about genocide in one country in order to help the business interests of one of his principal supporters who spent in excess of $250 million on his election. It's an extraordinary thing. We have something in the United States called the Foreign Corrupt Practices Act, and I think that a responsible Congress would be looking thoroughly at these circumstances.
Ambassador, we just have a minute left here, but given everything we've just discussed and the evident tension between the U.S. and South Africa, do you have hope a trade agreement between the two can be reached, knowing at the end of the 90-day period, a 30% reciprocal tariff could be put into place once again?
I'm ever hopeful. The U.S. and South Africa have had challenges in the relationship before. I remember being a young activist, protesting against the resistance of the Reagan administration to lay sanctions against South Africa. We overcame that. There is bipartisan support for the partnership between the U.S. and South Africa on trade and on healthcare relief as well. So I think that there are responsible Republicans in the Senate and the House who understand the importance of the African Growth and Opportunity Act, both for security and for economic growth, and they'll increase the pressure to get to some resolution of these charges and of these challenges.
All right, Ambassador, we really appreciate you joining us here on Balance of Power. Former ambassador to South Africa during the Obama administration, Patrick Gaspard, now distinguished senior fellow at the Center for American Progress. We appreciate it, and of course, we'll be back for more at 5 p.m. Eastern Time here on Bloomberg TV and Radio. Joe.
A lot more to follow and a lot more to learn with an apparent meeting between President Trump and the Freedom Caucus on reconciliation. We should know a lot more by the time we meet again, right here on Bloomberg TV and Radio.
Get the best in finance, investment, and economics with the Bloomberg Podcast channel on YouTube.
We are seeing stocks rise around the world.
We have a massive rally in the bond market.
Record revenue out of Apple.
We've got inflation moderating.
I'm Tom Keene, inviting you to watch and listen to the best analysis on business and investment. Visit the Bloomberg Podcast channel on YouTube to hear from the smartest names on Wall Street. Just head to YouTube and search Bloomberg Podcasts today.
This is a Bloomberg Money Minute. Consumer Reports magazine says Kroger, the nation's biggest grocery chain, the owner of Ralph's, Harris Teeter, Fred Meyer, and other supermarkets, regularly collects data from its 63 million customer loyalty program members about who you are and what you buy, and then sells that info to the highest bidder. Like Home Depot did on Tuesday, today Lowe's said high prices along with high interest rates are keeping a lot of homeowners from taking on costly improvement projects that require financing. But Lowe's also says people are doing less costly projects like putting up a fresh coat of paint. Right now, shares of Lowe's are a little bit lower. Elsewhere on Wall Street, stocks are heading sharply lower this hour on worries about a ballooning U.S. deficit, which has led to lackluster sales of U.S. Treasury bonds. Right now, the Dow is down 1.75%, the Nasdaq down 1%, the S&P 500 1.25%. But Bitcoin is at an all-time high, topping $109,000 in value. Tom Busby, Bloomberg Radio.
The global leader in business and financial news is now live on YouTube.
The live chat yesterday was very kind.
Watch Bloomberg Radio all day.
There are no such things as slow news days.
For market news, conversation, and insight from Bloomberg's signature radio shows, Surveillance, Bloomberg Intelligence, Balance of Power, and Business Week.
This story is among our most read.
Bloomberg Radio. Watch us every business day live on YouTube. Go to the Bloomberg podcast page and click on the live feed. Bloomberg Radio. Context changes everything.
I'm Emily Chang. Join me on The Circuit, where I speak with the biggest names in tech, business, and culture, and find out what drives them. Hear my conversations with OpenAI CEO Sam Altman, SoftBank CEO Masayoshi Son, and all three Microsoft CEOs past and present, Bill Gates, Steve Ballmer, and Satya Nadella. Watch Season 3 of The Circuit, Thursday nights, 6 p.m. Eastern on Bloomberg Television and streaming on Bloomberg Originals and Bloomberg.com. Or listen to The Circuit anywhere you get your podcasts.
Bloomberg Radio, where the experts come to listen. Ariel Cohen, Atlantic Council.
I'm listening every morning when I'm driving into Washington, D.C. You're terrific.
Representative David Schweikert.
One of the reasons I love Bloomberg is I'm allowed to geek out.
Jared Bernstein, U.S. Council of Economic Advisors.
Yesterday I was driving around. I put on your show. I learned 5 things in about 3 minutes.
Listen on Apple CarPlay or Android Auto with the Bloomberg Business app. And always on Bloomberg Radio. Context changes everything.
My name is Ariel. I moved to the U.S. at 19. I spoke no English and I struggled finding job opportunities. Everything I have, I owe to the Adult Literacy Center and getting my high school diploma at age 22.
It was an honor helping you achieve your greatness. Now you're helping others achieve theirs. It inspires me.
When you graduate, they graduate. Find free and supportive adult education centers near you at finishyourdiploma.org. Brought to you by Dollar General Literacy Foundation and the Ad Council.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Live across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. As you just heard, Carol Massar, Tim Stenivek, live here at Bloomberg headquarters in New York City. A little bit of a different trade. We've seen it evolve over the last hour, and that has to do with, investors do care about the U.S. fiscal situation. And we did have a Treasury auction that kind of reflected some of those concerns. And so we've got stocks pretty much just hovering just off their lows of the session right now.
Yeah, we'll have more from Charlie Pellet in just a second, but suffice it to say the Dow is down about 1.6%, the S&P 500 down more than 1.1%, and the Nasdaq down about 0.9%.
All right, we're going to get into the trade in just a moment. Hey, whoa, OpenAI doing a pretty big deal. This caught our attention just a moment ago.
Plus, speaking of big, who's threatening President Trump's big, beautiful tax and spending bill?
Yeah, we're going to talk about that. We're also going to talk about
I thought you had the answer for who it is. I was asking the question.
No, that's called a good tease.
Okay.
We're also going to get into the U.S. relationship with South Africa, what you need to know. We're going to talk rare earth minerals in the United States. Yes, folks, from A to Z, you can do it. We've got the CEO of MP Materials. This stock has been on a tear.
Speaking of stocks on a tear, Duolingo's been on a tear. The CFO, Matt Skrupa, is going to be joining us a little later in the program, up 60% year to date, up 200% over the last year, Carol.
All right, folks, let's get to the trade. Let's get to Charlie Pellet.
Hi, thank you very much. And here's what's going on. We are looking at steep losses for the U.S. equity market. Indeed, we had gains in the early going, but right now, the Dow, the Dow, S&P, Nasdaq, all very much in the red. Wall Street's worries about a ballooning deficit that threatens America's status as a safe haven, reflected in a $16 billion Treasury sale that saw lackluster demand, stocks, bonds, and the dollar falling. Right now on the equity markets, we have got the S&P 500 index down 70, 5870 where we stand right now. That is a drop of 1.2%. The Dow have been down more than 700, down 690 right now, a drop of 1.6%. Nasdaq, the composite index, down 0.9%. A lot of damage to the Russell 2000 index of small cap shares. It is now down 2.3%. The Mag 7 index, the Bloomberg Mag 7 index, down 0.5%. The 10-year at 4.59%. The 2-year, 4.01%. The 30-year, 5.08%. Gold up $25 the ounce, up 0.8%. West Texas Intermediate crude down 0.7%. And now Bitcoin trading lower. Did see a record on Bitcoin earlier today, but right now Bitcoin at 106,610, a drop of 0.3%. A lot of retailers out with earnings. Target cutting its sales forecast due to a sharp pullback in spending, tariffs, boycotts, and consumer confidence. Target shares, they are trading lower by 5.9%. After earnings, home improvement Lowe's now down by 2.4%. Rival Home Depot down by 2%. Again, recapping here, the Dow, the S&P, Nasdaq, all lower. S&P down by 1.3%. I'm Charlie Pallett. That is a Bloomberg Business Flash.
All right, got it, Charlie. A lot to get through in this next 10 or 15 minutes because a lot of news going on. First up, though, got to talk about a story, a deal. OpenAI buying the AI device startup co-founded by Apple veteran Jony Ive. It's a $6.5 billion all-stock deal, and so it basically joins forces with the legendary designer to make a push into hardware. We got to get to what we need to know about this. Co-host of Bloomberg Technology, Ed Ludlow, is all over it. He joins us from our San Francisco bureau. All right, Ed. We were kind of like when it crossed, we're like, okay, this feels like a big deal. Is it a big deal? And what does it do for these two companies? What does it do for OpenAI?
Big deal, surprise. I don't know that it's that much of a surprise. You know, there's been whispers throughout Silicon Valley. Big deal because it is OpenAI's biggest deal, biggest acquisition, $6.5 billion. But it's OpenAI, which is the leader in AI development, literally the development of large language models, but also consumer and enterprise facing services, kind of muscling into the devices game. So they are pledging to have AI-enabled devices by 2026. What they are acquiring is not just a company or IP, it's this relationship with Jony Ive, right? The former legendary Apple designer who is responsible for iPod, iPad, AirPods, Apple Watch. And he's left Apple in 2019. And this answers a big question of like what he's doing next.
Right. I think, I mean, look, anything that from Apple that we basically put in our pockets in recent history has the stamp of Jony Ive on it. But what has he done since 2019? I actually don't understand what OpenAI is buying here.
Yeah.
Is it a team, Ed? Is it a team of designers and engineers?
It's not. It is not an exaggeration or unfair to say that it's almost like an acqui-hire, right?
Yeah.
So Jony Ive's basically been running this group or this agency or this firm called Love From. Let's call it a design agency or design firm. And with him at that group are many former Apple designers, and those people will be a part of this OpenAI initiative. We note in the Bloomberg story reported by Mark Gurman and Shireen Ghaffari that the model here is that there will be some independence. It will kind of be a standalone independent unit of OpenAI where Jony Ive has independence. But to go back to the root of your original question, you know, when Jony Ive left Apple in 2019, the reporting and the suggestion from Apple CEO Tim Cook was that they would sort of continue to collaborate. So even though Jony Ive was not an employee of Apple, he'd almost be like a consultant. Remember, this is the guy that Steve Jobs once kind of like labeled his spiritual partner. You know, that's how closely aligned Jony Ive was to the history of Apple. But, you know, the OpenAI side of this fascinates me because like this is a company that bites off a lot. Is it more than it can chew? Well, this is a big news story.
Yeah, but isn't that what tech and innovation and disruption is all about, right? I mean, AI. Hey, in the story, though, Ed, it says OpenAI is going to create a product at a level of quality that, quote, has never happened before in consumer hardware. That's coming from Sam Altman. What might an AI-powered device be out of this duo or this collaboration?
Well, so there's 2 points here. You're getting at, is this going to be something very fancy and very expensive? I think they clearly are like orienting this towards the high end of whatever device or wearables market there is. The form factor, we're told it is a range of devices. Is this a smartphone? Is it a wearable?
Right.
Don't know. The cautionary tale is like in the modern era, AI devices outside of the smartphone format. You probably talked about at one time the Humane AI pin, which was like a very chunky brooch with a camera on it. And that project did not go well at all. So I'm just really curious about the form factor. I largely interact with ChatGPT. I'm a big ChatGPT subscriber. I pay for it myself, $4.0. But I use it principally on my smartphone, which is an iPhone. So I don't know. But I think the idea is that the AI side of this, the software side, that leverages OpenAI's competences.
Ed, before we let you go, we got to talk about the Apple portion of this. Apple shares are down about 1.8%. The entire market is lower, I should note, but they did take a leg lower when this was announced. We can't speak about this without speaking about the challenges that Apple has had when it comes to AI. Certainly, they are a partner with OpenAI. Right. Mark Gurman was on our air earlier this week sharing his big take about where they really went wrong. What does this mean for Apple, for Johnny Ive to go join an AI company that is really distinct from where he really made his mark?
Right. Mr. Tim Stenovec, I'm going to be very careful to draw a causal relationship between the report that was published and the movement in Apple's stock. Although this is both a visual and audio medium, if you bring up the ticker or the tape of the session at 12:59 Eastern time, Apple's stock clearly takes a very large leg lower when this story was published. You know, and I think that answers Carol's earlier question of the kind of marketplace that they want to operate in. You know, Apple has not cracked the software side. Great at hardware iPhones, but it's actually on the generative AI tool that they've been poor, and we've been over that. So that's why there's competition here.
Love this world. Apple shares right now down about 1.9% here in the trade. Ed Ludlow, thank you so much. Always. Co-host of Bloomberg Technology out there in San Francisco. All right, let's head a little bit south from New York City. It's another busy day in the nation's capital, and to that big and beautiful bill, or so says President Trump. That's how he describes it, that massive tax and spending package that is making its way through lawmakers. It's not all smooth sailing, though, as we know. So let's get to the latest. We head to the Cannon Building in Washington, D.C., and to our own Bloomberg News congressional reporter, Eric Wasson. Eric, another busy day up there on the Hill. Progress, though, this is moving along.
It is moving along in one key respect. The SALT cap, which is the $10,000 state and local tax deduction cap in existing law, will be rising to $40,000 for individuals and joint filers with an income limit for 10 years. That's the deal on the table. The SALT members from New York, New Jersey, and California have signed off. There's a little bit of tweaking of whether there's an inflation adjustment during that 10-year period, but that was a major obstacle that Speaker Mike Johnson resolved overnight. He woke up, however, to a new problem, which is the conservative House Freedom Caucus, irked by that SALT deal and wanting more cuts on Medicaid, more cuts to green energy tax credits. And they're going to be meeting at the White House with Speaker Mike Johnson at 3 o'clock to try to hammer out a deal and get to a vote late tonight.
What does it take to hammer out a deal with these hardliners, Eric, especially if you're President Trump and you really do have quite a bit of sway over the Republican Party? How much political capital does he have to use to get these folks on board?
Well, the real issue for Mike Johnson is if he makes these changes that the Freedom Caucus wants, he could lose votes from moderates. For example, one of the things that the Freedom Caucus wants is to end tax credits for existing green energy projects. That hurts people and companies in members' districts. It hurts big banks who have provided tax equity funding for some of these existing projects. And one of their top lobbying aims has been to have a grandfather clause. So even if Trump and the Freedom Caucus say they want this, there is going to be pushback from Wall Street, from Main Street, from moderates. The same thing on Medicaid. State governments have certain ways of funding, their healthcare programs. If they make immediate deep cuts to the federal match, which is what the Freedom Caucus wants, that could blow big holes in state governments, and state governments are putting pressure on moderate Republicans to oppose it. It will create a dilemma. My sense is that the speaker just wants to get Trump to convince the Freedom Caucus to go with the deal on the table. They're already, and we scooped this earlier on the terminal, moving Medicaid work requirements up to December 2026, which is 3 years earlier than in the draft bill, and call it a day. We'll see if that view prevails at this White House meeting at 3 o'clock.
Eric, you mentioned pushback. We have seen pushback among investors. We had a Treasury auction today, a $16 billion sale. It was a weak sale. We saw stocks move down. We saw yields move up. Yields along the Treasury curve, they will ultimately potentially impact every American that's out there. If you go to buy a house, if you go to do anything, those worries about that ballooning deficit that is part of this measure that's making its way through Congress, what will this massive tax and spending bill do to the U.S. deficit? Just remind us.
Yeah, I think it's really important to discard a lot of the rhetoric we're hearing from the White House and others. This is a deficit increasing package unless you make phony economic growth assumptions or use budget gimmicks. We're talking about $3 trillion, possibly $5 trillion or more, because a lot of the temporary tax breaks, like let's say you end taxes on tips for 4 years, in 4 years a lot of people will push to make those permanent. So we could see easily $5 trillion, according to the nonpartisan Committee for a Responsible Federal Budget, being added here on top of existing deficits. So it is a deficit increaser. Now, of course, there is an attempt by the Freedom Caucus to lessen that impact by making more spending cuts. But the idea that this balances as a package or that it even reduces the deficit, I discount that as pure rhetoric.
Hey, Eric, before we let you go, changing the makeup of the House, we did learn that Democrat Jerry Connolly passed away at the age of 75 after a battle with cancer. It gives the Republicans more of a majority. Is this an issue for Democrats? What happens to the seat? What's your thought?
Well, it doesn't really change the math. Republicans can still only lose 3 votes on this. So for the near term, it doesn't. It's pretty much a Democratic seat. So I think electorally. But I must say it's very sad. I knew Mr. Connolly very well. He's a good friend of Bloomberg, a good source of mine, and a nice person. And I was very sad to hear about his demise.
Yes, agreed. Eric, thank you so much. Really appreciate getting to check in with you. Eric Wasson, congressional reporter up there on the Hill for, of course, Bloomberg News. All right, we want to go not too far from the nation's capital to the White House and the Oval Office. We did see a meeting at the White House earlier today between President Trump and South African President Cyril Ramaphosa. We want to get into what you need to know about the U.S.-South African relationship. So with us, we do head to our Cape Town bureau for Bloomberg News and to Bloomberg News South African bureau chief Alexander Parker. Alex, curious how this meeting is seen between the two presidents today.
It's early at this point to try and work out quite how this is going to land, but it's hard to imagine there's going to be a good readout of what transpired in the Oval Office today. I think that what we saw was pretty much exactly what many of the president's advisors were concerned about that would happen, and that there would be something of an ambush. It didn't start off like that, but it descended into something of an ambush later on in the discussion. And I think that it was not a good day for President Ramaphosa fully. I think that it's possible that a more positive reading would say that the president managed to get over some of the nuances, some of the topics that were discussed, and perhaps had some of his points heard by President Trump. But it was a rough meeting for the South Africans, I think.
Why do you think it was a rough meeting for the South Africans? Is it because it was less focused on trade deals or resetting of the relationship and more focused on the refugees who've come to the United States from South Africa?
Yeah, I don't think that President Ramaphosa really wanted to talk too much about that because there is no serious body that suggests that there is any kind of white genocide in this country. It's not by any stretch of the imagination true. And I think that President Ramaphosa, when he left South Africa, was clear that he wanted to talk about trade, he wanted to talk about improving bilateral relations and improving the diplomatic space generally to make it more normalized. The fact that it became a long and quite drawn-out discussion about alleged genocide of white people in South Africa, especially on farms, and a kind of slightly unpleasant discussion, and then a pre-prepared movie that was played to everyone in the Oval Office would not have been what he would have wanted.
Right, hence the ambush that you kind of talked about. Hey, Alex, one thing I do wonder, we're going to talk rare earth minerals in just a moment with the CEO of MP Materials, who is doing it all here, the supply chain A to Z in the United States. We think of Africa, we think of South Africa, we think about the commodities, the precious minerals that are there. What should be the relationship, the mutual beneficial relationship between perhaps the U.S. and South Africa? Because China certainly looks at Africa as the continent overall and its richness.
Yeah, and certainly in the previous American administrations, there was a sort of very more open discussion about that. I mean, there's a big development happening from the DRC into Angola, a rail project called the Lupito Corridor to deal with exactly these kind of things. President Ramaphosa, in the meeting before it kind of went down a bit, also discussed the rare earth minerals, the palladium, and the other things that we mine in this country. And I think that President Ramaphosa would want to talk about that and to discuss those issues with regard to the tariffs that we're all talking about. And I think that that that's what the president wanted to talk about, and hopefully they are still able to discuss those things despite what happened.
Listen, so appreciate it. We know it's later there in Cape Town, but getting your analysis on this as we try to make sense of the leaders that are making their way, we should say, through the White House and through the Oval Office. This was really terrific. Alex, thank you so much. Alexander Parker, he's South African bureau chief for Bloomberg News there in Cape Town. It's about 8:17 p.m. in the evening there. So again, appreciate him staying up late for us. All right, folks, you are listening and watching Bloomberg Business Week Daily on a day where we've seen markets kind of move south. Has to do with a Treasury auction that wasn't as well received, and we've seen yields move up and stocks move down as a result.
Yeah, the S&P 500 down about 1.3%. The Dow Jones down 1.6%. The Nasdaq down 1% point. Hey, speaking of rich natural resources, rare earth minerals right here in the U.S., the company that's tapping into it, MP Materials. That's next on Business Week Daily. Get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, or wherever you get your podcasts.
Global market news changes in an instant. So don't miss a minute. Listen to Bloomberg Radio anytime, anywhere around the world. On the iHeartRadio app. Tune in, the Bloomberg Business app, Sirius XM 121, and the Bloomberg Terminal.
The biggest business story of our time revolves around one name, Elon Musk. On the latest episode of Elon Inc., a Tesla insider says Elon Musk is harming the company.
Once you meet a new person that is willing to say the quiet part out loud with you, it's just like, oh, okay, good, there's another person. And I'll come off of mute in some of these calls. I'll say, hey, can we just acknowledge that the new Model Y, if it had launched last year, would have been selling like crazy.
From Bloomberg Business Week, this is Elon Inc. Listen wherever you get your podcasts.
Retirement can be scary, but only if you're not prepared. That's why AARP created thisispretirement.org. Because unless you've already retired, you're in pretirement, and you still have time to plan. Learn about retirement savings options, potential tax breaks, and how you can build savings over time. Visit thisispretirement.org for free resources to help you customize your action plan and feel the retirement fear disappear. Brought to you by AARP and the Ad Council.
On a recent edition of the Big Take podcast, Bloomberg Weekend editor-at-large Michelle Hussein sits down with billionaire Elon Musk at the Qatar Economic Forum. Hussein spoke with Musk about his future at Tesla, his ongoing feud with OpenAI CEO Sam Altman, the possibility of Starlink going public, and his work with Doge.
I want to ask you about the total amount that you're planning to save through Doge's work. Before the election, you said it was going to be at least $2 trillion. The number currently on Doge.gov is $170 billion. That's a big change. What happened to the $2 trillion?
Well, do you expect it to happen immediately?
Well, is it going to happen? Because Doge is supposed to run till next July.
I mean, your question is absurd in its fundamental premise. Are you assuming that on day, within a few months, this an instant $2 trillion saved?
No, I'm not at all. I'm just asking, is that still your aim then? Is it still your aim to get to $2 trillion?
Have we not made good progress given the amount of time?
That's exactly what I'm asking. So is it still your aim to go from 170 billion to 2 trillion?
The ability of Doge to operate is a function of whether the government, and this includes the Congress, is willing to take our advice. We're not the dictators of the government, we are the advisors. And so we can advise, and the progress we've made thus far, I think, is incredible. The Doge team has done incredible work, but the magnitude of the savings is proportionate to the support we get from Congress and from the executive branch of the government in general. So we're not the dictators, we are the advisors. But thus far, for advisors, the Doge team, to their credit, has made incredible progress.
That's what's on a recent edition of the Big Take podcast. Listen to the full episode on Apple, Spotify, the Bloomberg Business app, or anywhere you get your podcasts.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at steep losses for the U.S. equity market right now. The Dow, the S&P, Nasdaq very much in the red. A 1.4% drop on the S&P 500 index, down 85. The Dow now lower by 763 points, down 1.8%. Nasdaq Composite Index down 231, down 1.2%. The Russell 2000 Index of small cap shares is now lower by 2.5%. We've got the 10-year yielding 4.58%, the 2-year 4.00%, and the 30-year 5.08%. Wall Street's worries about a ballooning deficit that threatens America's status as a safe haven reflected in a $16 billion Treasury sale that saw lackluster demand. Spot gold up $24 the ounce, up 0.7%. Gold at $33.14 right now. West Texas Intermediate crude down 0.9%, 61.46 a barrel on WTI, and Bitcoin now down 0.3%, 106,646 on Bitcoin. Toyota is looking into offering a compact pickup in the U.S., potentially joining Ford and Hyundai and competing in the growing market for entry-level trucks. Ford shares, they're down 2.1%. Toyota down by 0.8%. Coming up after the close of trading today, we will have earnings from Snowflake and Zoom. Right now, Zoom down 0.5%. Snowflake down by 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
So thank you so much, Charlie. What we love about the Bloomberg is, man, the world is diced and sliced in so many different ways. So you want to know something about rare earth minerals? You just kind of type in NI rare earth minerals.
What'd you find when you did that?
Okay, there's a story in the terminal. Russia's largest oil producer buying a giant Siberian rare earth deposit, which may become an area of cooperation with the United States. I think that's kind of cool.
That's
We're
really
talking about Rosneft, obviously the state-run energy oil company over there. But I just think about there's a lot of jockeying going on right now when it comes to rare earth minerals. We're seeing that happen in a big way.
Yeah, I think that's fair to say. And that's exactly why we wanted to bring back Joe Doe. We talk extraction, we talk refining, we talk manufacturing. When it comes to rare earth minerals, the next company knows all about it from A to Z, and it's happening right here, Carol, in the U.S.
It is indeed. So let's get to our guest. James Litinsky is here. He's co-founder, chairman, and CEO. It's a $3.3 billion rare earth mining company. It's called MP Materials. It's up about 30% year to date. So we just wanted to lay that out. Also with us is Bloomberg News metal mining heavy machinery reporter Joe Doe. I'm rushing because I want to get to you. I want to get to the guest. Whenever you jump in the studio, I want to rush to you. Joe, it's great to have you here. You said to us, we've talked with you a lot about rare earth minerals, and you said, we got to talk to this guy. Tell us why we have to talk to James.
Well, so James Litinsky, he has been running MP Materials now for years. Basically, Jim took the old Mountain Pass Molly Corp company that had gone into bankruptcy and has turned it into something investable. Jim can kind of give you his, 1-2 on everything, but basically they're right at the center of so much of what Donald Trump is focusing on: critical minerals, rare earths. Where are we going to get it? How are we going to rely less on China, the processing, the magnets, everything.
All of it, right? The whole...
All of it, right. And it's a lot of questions that I have for Jim, too. Like, hey, what do you think when the President of the United States is looking at people like you and saying, do it all?
Jim, what do you think?
Hey, well, hi, nice to see you guys. Joe, good to see you again. Yeah, it's certainly a very exciting time for us. As you mentioned, we're the only company in the world, and that includes Chinese industry, that has the expertise from the resource all the way through to the magnet. And what I stress again and again, when we think about rare earths, because it's very topical, a lot of times people talk about extraction. You hear Ukraine, Greenland, deep sea mining, or even today with the president of South Africa getting a stern dress down in the Oval Office talking about how he has rare earths too. We could have all the rare earths in the world, but if you can't refine them and turn them into magnets, you don't have a solution for the issue.
So, Jim, do you have that solution right now? Because we spoke with Joe a little earlier this year, and he reminded us that it kind of doesn't matter if you can extract it here in the U.S. You got to be able to refine it. And in some cases, with some of these elements, 90% of that is happening in China. What exactly can you do on the refining level here in the U.S.?
So great question. There are two places in the world that you can refine at scale. the Chinese sphere of influence, predominantly China, a little bit Malaysia, and then in California, in Mountain Pass, California, which is our site. We actually, I think some people would be surprised by this, but we refine today more than half of the concentrate that we produce. So we are refining at scale as we speak and expanding that rapidly. So we have brought this capability back to the United States of America, and we're the second largest producer of rare earth materials in the world today.
So one thing I just want to follow, because I think you guys know this world so well, Jim and Joe, but I mean, when you say refine at scale, what exactly are you talking about? I'm just thinking people are listening like, okay, what does that mean?
Yeah. You know, a simple analogy, Carol, would be think of oil and gasoline, right? You could get oil out of the ground, but you can't put it in your car until it's in the form of gasoline, right? You refine it. In this case, you basically take an ore out of the ground, you concentrate it, so it's a highly concentrated ore with a rare earth in it. But then to get the separated rare earth that you would then turn into a magnet, you refine that concentrated ore into an oxide. And then not to lose the audience, but you take that oxide, you turn it into a metal, an alloy, and then a magnet. And just last point on that I think is really critical. At Mountain Pass today, we not only mine and refine, but we now send that ore to a magnet factory that we built from scratch, a greenfield in Fort Worth, Texas. I'm actually talking to you today from our factory, and it's on a street called Independence, so we call it Independence. But we are making auto-grade magnets here at our factory in Independence in Texas with material that we mine and refine in California. And we're in the process of scaling up this facility. We have a foundational contract with General Motors. And so we will be providing General Motors with magnets at scale at the end of the year with material that is mined and refined in California.
Jim, I want to kind of get away from the nerdy science. I know you and I can talk about that all day, but I do want to talk about what does matter to the average person here in the U.S., which is you can't do all of this on your own. You cannot, while you might have the full supply chain, you cannot be the sole supplier of critical materials, specifically rare earths and the magnets. You've said that to me for years. One of the things you said to me years ago was, listen, the point is not overnight being the sole provider to yourself domestically. It is slowly pulling market share away from China. What are the kind of conversations you're having right now on this front, on the statecraft front? And maybe you could tell us a little bit about the MOU you signed with Ma'aden, the Saudi Arabian mining company, just last week on this front.
Yeah, sure. Thanks, Joe. Well, it's a great question. We've said all along our mission is to restore the full supply chain to the United States. We've obviously done that in small scale, and we're scaling that up. But we really want to be part of a broader solution to eliminate the single point of failure. As you mentioned, I was in Riyadh last week as part of the delegation of business leaders from the United States with the president. In the presence of the president and Crown Prince MBS, we signed an MOU with Ma'aden, which is the Saudi mining company, to explore the process of essentially building a vertically integrated rare earth magnetics business in Saudi Arabia. And so what that would mean is we would mine, refine, and make magnets in the kingdom. And I think from their standpoint, it's a really exciting opportunity to create a Mideast hub that could receive feedstock from there, certainly, but also Africa and some other places, and really position them well geopolitically. But more importantly, I would also say that, it really solidifies what we've been saying we are, and I think, each step of the way are showing is that we are America's national champion. We're the only company in the world that can provide a solution in-house to mine, refine, and make magnets. And so I think the vertically integrated approach that we've had is starting to be recognized by the world as, something pretty extraordinary that we've built inside MP. And so it was nice that the president and the Crown Prince recognized that. So, we'll work on that.
I mean, it's interesting. You're very much saying it's partners. We don't go it alone. It's not just the United States figuring it out. We'll work with trade partners to figure it out. I think another question I have is you came out of the gates guns ablazing on your earnings call recently with investors, and you pointed out, listen, it is very important that we work with the administration to figure out the solutions to basically getting a hold of these rare earths and these permanent magnets that are domestically or friend-shored produced. Can you tell us a little bit about the kind of conversations you're having with the administration or even the Defense Department?
Sure. So a really important just background context. If we go back about a month ago to Switzerland with the trade talks with China, at that point, we were, and a lot of people don't know this or maybe don't appreciate this because, they're not in necessarily the rare earth magnetics niche, but we were weeks away, in my opinion, from shutdowns across our economy in aerospace and in auto because the Chinese had essentially stopped shipping rare earth magnets and our supply chains were really starting to break down. And so obviously, fortunately, we came away with a deal there and we're not going to see those kinds of shutdowns, but we were really close. And that is a leverage point that the Chinese have in any negotiation. And again, whatever your view is on the relationship with China, whether it's, sort of going to be a collaborative relationship moving forward that gets reset or something much worse, we need to take this leverage point off the table. That's our view at MP. That's what our mission has been. We've been at this for years, is let's make sure that the United States of America can produce our own rare earth magnetics. And the reason, Joe, that is so important, and you mentioned DOD, is because as we've seen around the world, physical AI is the future of warfare. We're talking robotics and drones, and I think we see that from whether it's Elon Musk or Jensen Huang talking about the scale of robotics and how large that industry is going to be. It is not acceptable for American companies downstream. We're talking about trillions of dollars of enterprise value, our great leading companies, as well as our Department of Defense, to be reliant on a single point of failure in the Chinese supply chain. And so we serve a critical role in alleviating that risk.
All right. So it sounds like you're making the argument for why the U.S. government should be involved, but is the government, U.S. government, is there appetite for the U.S. government to be a partner in rare earth projects and doing it from A to Z, from mining to processing to permanent magnet production?
There is no question that the United States government recognizes this, and I think that these things take time, but there's no question that they recognize, and Joe was referencing our perspective on the earnings call, which is this is actually very doable. We are, in a very short period of time away from solving this challenge in a large scale. And frankly, MP can lead that effort. And what we said is that MP, we've been at this for a number of years. We've invested over $1 billion of private capital, and since we went public. And then prior to that, we had the good fortune, I guess, of taking control of several $1 billion of previously invested capital. So we have billions of dollars of invested capital. And what we've said is, we'll lead this solution, but it's not fair on our shareholders to expect them to take the risk. We're going to need to do this in a capital light way for MP.
Right.
It should be very rewarding for our shareholders for being in this position. So to answer your question, there will be movement forward, in my opinion. I think it's a question of getting these solutions don't happen overnight, but there's no question that there are a lot of conversations happening with government and industry, and we're leading those.
Okay, so it sounds like government's involved, they're listening, and we should maybe stay tuned for news. What kind of money is needed to be committed to do the proper build out in your view, whether it's public-private partnership? And just about 30 seconds on that.
Yeah, the really simple answer is we're talking single-digit billions. This is a really simple problem to solve, actually. I jokingly say for the coffee budget on the F-35, we probably could have solved the rare earth issue. This is really small.
Wow.
And so I do think the United States government is going to step up. I think you're going to see industry players step up as well, because this is it's an issue that affects our national security and trillions of dollars of enterprise value, and it's actually a small problem.
You mentioned that we could do this in a short period of time. Give us years or some sort of timeline that we could actually move away from a single point of failure when it comes to this problem.
Well, we're bringing that online now in Texas, right? So where I'm sitting is a factory. You all are welcome to come see it. And so we'll be making magnets at scale here at the end of the year. And then the question is, what percentage of the industry do we need to satisfy to remove the single point of failure risk? Because we don't need to solve 100%, but we need to do a material percentage. And so I think the next step would be for us to lead a solution where we're building, something significantly larger, and then, rinse, repeat to add a number of facilities, both here and as we announced with the MOU, potentially in the Saudi Arabia and other places. So it really is not a huge issue. It's just an issue that requires, again, capital and execution.
Right. And I think on that point, it's not just going to be you. It does still require a lot of other actors to come into this space. And I guess the quick follow-up again is, What are we going to see from the government this year in terms of commitments to help this space, your company, and others build out the supply chain on rare earths and permanent magnets?
Well, just to be crystal clear, as we all know, the capital markets can satisfy this problem if the existential issue of the industry is off the table. And the existential issue is Chinese mercantilism, right? Is pricing. We've got to get proper functioning economics, proper functioning market economics for the price of these materials and the price of the downstream products. And so there's a variety of ways that the government can force that solution. You've heard a lot of them in the news, and certainly we're working on them. I think you'll see a variety of things across investments, tariffs, tax credits. And so there isn't, sort of one fits all solution. It's really going to be a question of the preferences of government. And certainly you'd have to get some of them on here to ask them directly, or stay tuned for, a solution that you see us present one day. But I do think we're going to see something sooner than later, because we've got to solve this problem.
Yeah, no doubt about it. Jim, really cool. I know we're going to be coming back to Jim Litinsky. He's co-founder, chairman, CEO of the rare earth mining company. So much more than mining, as we know, MP Materials. And of course, our thanks always to Joe Doe, Bloomberg News metal mining heavy machinery reporter. You said we had to talk to him. We did. Good stuff. Thank you. All right, folks, let's get back to the market. Yep, stocks are down, but we've also seen yields move up. We're going to talk about that in just a moment. But first up, let's get to Charlie with an update.
Thank you very much, Carol Master. That basically sums it up. I do want to begin with a pair of developing stories right now. The Walt Disney Company suspending Venezuelan workers after today's Supreme Court ruling. Also, the U.S. Defense Department has accepted that Boeing 747 from Qatar for President Trump's use. Stocks lower across the board. Wall Street worrying about a ballooning deficit. Right now, we have got the S&P 500 index moving lower by 71 points, down 1.2%. The Dow down 701, now down 1.6%. Close to session lows. We've got Nasdaq down 183, drop there of 1%. 10-year 4.58%. The 2-year 4.00%. The 30-year 5.07%. Gold up 0.7%. West Texas Intermediate crude down 0.8. And Bitcoin did see a record today. Right now, little changed on the day. 106,909 on Bitcoin. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. 30-year yield starting about 5%, sign of dimming investor demand. We've been talking about this a lot. We saw the move. Equities came down, but it came after that Treasury auction, $16 billion Treasury sale, lackluster demand, moving yields up along the yield curve. But it turns out, Tim, investors are worried about a ballooning deficit.
Yeah, look no further than what's happening on the long end as we speak, with yields higher by 10 basis points right now. Michael McKenzie is rates reporter for Bloomberg News. He joins us here in the Bloomberg Business Week studio. We were in here on Monday when we spoke about the 10-year briefly, or the 30-year rather, briefly hitting 5%. We've blown past that.
Yes.
What's the signal that's sending? Is it about the spending bill? Is it about the tax bill?
I think a lot of it's due to that. I think it's really interesting on a day when stocks start to take a hit. You don't see really any pullback in the sell-off in treasuries. The other interesting thing to observe today is that the 10-year briefly got above 460. If you think back to last month when Scott Bessent stepped in and told Trump, hey, let's do a 90-day delay on tariffs because we're close to 460 on 10s. We edged above that just now. And again, you can jawbone the market once, but if you then step back from all the tariff chaos of last month and the highs we saw then, today it's about the deficit. Today it's about a Congress that really doesn't think it needs to be fiscally disciplined here. And the bond market is telling you that, and it's not just the US story. Japan had a 20-year sale this week, very badly received. You're seeing 30-year yields in the US, Japan, UK, Netherlands, all pushing higher. And this is a global revolt that's beginning to take shape here, where investors are saying, if I don't need to own long-dated bonds, I'm not going to own them. And that's why when I was talking to investors today and yesterday, they like being in the front end of the curve. They like being between 2s to 10s. They don't really like the 30-year at all. So if they have mandates that say, please buy these bonds, they try not to, but they do buy some. But at the end of the day, they're negative on the long bond, and they probably have these steepener trades on where they're basically owning 2s and 5s and selling the 30-year.
So does this have to do with, I kind of always go back to this, Michael, certainly yourself, a lot of folks at Bloomberg, a lot of people on Wall Street kind of get the Treasury trade, right, when things are happening. But I do think about the world at large and what it means. Is it U.S. non-investable? Is it just a sign of concerns about the ballooning debt and what it means maybe for the government and spending and entitlements and how it plays out in the economy, what it does to economic growth if there isn't government money to commit to programs to kind of help? So that's
what we're beginning to look at here, because I think what you're seeing here is, if you look at developed world countries, they have aging populations. There is a much greater need now for retirement and medical costs. If you look at the issue with the US budget at the moment, they don't really want to start attacking and reducing the entitlement spending now, because it's just such a huge vote loser. Right. You can understand why Congress doesn't want to do this, but at some point, taxes will have to go up. You can't say, oh yes, we're looking for sources of revenue. This administration is looking for tariffs. They're simply not going to get enough revenue from tariffs that can sort of offset the plans for cutting taxes in the future. Then we're already starting at 100%. The deficit, the federal debt is 100% of the economy. It's the same in the UK. It's 200% in Japan. So again, investors are looking at the world and going, well, I would rather lend to AAA rated corporates. I'd rather lend to companies that actually don't really need to borrow and probably only really borrowing in order to fund buybacks, rather than to really well-established countries like the UK, like Japan, and certainly the US falls into that boat, unfortunately. I mean, and I think the other thing that's concerning is that when I was asking people this week, okay, we get 30s above 5%, is that worth a trade? Not necessarily anymore. Because again, there's this real trepidation now in the bond market at the margins. They're saying this Congress deal on the budget just isn't really making any sense. It's not going to alleviate the problem. So do we need to send a bigger message to Washington? This is an issue. And you guys are kind of walking past the graveyard and just whistling along.
We asked our Eric Wasson, congressional reporter up on the Hill, watching this big, massive, big, beautiful bill make its way through Congress. He said, despite what you might be hearing from the White House, it's a deficit increasing package. Yep. And so net, folks, it's going to add to the deficit. Michael, thank you. Really appreciate it. Checking in on that Treasury trade. Our own Michael McKenzie follows the rates market here at Bloomberg News, joining us here in studio.
Well, looking for outperformance in today's equity trade, and really the equity trade for the last year, check out the more than $23 billion market cap language learning app. It's the most popular in the world. We are talking about Duolingo. The stock up 60% year to date, up around 200%, Carol, in the last year.
Yeah, and you know a lot about this company. You actually talked with our next guest. Delighted to have with us the CFO of the company, Matthew Skarupa. He is Chief Financial Officer of Duolingo, joining us from Pittsburgh. He is featured in the upcoming episode, as is my co-host, Tim Stanovic, Chief Future Officer. It's on Bloomberg Television this evening at 9:30 p.m. Wall Street time. I got to say, first of all, Matt, nice to be talking with you. Tim hosted the episode. He's been talking about you and the company so much. I mean, you guys are on fire. Talk to us about the growth at the company, where it's coming from, in an environment that there's a lot of pressures on companies and leaders at this time.
Well, it's great to be here. Thanks for having me. And you're absolutely right. We've done a great job of growing this year. Our Q1 performance was strong top to bottom. We saw really strong user growth. That user growth translated into really strong top line and bookings and revenue. And we were able to, keep control of costs like we historically have been able to expand margins. And it wasn't just a Q1 story. As we guided on our last earnings call, we believe we're in a really strong position for the rest of the year. We feel good about Q2 and the rest of the year. And it's going to continue to come from the same sources. We're a company that grows primarily organically by word of mouth. And we expect that to continue.
Hey, Matt, good to have you join us. Thanks for doing this today. And thanks again for participating with us for the CFO show. It premieres again tonight. 10.3 million paid subscribers as of the end of the first quarter of 2025. It's growth of 40% year over year. How long can you continue that growth? I mean, when we're talking growth at that percentage, that's pretty substantial.
No, I appreciate it. It was great to do the show with you, and I look forward to seeing that. In terms of growth, we've done it for several years. I mean, we went public in 2021, and if you look back from then to now, we've grown the top line really nicely. So I'd say that, you look back and you think that we have a strong path going forward as well. I'd also just call out that the 10.3 million subs is great. We're excited about that. We feel really good about that growth. But we're also seeing really nice diversification of subscribers. So we have continued strength in our family plan, which is a subscription where multiple friends and family can join. And as of the last quarter, 7% of our subs were on our max tier, which is our highest tier service, which has features like video call with Lily, and it's doing really well. So it's a great story, not just on the overall top line numbers, but on how we're growing the subscribers.
I mean, that's wild. Almost 50% year over year growth, Matt. I am curious, who are these people that are signing up? How long do they stay with you? And what's the cost to acquire an individual user?
Yeah, so our one of our core business model advantages is that when we acquire a user, we acquire them mainly for free. We do spend on performance marketing and some brand spend, but it's relatively small as a percentage of revenue. And so most of our growth comes from people telling their friends and family that they've had a great and engaging experience with our app. That's why Luis is so focused on engagement as a core driver of growth for us, is that if you have this wonderful, joyful experience, you're going to tell people about it and they're going to try it. And then the other way is we have a really amazing social first marketing strategy where we, insert ourselves into viral moments online, TikTok, Instagram, and other platforms. And users create their own content, which goes viral. And so on any given day, a lot of what people are talking about on Duolingo isn't generated by us. It's generated by our, beloved fan base. When you have that type of user acquisition and it is global, we're seeing strong user growth around the world. We get a lot of opportunities to then convert folks from free subscriber to paid, or from free user to paid subscriber. And they stick around on the platform and they come back frequently. And so we get multiple chances to convert them. And while while time is progressing, we're making the subscription product even better and better. So that's how we grow the subscriber base.
We'll talk a little bit in a minute about the social first marketing, because something kind of wacky seems to be happening right now. If you look at the social channels for Duolingo, but I'm wondering specifically, Matt, about growth and about, at the end of the day, the efficacy of the product. And I'm wondering how you measure to what extent the product actually resonates and works for people who are trying to learn English as a second language, for example, to be able to do business in the US or to be able to do business in English. How do you measure that?
Yeah, well, it is core to our mission. So our mission is to, build the best education in the world and make it universally available. And so to do that, we need to prove to our users and to ourselves that we're teaching really well. We've had some studies done that show just how efficacious we are. So, if you compare us to learning a language in a university, we are on par with that. You can probably do it faster on Duolingo. And, there's plenty of evidence we put on our website that shows those studies in detail. I think the bigger evidence is that we're continuing to add features that just really address some of the core desires of particularly English learners, like you referenced. They want to practice conversation. And so what we've done over the past, several quarters is add this feature called Video Call with Lily, where you can practice your conversation with one of our characters, Lily. She's a bit passive aggressive. She's not impressed. I've yet to impress her with my Spanish, and I don't think I'm going to. But I'm going to keep trying, which is the thing. And I
just want to say she's over your right. Well, we're looking at pictures of her on the screen right now. There's also she's next to Duo over your right shoulder. So that's Carol. That's Lily, who's not impressed. Who, by the way, in the last couple of months has unfortunately become a member of my family. It seems like with doing this with our kids.
I just love that she's passive aggressive.
Yeah,
bring it on.
Yeah, Lily is not impressed with me, and so that kind of practice though is really helpful for folks who are trying to learn English. They're trying to learn how to speak it, and that's what we've been able to do over the past little bit.
So you use AI in a few different ways. Lily's certainly one of them. When you think about the cost associated with this, you're not using AI a platform that you developed actually at Duolingo. You're outsourcing the technology. How do you keep those costs in control? Because that's pretty expensive tech, Matt. And you're watching the bottom line and you're watching margins here.
Yeah, absolutely. And, it comes down to the fact that we have been using forms of AI, machine learning and whatnot for a long time in our company. The lesson you get served up, has for many, many years been based on a machine learning algorithm. And now with generative AI, with Video Call with Lily, and in some of our content creation, we are seeing that there's an amazing advancement in this technology that helps us do these things much quicker and more, even producing more content than we thought was possible. For example, it took us about 10 years to create the first 100 courses. And then in less than a year with this new technology, we created more than 100 more. And so this technology is really powerful. The good news about it is that the costs are coming down naturally. We don't have to do much internally, although we are still doing things to optimize the costs. But just by the nature of this technology, we're seeing rapid declines in the cost. And we don't know for sure that that's going to continue. But if it does, I think that the use of this will go up and margins will be good.
I just want to know, I'm 100% Slovak. And I just want to know, how long would it take me to learn a language with you guys? I know a few keywords, your parents, your grandparents teach you the swear words and all that good stuff. But how long does it take for someone to learn certain languages?
Sure. Well, I don't know that I've ever met anyone else or talked to them live on air, but I am also Slovakian, which is quite the coincidence.
Whoa.
But I think, it's a very nice coincidence. It turns out more will depend on your ability to put in the time. Learning a language takes practice, and that's why we're so focused on engagement. We want you to enjoy our app and come back every day because it's going to take time to learn. So if you're really committed and you want to learn any language on Duolingo and you put in a bunch of time, you're going to learn it much faster, and that's what the research shows. And so it's really motivation dependent. What we find is that the hardest thing about learning a language isn't verb conjugation or grammar or speaking. It's your motivation to keep practicing and keep learning. And that's why most of our company is geared around bringing you back every day and making sure you're engaged in the product. Because if you're engaged in the product, you have a chance to continue to learn.
Yeah, the gamification, the alerts,
totally
the emails,
yeah.
the friend streak, all the stuff that brings you back into the program. Matt, I promised that we'd go to this unhinged marketing and social media strategy because you got to shed some light on what exactly is happening across Duolingo's social channels right now. I checked in on it yesterday and this morning, and it looks like Duo has been taken hostage. There's like some sort of hostage video. Everything else has been wiped. What can you tell us?
Well, I can only tell you that our owl is truly unhinged. You can never predict what that guy's going to do.
Sounds like my co-host. I'm just going to tell you, Matt. Never know what he's going to do. Anyway, go ahead.
I've only spent a little bit of time with Tim, but I kind of can see it.
Love it.
Our owl mascot earlier this year, right after the Super Bowl, decided that he was going to fake his own death and then, return. And so, you just never can predict it. I would just encourage everyone who's watching and listening to check in again tomorrow. You'll get some interesting insight.
All right, there it is. Matt Skarupa, Chief Financial Officer over at Duolingo. Matt, thanks for joining us. Good to see you once again. Chief Future Officer with Matt premieres tonight, 9:30 p.m. Wall Street time on Bloomberg Television. You can also check it out online and everywhere you watch Bloomberg TV.
Looking forward to it. You've been talking about this for a long time. Hey, right now, though, at this moment in time, everyone talking about what's going on Wall Street. You've got the S&P 500, a leg down near its lows of the session, so it's down about 1.5%. The Nasdaq 100, a decline of about 1.2%, 257 points to the downside. Clear move to the downside. You've got the Dow Jones Industrial Average, a decline of almost 790 points, down 1.8%. The concerns, again, we talked about this with our Michael McKenzie. It's about that ballooning deficit. We've got a major spending and tax bill making its way through Congress. Pushback, yes, but the big thing is, bottom line, it's going to add to the national deficit. And the government is certainly adding on to that, it seems, in this new package. We also had a Treasury auction that reflected the concerns by Wall Street, a $16 billion Treasury sale, lackluster demand, and so investors are pushing back. And basically, our Michael McKenzie saying, hey, Wall Street, you want a little bit of a message? Here it is. We're not so keen on some of these Treasury auctions because of the concerns about what's going on in Washington.
Well, speaking of stocks and the market, let's take a look at some stocks on the move today. I'm Tim Stanovec with Carol Massar. We're joined by Bloomberg News cross-asset reporter Denitsa Sakova. Denitsa, what's on your radar?
Let's start with United Health. We've been talking about some of the stocks being down today. That's definitely one of the big movers lower. We saw it fall as much as 6.7%. There have been so many negative news about the stocks lately. Today, we have a report by The Guardian that the health insurance secretly paid nursing homes to reduce hospital transfers, and nursing home residents who needed immediate hospital care under the program failed to receive it. And there was actually interventions by United Health staffers. This is reports so far. We had another report of investigation about Medicare fraud. We also had the company cutting and then suspending its annual forecast. So it feels like a year of bad news coming in just a couple of weeks. But it's very interesting that the company in February had just one sale rating. We had an amazing story on the terminal that United Health was one of the highest rated companies in Bloomberg, but now it's down 40% year to date.
Yeah, it's remarkable to see what's happened in such a short time. Canada Goose kind of moving the other direction.
Some good news there. It jumped 24% today. It's very interesting as we see the tariff impact unfolding. New winners and new losers emerge. With Canada Goose, it's very interesting because it manufactures 75% of its products in Canada. Nearly all of those comply with the standards of the U.S.-Mexico-Canada trade deal, and therefore they'll be exempted. They have some exposure to goods that are manufactured in Europe, but they said that that's not that big of a thing. The main thing that is really clearly lifting the stock today is that they say the minimal impacts of tariffs on obviously that high-end consumer when it comes to that. And this is a brand who sells $1,500 parkas.
I know.
So it's a good sentiment.
John Tucker talking about those $700 vests. Yes, I have heard. Target. Let's talk about Target. Just got about 30 seconds, down about 4% today.
Yeah, that's not so good consumer confidence metric there. It cuts its sales forecast. We're seeing a sharp pullback in spending. Of course, that company, there have been many issues. There have been boycotts. There is the consumer part, and the CEO is actually facing a lot of pressure to recapture growth. It's been 2 very difficult years. The company is down 30% year to date. It's very imposed to tariffs. So that's one thing investors are looking at. But a lot of pressure for the stock for sure.
So appreciated. All right, for more Stock Movers podcast, 5-minute episodes, you can find it, Biggest Winners and Losers, on Apple, Spotify, or wherever you get your podcasts. Hey, folks, if you're watching on TV, the close coming your way in just a moment. Tim and I continuing on Bloomberg Business Week Daily right here on radio.
The Fed's top names are on Bloomberg Radio. Atlanta Fed President Raphael Bostic.
Right now, I would say in my S&P, I have one cut only for this year.
Fed Governor Christopher Waller.
The tariffs are a one-time price level effect that's going to pass through.
New York Fed President John Williams.
Having well-anchored inflation expectations is very important for price stability and also for economic stability.
For the latest headlines from the Fed, listen on Bloomberg Radio or anytime on the Bloomberg Talks podcast.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio.
This is CBS News on the Hour, sponsored by the Freedom from Religion Foundation.
I'm Cammie McCormick. There was another contentious meeting at the White House between President Trump and a foreign leader, this time the president of South Africa. Linda Kenyon reports.
It started with niceties about expanding trade. Then President Trump surprised South African President Cyril Ramaphosa with a video designed to support claims of genocide against white farmers.
Those people were all killed.
Have they told you where that is, Mr. President? No, I'd like to know where that is, because this I've never seen.
President Ramaphosa stayed calm, but pushed back, saying the killing of white Afrikaners is not government policy.
This is precisely what we would also like to talk about.
He then turned the discussion back to trade and investment. Linda Kenyon, CBS News, the White House.
Defense Secretary Pete Hegseth has accepted the Boeing 747 that Qatar offered to President Trump for use as Air Force One. It's valued at hundreds of millions of dollars, and it's raised constitutional and ethical questions as well as security concerns. A federal judge says the Trump administration has violated a court order on third country deportations by sending migrants on a possible flight to South Sudan. Tricia McLaughlin of the Department of Homeland Security says the 8 migrants were criminals.
No country on earth wanted to accept them because their crimes are so uniquely monstrous and barbaric. These heinous individuals have terrorized American streets for too long.
The Justice Department is moving to cancel settlements with Minneapolis and Louisville that called for them to overhaul their police departments after high-profile killings. Scott McFarlane has that.
Louisville was accused of excessive force, including excessive use of neck restraints, police dogs, and tasers. Minneapolis has been under scrutiny from the feds ever since the murder of George Floyd.
The Justice Department had already decided not to enforce the settlements. A House panel met for several hours early this morning, but there's still no agreement on President Trump's budget plan. Tarian Small reports.
It appears, and this is according to Chip Roy, the congressman from Texas, that they're still not all the way there yet. Chip Roy and other members of the Freedom Caucus are begging the speaker to consider pushing the timeline back a bit so more of these conversations could happen.
The vote was hoped to happen tomorrow. Parts of the South recovering from another night of severe storms and tornadoes. This man in Arkansas.
There was not any warning at all through the phone. Usually I get a phone message with a beep on it. Happened so quick, nobody knew it.
On Wall Street, stocks have been off all day. The S&P 500 down more than 1.5%. The Dow Jones Industrials currently down 755 points. This is CBS News.
The Freedom from Religion Foundation, the nation's leading group working to keep religion out of government. Go to ffrf.us/freedom or text protection to 511-511. Text fees may apply.
Hi, I'm Ron Reagan, an unabashed atheist. Today, the fastest growing religious group in the country is the non-religious, especially among the young. That progress is heartening, but the religious pushback is fierce and the forces of Christian nationalism are well organized. Our progress won't continue unless we work together so that reason and our secular constitution will prevail. That's why I'm asking you to join the Freedom from Religion Foundation, the nation's largest and most effective association of atheists and agnostics working to keep state and church separate, just like our founders intended. Please join the Freedom from Religion Foundation today. Ron Reagan, lifelong atheist, not afraid of burning in hell.
Join us. Go to ffrf.us/freedom or text PROTECT to 511-511 and become a member today. Text PROTECT to 511-511 because the only thing worse than a sermon is when it comes with legislation. Text fees may apply.
13. Salt and Pepper is suing for the rights to their music. CBS's Stacey Lynn reports.
The lawsuit alleges that Universal Music Group is violating copyright law by refusing to turn over the rights to their master recordings and even pulled their music from streaming services. Cheryl Salt James and Sandra Peppa Denton filed the suit in federal court in New York, asserting an old copyright act that lets artists take back control of their music 35 years after signing away the rights. UMG maintains that the recordings were works made for hire, which would not allow for them to be reclaimed. Stacey Lynn, CBS News.
You hear a lot these days from President Trump about critical minerals. Now, a new report claims the world's supplies are increasingly concentrated in just a few countries, most notably China. And that leaves the global economy vulnerable to supply cutoffs. China is the leading refiner for 19 out of 20 strategic minerals. I'm Kathy.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, folks, we're back to this. Yep, worries on Wall Street. You can see it. Equities moving down. You've got Treasury yields moving up. That's really the big story here today. Wall Street, and I should say investors, concerned about this big spending package basically making its way through Congress. Not signed, sealed, and delivered yet, but it will add to the deficit, and that has investors worried. And so we didn't have such a great Treasury auction earlier today, Tim.
Yeah, Gina Martin Adams is in the house. She's going to be joining us on everything we need to know about what's happening in the equity trade. And also, we're going to ask her, about what's up with the bond market. Also, speaking of what's up with Target, Carol?
What's up with Target? Yeah, that's what we're going to get into. We've been talking about the retailers all reporting earnings this week, so we're going to get into that in just a moment. Stock's down about 4%. What you need to know about the company and what it says about consumers.
All that and more. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Powell.
Thank you very much, Tim. Here's what's going on. Stocks are sliding. 54 minutes to go ahead of the close. That weak Treasury sale lifting U.S. yields. Whole lot more coming up in just a moment with our Gina Martin Adams. And here's where we stand. We have got the S&P 500 index down 88 now, down 1.5%. The Dow lower by 775, down 1.8%. Nasdaq slumping 250, down 1.3%. The Russell 2000 small caps being hit hard today with the Russell 2000 index down 2.6%. 10-year 4.58%. The 2-year 4.00%. The 30-year 5.08%. Gold up $30 the ounce, up 0.9%. West Texas Intermediate crude down 0.9, 61.46 a barrel, and Bitcoin right now up 0.1%, 107,109. Did see a record today on Bitcoin. Briefly, United Health Group tumbling 5% after the Guardian newspaper reported the insurer secretly paid nursing homes bonuses to reduce hospital transfers for ailing residents. Medtronic plans to separate its diabetes business into a standalone company. Medtronic down by 2.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Really do appreciate it. As we mentioned, we've got with us Gina Martin Adams because we're looking at equities right now, down 1.6% on the S&P 500. Also, the yield on the 30-year up above 5%. Gina Martin Adams is Chief Equity Strategist for today, as Carol reminded us, inequities happening right at the time that we saw a weak bond auction.
Yeah.
How do you look at something like this in the context of a spending bill that's making its way through Congress?
Yeah, I mean, I think that Carol spoke about it earlier, pretty much right on the head. We're a little bit, the bond market is concerned because we're reaching the debt ceiling. We're going to spend even more money. It's just really difficult to justify owning bonds in that kind of environment to the degree that you would have yesterday, the day before, a year ago. And that certainly is creating some risk, peripheral risk to the equity market. Now, remember, the tariff risk also played out through the bond market, right? When the bond market started imploding, the stock market then was imploding, President Trump pivoted. So let's see what happens with the bill on account of the bond market pushback if it continues. I don't think one day makes a trend, and I'll defer to Ira Jersey as to whether or not this is a game-changing day or not. But I do think you want to watch the bond market as the primary source of risk and movements in the broader financial markets right now, including the equity market.
But how do you think about, okay, so let's say we do get a massive spending proposal, and we were talking about, so what does that mean if we have a higher rate environment? That puts pressure on everybody, right? And on the economy. And that ultimately will play back, right, in terms of maybe earnings or what the corporate financial pictures look like.
Yeah, I mean, it depends on what is in the package. And I think that this is what's kind of still being hammered out. We don't really know what the package is going to look like. We don't know what it's going to be passed. But so far, what it appears to be is a very different kind of package with respect to the corporate profits implications than was the 2017 package. In that, in 2017, we got lovely reduction in corporate tax rates. We got all these incentives to invest.
Is that not in there?
This time around, it's just a continuation of what we had.
Okay.
It's not anything new, really, for corporates, except for on the margin. Maybe some incentives for small business owners. Proprietors' income could be taxed at lower rates, for example. Households might get some sweeteners. But corporates net aren't getting what they got last time. So you've got to balance that when you think about the equity market.
Gina, does it offset the increased costs that American consumers could feel as a result of tariffs?
Difficult to say because we don't know where tariffs are going.
I thought you were going to say difficult to say because we also don't know.
Yeah, we don't know
where the bill's going to go.
What the bill's going to really look like, but mostly
too much unknown at this point. Isn't that the idea that the president has essentially said, okay, well, the tariffs, it's going to be a little bumpy, but if I get this bill through, you're going to feel relief.
Yeah, you'll feel relief offset by the tariffs pressure that is going to continue to emerge. But we don't know what tariffs will look like. Remember, we're only on a 90-day pause. We're not permanently at 30-10. a 30 China 10, everybody else, we're on pause. So we don't know where we're going. At the 30-10, it does still look like it's a downdraft on corporate earnings anyway. Will it ultimately pass through to the consumer? It seems to me that corporates are largely taking the brunt of this in margins, at least at 30-10. Maybe to some degree we see a little bit of pass through to the consumer, which does mean that the tax reform, to the degree that it is an outright reduction in corporate tax rates for households, should be beneficial to the consumer. But at the same time, it probably is not as beneficial to corporates as the tariff is a drag on corporate profits.
Yeah.
So you've got margin pressure on companies as the net emergent theme out of both, the combination of both. Now, I have to caveat everything with, we still don't know.
Right.
We don't know where tariffs are going. We still don't know exactly what the tax reform is going to look like. But that's where we stand today is net, this is a downdraft for profitability of companies, maybe an upturn for households.
And as you said, let's see what we get next from the White House, whether or not we see a pullback or something in the president, because he does watch the markets. We do know that. Ultimately, we keep hearing that. Gina, thank you so much. Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams here in our Interactive Broker studio. All right, let's get to retail, because retail earnings have been coming out. We've talked about Target earlier today, and the stock's under pressure, Tim.
Yeah, it is down to 4.8% as we speak, but it was down as much as 7.7% earlier in the day. The company cut its sales forecast. It followed a sharp pullback in spending and a hit from tariffs, boycotts, and consumer confidence.
On it, as she always is, Jen Bartosha. She's Senior Retail Staples and Packaged Food Analyst, Team Leader for BI Consumer Team. Is having a busy week. She joins us from BI headquarters in Princeton. Jen, always good to check in with you. Walmart last week reported this is a bit different. Is this a Target problem? Is this a sector problem? How are you seeing it?
Yeah, it's an interesting dynamic that's going on right now. This problem is a little bit unique to Target, but it's also relevant for any of the retailers that are in the more discretionary categories. The one thing you can't forget about Walmart is that more than 50% of its revenue comes from groceries and consumables. And so it has the ability to when you're talking about tariffs, you're talking about consumer spending, they have a buffer because of all of that grocery business that they have. When you're talking about Target, they're still much more reliant on discretionary spending. And they've had some missteps along the way. You've mentioned, some of the boycott ideas, with regards to DEI policies. They've had challenges with their merchandising mix. And so some of it is self-inflicted, but some of it is just a reflection of the current environment.
What's the pressure that this puts on Brian Cornell for this turnaround? Because certainly, as you mentioned, some of this is unique to Target, but this is not a problem or a challenge that has been one quarter in the making. I mean, we could have talked to you about Target's challenges at this point. We have been for years.
Yeah, it's a very good point. I think I'm hearing increasingly questions about whether a new management management change is required at Target to really push a new agenda. One of the things that came out of today's call that was a little bit concerning, once again, higher than expected markdowns are needed. They have to right-size their inventory again. This is a repeat type of scenario that Target seems to keep finding itself in.
Why?
And that's just a challenge.
Jen, I remember when Target could do no wrong. And I have to say, when my daughter was younger, we were in there all the time, but they were great about featuring designers and having fashion label. They just seem to be kind of hitting on all cylinders. And so I'm just kind of wondering, what is it? What do they need?
I think they need to get back to where they become a leader in what's fresh and interesting and new. And for a long time, what was a differentiator for Target was that they had that differentiation in quality in their private label brands. They were fashion forward. But in the last couple of years, you've seen Walmart, you've seen Kohl's, you've seen Dick's, all invest in private label and improving the quality, improving the breadth of their assortment, and becoming a little bit more fashion and function forward. Those are all areas that were Target's domain. And so it's a lot easier to lose a customer than to win them back. And so I think that's what Target's finding now, is that some of their competitors that were at a disadvantage before are now on more of an equal footing, and customers are okay with that. And so it's going to be a little bit of a long haul for Target to win some of those customers back.
Well, let's talk specifically about the boycotts and the stuff that was mentioned about the backlash of DEI initiatives that the company has taken. Is it because Target for years was seen as a company that did embrace, at least in its marketing, at least in the way it sold, at least in the businesses that it supported and featured on its shelves, was a company that was fully backing the idea of diversity, equity, and inclusion. Then it moved away from this with the recent pressures, and customers are rebelling now?
Yeah, I mean, the Target brand, I mean, for over a decade has been about inclusivity. They were one of the first retailers that really embraced size inclusivity. I remember them showing, special products for people who had handicaps. Like, it's been part of their DNA for a very long time. And it's part of what people appreciated about the company. And so although, policies change and things change, I think the way Target went about it kind of alienated some of their customers. And people didn't understand why there wouldn't be as much support for perhaps a women-led business or for a black-led business. And so that's part of what's caused a little bit of that friction with what their core brand has always been about.
All right, so 30 seconds. We're in the midst of retail earnings, lots of things. What's next on your radar?
Well, tomorrow we have Costco and we have BJ's, and the warehouse clubs are, by all accounts, doing really well. So it'll be interesting to see if they continue that momentum tomorrow.
All right. Love it, as always. Just looking at Costco, that stock's down just about 1% here ahead of its earnings. Stock, though, up about 12% year to date. Jen, thank you. As we mentioned, though, Target continues to be under pressure. Our own Jen Bartashis, she is, of course, team leader for the BI consumer team, senior retail staples and packaged food analyst. You want to know retail? You go to Jen.
Also, check out her research and the entire team's research on the Bloomberg terminal. BI Go to get to Bloomberg Intelligence.
I wonder what it's like VC investing in an environment like that. Turns out we've got a great guest who's dealing with just that. That's next on Bloomberg Business Week Daily.
Get the Bloomberg Business Week newsletter, BW Daily, delivered to your inbox every weekday. It's the power of Business Week in a handy form. Sign up now at Bloomberg.com/newsletters.
Live business news, breaking global headlines, and conversations with the names that move markets. Listen to Bloomberg Radio on command anywhere you have an Amazon Alexa device. Just say, Alexa, play Bloomberg Radio.
Join us in Atlanta or via live stream on August 12th for Bloomberg's Business Value of AI event and networking reception. This event will gather business and technology executives to share their experiences and provide insight into how to best use data to optimize the customer experience. You'll also learn how companies have successfully implemented AI agents that have led to improved productivity and profitability. This program is proudly sponsored by IBM. Register at bloomberglive.com/AI/Atlanta.
Imagine home. The smell of coffee, the sound of a lawnmower, the sun's warmth on your face. Free to be yourself, surrounded by love that helps you grow. This is a place to call home. That's an American dream we all deserve. But in 50% of U.S. states, you could legally be denied housing if you are LGBTQ+. Get the facts and hear real stories at lovehasnolabels.com. Brought to you by Love Has No Labels and the Ad Council.
On a recent edition of the Big Take podcast, Bloomberg Weekend editor-at-large Michelle Hussein sits down with billionaire Elon Musk at the Qatar Economic Forum. Hussein spoke with Musk about his future at Tesla, his ongoing feud with OpenAI CEO Sam Altman, the possibility of Starlink going public, and his work with Doge.
I want to ask you about the total amount that you're planning to save through Doge's work. Before the election, you said it was going to be at least $2 trillion. The number currently on Doge.gov is $170 billion. That's a big change. What happened to the $2 trillion?
Well, do you expect it to happen immediately?
Well, is it going to happen? Because Doge is supposed to run till next July.
Your question is absurd in its fundamental premise. Are you assuming that on day, within a few months, this an instant $2 trillion saved?
No, I'm not at all. I'm just asking, is that still your aim then? Is it still your aim to get to $2 trillion?
Have we not made good progress given the amount of time?
That's exactly what I'm asking. So is it still your aim to go from 170 billion to 2 trillion?
The ability of Doge to operate is a function of whether the government, and this includes the Congress, is willing to take our advice. We're not the dictators of the government, we are the advisors. And so we can advise, and the progress we've made thus far, I think, is incredible. The Doge team has done incredible work, but the magnitude of the savings is proportionate to the support we get from Congress and from the executive branch of the government in general. So we're not the dictators, we are the advisors. But thus far, for advisors, the Doge team, to their credit, has made incredible progress.
That's what's on a recent edition of the Big Take Podcast. Listen to the full episode on Apple, Spotify, the Bloomberg Business app, or anywhere you get your podcasts.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. Stocks are sliding. We have got the Dow, the S&P, Nasdaq, all moving lower. And in fact, right now we are looking at the lows of the day with the Dow down 846 points. That is a drop right now of just about 2% here. S&P 500 index down 103, a decline of 1.7%. Nasdaq now down 325, a drop there of 1.7%. And the 10-year, 4.58%. The 2-year, 3.99%. The 30-year, 5.08%. Gold up $32 the ounce, higher by 1%, $33.22. West Texas Intermediate crude down 1%, $61.42 a barrel on WTI. And Bitcoin was at a record today right now at 106,860. And this Bloomberg Business Flash is brought to you by ShipStation. Calm the chaos with the shipping software that delivers. Use code Bloomberg for a free trial at ShipStation.com. That's ShipStation.com with the code Bloomberg. So the Dow, the S&P, Nasdaq all declining today. Earnings after the bell coming up will include software companies Snowflake and Zoom Communications. Right now we have got Zoom ahead of earnings down 1.4%. Snowflake ahead of earnings down by 1.6%. But big numbers to the downside, a drop now of 1.7% on the S&P, the 10-year 4.58%, the 2-year 3.99%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, we last checked in with Jenny Rook in February of this year. It was in Take Your Time Machine. Okay. This was in the midst of a lot of the news about federal money being pulled from universities, a pullback in spending that traditionally goes to research. And what we've heard since then, and what I've noticed since then, reading books, reading articles, reading about innovations, is a lot of what I've read about is this whatever, X, can trace its roots back to public funding.
Yeah, it's really important, right? The early development starting in so many federally funded projects. Let's get into it because we know she's got some thoughts on this. We've talked about this. Jenny, of course, Jenny Rook, founder and managing director of Genoa Ventures. It's a VC firm that invests in, as she says, the quote, next generation of companies at the convergence of technology and biology. So much going on when you think about that and layer in AI. She joins us here in our Bloomberg Interactive Broker studio. It is good to have you back with us. What's amazing is somebody said to me, what is it, February, March, April? Got to use my fingers.
A lifetime.
3 months, but a lot has happened.
So much.
It's crazy.
From the administration. And especially things that when we think about funding that goes to universities, different projects, NIH, like I'm just thinking about it, where so much can come out of it that we take for granted today, but also creates companies, adds to the economy. Tell us how you're kind of taking all of this in and then your world in terms of investing in it.
Yeah, no, you're quite right. Thanks for having me back. It's such an important topic. And it does sound like you've been looking into it since I was here last. And finding just how much of what gets to market started as basic research, funded by the federal government, sometimes decades before it became something that we can benefit from as consumers, as patients, as just regular citizens. So as I've been talking to, we talked last time about large, well-funded universities. Are they really going to be hit by this? And certainly the numbers are quite large for those. But what's important to know is that these kinds of discoveries can come from anywhere. Right? They're often a passionate researcher in a university that might be in a college town, that might be the only industry in that town. And so not only the funding that drives their particular projects, looking into, for example, the mechanisms of a cancer gene, but also the dollars that then go through the indirect funding to that university or college so that it gets to keep running as a business and keep supporting its local ecosystem. So I'm seeing kind of up and down the chain, regardless of whether you're Stanford or a college you haven't heard of, it's really resetting how people are thinking about what they can get done in their labs and in their institutions.
I know I've talked about this book quite a bit over the last couple of weeks, Carol, but we're hoping to get the authors on the program, Abundance, Derek Thompson and Ezra Klein. And one thing that I learned in that book was that the inventors of the mRNA vaccine, who won the Nobel Prize in 2023 for mRNA, their work in mRNA, they essentially toiled in obscurity for decades.
Yes, that's right.
And that story is more the norm.
That's right.
Than it is the outlier, it seems. And that was something that kind of blew my mind, because you have this research being done and it doesn't seem like it's going to amount to anything until it does.
That's right.
That's kind of the world that you live in.
That's kind of the vibe. Yeah, it's why we call it discovery. Development is another thing. When now you have something, it kind of works, you want to turn it into a product, that's a great place for venture capital to step in. We love to engage early with those companies. But the discovery portion, you often don't know what you're looking for. You're just curious, right? You're picking things apart, you're turning over rocks.
So how patient are your investors when it comes to this stuff? Because you're not, investing in an app that has high margins and is going to, be a game. If we're thinking about this, in the last 15 years of venture capital and what the winners have been, you're not investing in a social media company that has to go viral and become a top app in the App Store, for example.
Well, certainly the journey for a bio or science-based company, a deep tech company, being venture-backed and then becoming a great exit for LPs, those are very different. And the kind of capital you need and whether regulatory matters, which is another thing we can talk about.
Right.
Those are pretty different versus an app, as you say. But the rules of venture capital are still the same. In 7 to 10 years, you need to give your LPs back 3x net. Now, very few VCs manage to do that, but you can still find winning playbooks in the sciences that work for that journey, and that's what we're trying to do, and other life sciences VCs do.
Hey, one thing I want to ask you. So I just want to rehash for everyone who's listening at this point, because we are seeing markets pretty much hover near their lows of the session. So we're still down about almost 1.8% on the S&P 500, down about 105 points, down 2% on the Dow Jones Industrial Average. Nasdaq 100 down about 1.6%, down 343 points. This, as we've said, really the focus is on the Treasury trade, as we've seen yields move up, a 10-year note with a yield of 4.58, so just shy of 4.6, although we hit that earlier. But really at the longer end of the yield curve, we've seen also yields move up. When we think about the volatility within the market environment, for you as an investor, are you going to be more cautious in an environment like this? Or are you able to maybe make a bigger investment in something because there is stress out there? I'm just curious how that plays into your world.
Yeah. I think most early stage VCs, ourselves included, are already taking a lot of risk, and that is our job, right? To take well-characterized risk that in the long term can deliver outsized returns. And so temporary volatility doesn't change our day-to-day strategy typically. What it does change is the availability of capital to deploy against that strategy. So investors, LPs who are thinking about all of their asset classes, who are dealing with so much volatility and uncertainty, it can be very challenging to have the long-term discipline to say, now is a great time to put money in a 10-year illiquid asset with the hopes of upside. Even if they have that discipline, it can be hard to even just create the bandwidth to find great venture opportunities. So it's a tough time to do the next venture thing, I would say.
It makes it tough. Jenny Rook, we're talking with. She is the founder and managing director of Genoa Ventures, a VC firm that invests in, as we talked about, a lot of life sciences companies, looking at that cross-section between technology and biology. We talked about the volatility in the markets and how it's impacting perhaps you, Jenny. There's a headline that crossed coming from the Wall Street Journal that RFK Jr., of course, key in terms of health and human services for the government, chief advisor to the president, expected to criticize vaccines. We saw some movement this week in terms of vaccines that was seen by vaccine makers Moderna and others, that maybe it wasn't as bad as everybody thought it might be in terms of approving vaccines for some folks. I'm just curious how policy out of Washington, regulatory environment, and so on also factors into how you are investing, where you are investing.
This is a really important question because regulatory, of course, is critical to making sure that safe, effective medicines, interventions, foods are regulated, get to the public in a timely manner. Right. And so venture capitalists often, surprisingly, actually embrace regulatory because it's a way to make sure that something gets to market in a way that will be accepted and effective. With patients, for example. And so what's important is to have kind of clear rules of the game. What is required to show safety and efficacy? On what timeline will a regulatory body review those data? That's what's so important. And that's where we're really seeing a challenging set of headwinds as venture investors, where we're often funding a company, just enough, or maybe just slightly less than enough to get to the next milestones, which may be regulatory approval. And if that's going to take an extra 6 months, that can kill a company. They don't have the funds to get through that.
What, in your view, is the long-term implication of this FDA, this HHS, under Secretary Kennedy?
Well, if I knew, that would be a different
You are a venture capitalist, so you are supposed to know the future.
Yeah, we're supposed to take important, risky bets. So I don't know, again, what the journey will be, but perhaps one of the upsides to taking these very long-term bets is when I think about a company we might invest in today. Okay. Do I believe we will have a functioning FDA that is science-driven and looks at novel medicines and tries to get them to the public in 7 to 10 years? I do. We will still have that, right? Will the timelines be different? Will the requirements be different? Could be. But one of the things I love about science is that it invites inquiry. It invites being tested. It invites discussion amongst people who are trying to work for the same outcomes. So I'm a long-term optimist, let's say.
Hey, Jenny, one last question, because one thing that has become a narrative and a trend is investors looking outside the United States for opportunities. Is that something you are increasingly doing as well?
This is real. We always look at Genoa, we look globally for the very best opportunities, as you were describing, at this unusual convergence of bio and tech. And we look broadly outside of healthcare, food, industrials. But what I am seeing, I just came back from a meeting in Paris focused on industrial bio, which is making industrials like chemicals through bio routes. What I'm seeing is a couple of things. The mood there is lighter than here, for one thing. They're not wrapped up in our drama. And
you sure it's not the wine and the good food? Because everything...
and the cheese. They put out a great cheese plate at break as well. But there is less willingness to deploy their capital in U.S. companies, which had been, in the startup space, the darlings of the venture capital community. So we're seeing capital shift, and this is true, as you well know, in the public markets as well, up and down, whether it's a startup or a publicly traded leader to Europe.
People have said it's a rebalance. Everybody was too overexposed to the U.S. Do you think it's a rebalance, or they're saying, I'm not so sure I like the U.S. environment? Just got about 30 seconds.
I think it's the latter, and I think it's going to make it's a great opportunity for European investors and European companies to attract some U.S. capital that perhaps wouldn't have looked outside.
Great perspective. So glad you stopped by again.
Yeah, thanks for having me.
Always good to have you here. Jenny Rook, founder and managing director at Genoa Ventures, joining us here in our Bloomberg Interactive Broker studio. Quick check on the markets.
Yeah, down 1.6% on the S&P 500, 1.9% on the Dow Jones Industrial Average. The Nasdaq down by 1.5%. Taking a deeper look in the S&P 500, everything, Carol, is in the red except for communication services. That's up 0.7%.
Yeah, something like real estate down about 2.5%, the worst performing major industry group in the S&P. I'm looking at a 10-year note with a yield of 4.58, 2-year note with a yield of 4%, folks. This is Bloomberg.
CBS News Brief. President Trump hosted South Africa's president at the White House today and complained about the treatment of white farmers there.
People are fleeing South Africa for their own safety. Their land is being confiscated, and in many cases, they're being killed.
South Africa has denied those allegations. Defense Secretary Pete Hegseth has accepted the Boeing 747 offered by Qatar as a gift to President Trump to use as Air Force One. The markets are off today after more disappointing earnings reports, including Target. Analyst Bob Dahl.
The consumers are also
holding back some. They're concerned about the future, their jobs, inflation, wages, and so just a cautious tone.
The World Food Program insists the aid trucks Israel has allowed into Gaza aren't doing any good.
None of these aid, that is very limited number of trucks, have reached the Gazan population.
On Wall Street, the Dow is off 821 points. CBS News Brief. I'm Cammie McCormick.
Get the news you need to start your day in just 15 minutes.
The U.S. and China have agreed to cool off their trade war.
President Trump's push to end the war in Ukraine. Wake up with Bloomberg Daybreak U.S. edition.
Israeli forces have taken over large areas of Gaza.
Aaron Judge, yet another home run.
Available now on your podcast feed. Each weekday morning at 6 a.m. Eastern.
The Oracle of Omaha eyes the exit.
Subscribe to Bloomberg Daybreak U.S. edition on Apple, Spotify, and everywhere you get your podcasts. Bloomberg Radio. Context changes everything.
Audiences are calling Can't Look Away a must-watch documentary of 2025. Based on investigative reporting by Bloomberg's Olivia Carville, filmmakers Perry Peltz and Matt O'Neill confront tech giants, exposing how social media is addicting our kids and impacting mental health.
You say goodnight and you think your kids are safe.
These are children that have been addicted by these apps.
Every parent in America is terrified.
Stream Can't Look Away now on Jolt.film. That's JOLT.film. Watch today.
This is a Bloomberg Money Minute. Many homeowners are delaying home improvement jobs right now, including new floors and bathroom and kitchen renovations, but they're still spending on smaller projects. That's according to Lowe's, that says sales were down last quarter, mostly because of bad winter weather, but Lowe's today is sticking with its full-year sales forecast. Kraft Heinz says it's looking at potential strategic transactions as it works to turn around a drop in sales. The company has seen total revenue decline for 6 straight quarters, and Food Dive reports the company's already been adjusting its portfolio by bringing Philadelphia cream cheese into the frosting segment and creating a Crystal Light hard seltzer. Yelp is out with the list of the top burger chains, and In-N-Out Burger was in the top spot, followed by the Habit Burger Grill, Shake Shack, Culver's, and Islands Restaurants. Stocks are extending their slide. They're now down between 1.7 and 2%. I'm Nancy Lyons, Bloomberg Radio.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Intelligence Podcast, a conversation with Marianne Bartels, Chief Investment Strategist at Sanctuary Wealth, on the markets.
There is earnings uncertainty, and one of the things I learned many years ago is when you have scarcity of earnings or the concern of scarcity of earnings, growth outperforms value. And what is growth? Technology. Where are most of the earnings coming from? Technology. Tech is still the leader. And I really like how it's come back very strongly, how the earnings are there. So although we have earnings uncertainty, what we know is when we have uncertainty, growth tends to outperform, which is tech, which is the leadership. So I still think even in an environment where it's hard for analysts to estimate earnings, I do think companies are going to figure this out, and they'll manage their cost structure. And I think we'll adopt artificial intelligence faster. And that's going to allow margins to improve. And I don't think analysts know yet how to put that in. And that's not a negative criticism. It's something that's new. But I bet you companies show us that they're able to do it. And then the numbers will wind up being there.
How long do you think you have to wait? So you have Federal Reserve officials looking at like a 3 to 6 month window where they'll get more clarity on the macro and the hard data. To your world, what does that mean?
So I think we can go through the summer, and once we start getting earnings in the summertime, we may see some volatility.
Hear the full conversation on the latest edition of the Bloomberg Intelligence Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are seeing a very slight bounce off the bottom. Emphasis on very slight. We've got the Dow, the S&P, Nasdaq deeply in the red. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are under pressure after that disappointing bond auction. The Dow is currently down 764 points. S&P's dropped 1.5%, while Nasdaq is off by 1.3%. The U.S. 10-year yield jumped to 4.58. Gold is up 1%. Oil is in the red. And the VIX, that's higher by 15%. Among the main 11 S&P sectors, only telecom was in the green. Real estate and healthcare were under pressure. And leaders to the upside in the Dow, only Coca-Cola was in the green, while UNH fell 5.5% and led to the downside. After earnings, Target fell 5%. And in deal news, OpenAI to acquire Johnny Ive's AI startup in a $6.5 billion deal. Wrapping things up, Snowflake reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And again, a reminder, keep it locked in to Bloomberg Radio right through the closing bell. And of course, we'll keep you updated on Asian markets this evening to find out how markets continue to react. And to hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 18 minutes to go until we wrap up the trade on this Wednesday. Very different tone from kind of how we kicked off the day. Having said that, you just heard from Bill Maloney and Charlie Pellet. Just to remind you of where we are with less than 20 minutes to go. We're still down about 87 points on the S&P 500, a decline of nearly 1.5%. We're just coming off our lows, but we are certainly well off our best levels of the day. The Dow Jones Industrial Average, a decline of 757 points, down also nearly 1.8%, so some pressure there. Nasdaq 100 down about 1.2%, down 251 points. Again, all of these major equity averages off their best levels of the day, and they are near their lows. You look at the S&P 500. Tim, you've got about 486 names to the downside.
It's not pretty.
No, only 18 gaining ground, so you are looking at some broad-based selling. And we should point out the reason is the worries that we are seeing play out once again along the Treasury market, the Treasury curve. We had an auction that didn't go so well. Demand was weak there. And so you are looking at really the longer end of the yield curve bopping up in a big way. We hit about 4.6% on that 10-year note. Got a 2-year note that has been trading around 4% as well. And so there are concerns again about this massive spending package that's making its way through Congress, has some ways to go, but it also will add to the deficit. And so deficit hawks are not happy about it. Investors on Wall Street aren't happy about it as well. They're concerned.
Yeah, also checking out what's happening as you peel back the layers of the S&P 500. You actually see Apple as the biggest drag on the S&P 500 right now, followed by NVIDIA down 1.8%, Microsoft, Amazon, Tesla, United Health Group among the biggest decliners as well. I want to bring in Sandy Villery, portfolio manager for Villery & Co., joining us from New Orleans. This is a 4-generation family-run firm, Carol. We speak with Sandy all the time. Sandy, good to have you with us. How are you?
Good. Thanks, Tim. Thanks, Carol. Good to hear from you.
Yeah, good to have you join us today. I just want to get your thoughts on how you're looking at what's happening in Washington, because that's really what we're seeing with the market reaction today, at least with that bond auction that then sent equities tumbling today. What's your view there?
Yeah, I mean, we're very stock focused, but I will say it's impossible not to pay attention to it because just you look at what happened in 2025 so far, all about the tariffs. Now we've got the new bill that's going to certainly increase deficits a little bit. And to your point, we had auction. The 20-year auction was certainly weaker, and now we're seeing yields back to where we started the year around a 460. So it's hard to avoid a lot of what's going on and trying to focus on individual names.
Yeah, exactly. And you've got your Villeray equity fund. I'm looking at it up about 1.6% on the year. If I look at your balanced fund, it is up about 3.4% year to date. How much movement have you guys been making in and out at this point?
Yeah, but we started the year very defensive after a really good 23 and 24, especially for the S&P that's so tech heavy. So we were more defensively positioned. We had some cash. And then when we got into the lows, those early April lows, we started to buy, and we got about 20% through what we wanted to before the market just V-shaped and went right back up. So now we're back to where we started the year, and we're getting more defensive again. And I think if I look at the S&P and how it may end the year, I see about 5,500 or so on the S&P, and I think it's going to be carried down by a lot of the larger cap tech names. So I think defense is going to win championships in the rest of 2025.
All right, so let's talk about kind of where you are committing money. And I'm assuming these picks are something that have been recent buys, but you can correct me if I'm wrong or right on that. Republic Services, we're talking about a $78 billion market cap company. We're talking about waste management. Stock has had quite a run this year, 26%. Recent buy, adding to it, lay it out for us.
Yeah, I would still buy it. This is an incredible business. It just as long as people continue to get their garbage collected, we feel good about it. It's a mid-single digit free cash flow compounder. They just had a great quarter, and they're getting more into recycling. They've got 2 polymer centers, so fundamentally they're doing everything right, and it's where I want to be, which is larger cap defensive. So I think it's gonna do well throughout the duration of 2025.
Another name that you like on holding, I own their footwear, their sneakers.
Full disclosure.
Full disclosure.
Yeah. She's not wearing them right now.
I've talked with their, CFO. So we've had them on, we've talked with them. This stock has been on a tear. You're talking about up about 57% in 2023, up about 103% in 2024. This year it's up just shy of 9% here. Again, how long have you owned it? Have you been adding to the position? What are you doing on this one?
Yeah, we bought it, frankly, not much longer after the IPO, which is all the way back in 2021. So we've had it for some time, and that's kind of our style, is to buy and hold, over time. We did add to it not too long ago, and we still think it's going to do well. Now, if you do have a choppy market and things are weaker, this is a great name to add on any weakness. They're just getting started still, in my opinion. Probably grow earnings at 25% over the next 3 years. And they're starting to get into apparel. They're getting more stores out there, probably closer to 100. And if you're worried about supply chains, they get about 80% through Vietnam as opposed to China. So I just feel like it's still going to be moving in the right direction. And if you get some weakness, you get an opportunity to add to it. And I would.
Did you buy in early April after it was hit?
This wasn't one that we bought in April, unfortunately, but
it's up about 60% since there. I didn't either, so I'm with you. But yeah. Okay, you didn't.
Yeah, we did. We bought 2 other names, but what an opportunity! And anytime you can buy a great company like this that is still just running on all cylinders, and in our opinion, is you buy it on weakness. We had other names we wanted to add at the time.
What you said, you added 2 other names off of the April sell-off. What were they? I'm just curious.
It's interesting. One is a company called Pinnacle Financial that is a bank in Nashville that we really like, and our intention was to take a larger position. We just never got the opportunity to do so. Unfortunately, just because of the V shape. All of a sudden it was just got to a multiple that was a little bit too high. And we added to a little bit of Stryker, just knee replacement, hip replacement, probably on the safer side of what was going on at the time. So like both names, but unfortunately didn't get a chance to fill at least the Pinnacle.
Oh, okay. So in other words, you did buy Stryker at the low, but Pinnacle, you saw it, wish you had, but hadn't bought it. You didn't buy it at the low.
So not to get into too much, but we bought about 20% of our position, and then by the time it V-shaped, we were sort of boxed out from finishing it.
Okay.
So we actually kind of sold what we had, and we look to add it if we do get more choppiness in the next month or two.
Pool Corporation. I pulled up the DES page on the Bloomberg terminal. It's down a little more than 10% this year. I actually was expecting it to be lower because I recall late last month the company reported earnings that they essentially said fiscal year earnings per share will come in just about what analysts saw, but they did report first quarter earnings per share that came in shy of estimates, and first quarter net sales that came in shy of estimates. This one was surprising for me to see on your list of stocks that you're bullish on, because isn't the concern the company essentially said the environment was weighing on new pools? So not necessarily a name that you would want to own in an environment where consumers aren't spending money, no?
Yeah, so what happened in 2023, there were about 70 to 75,000 new pools built, and now we're down to about 62,000 as you closed out 2024. So about 15% of their business is new pool construction. It does carry higher margins, and it's a great part of their business. But 2/3 of their business is just repair and maintenance of your swimming pool. So this is a true, long-term hold where, as long as people are putting chemicals and chlorine into their swimming pools, they're remodeling, and basically every 10 to 12 years, you might have to replaster. These guys are as big as their top 10 competitors combined. And so when you get weakness in one little part of their business, new pool construction, which is important, and that kind of pushes the stock down to a reasonable valuation to us, it's a great opportunity to add. If you get any strength in new pool construction, and look, today's interest rates aren't helping, right? People aren't going out and trying to borrow money to put in a new pool. But in general, you get any sort of strength out of already, diminished expectations from analysts already that have taken their numbers down. I think it's got, could be a $350 stock, in my opinion.
Hey, one thing I'm curious, Sandy, at this point, are you higher in terms of your cash allocations in your funds right now, kind of keeping some powder dry, lack of a better expression, but often used, right, in environments where we're not quite sure what's happening next? Are you keeping more money handy and ready to put to work than you normally do?
Yeah, we do have higher cash levels, and we sort of came into 2025 like that, and then we tried to invest what we could. We just didn't have a long enough. We didn't think the whole market malaise would be 3 days, and so we didn't have enough time to put it to work. But now we did raise a little bit more cash, and so we are cash heavier than we have been. And it wasn't necessarily that we were worried about valuation or things like that. We couldn't find new stocks to buy that really met our investment criteria of being cheap. So we go to the sidelines. We'll get a little bit over 4% in money market and just wait for those opportunities. And ideally, we see them maybe over a weaker summer.
I've heard Warren Buffett say the same thing.
Yeah, no, that's right. And it's funny talking about pool. Berkshire Hathaway did just increase their position middle of May by about 900,000 shares. So they become a top 5 shareholder. So good company with those guys. But yeah, no.
What are your people really try to parse through every single thing Warren Buffett has to say at annual meetings and whenever he opens his mouth to try to figure out what exactly he's going to buy next. What are your, as a value investor, what are your parameters in an environment such as this to say, okay, I'm ready to get off the sidelines and buy this individual company?
Yeah, and that's where we were in that those April lows. We've got a laundry list of 10 names that really meet our criteria, which are just having a company that just absolutely dominates their niche, and Pool certainly fits that build. onsemi, Republic being the number 2 player behind Waste Management, but a really dominant franchise. That's what we're looking for. And many times you have to pay up for those types of businesses. But if you get market uncertainty and things that are going wrong from a macro or a DC standpoint, and you can get into one of those businesses, that's what we always look for.
We've gotten that, Sandy.
Yeah,
market uncertainty, right. Questions about the outlook. I am curious, in a day where we're all, seeing nervousness, risk off, come back into the equity trade and seeing those yields move up again. An argument that, go back 10, 20 years, we had concerns about the U.S. federal deficit. So I am curious how that factors into, I understand you're a stock picker, you're looking for valuations. Are you anticipating an environment where stocks are going to get beaten down even more? Maybe we even go into recession, and that's an opportunity for you? Or are you a little bit more worried that it's something more problematic? Or you're saying, you know what, this will turn around?
Yeah, I do think as yields pick up, I mean, if yields keep climbing, and I do think that's at the end of the day going to dampen equity returns as those go a little bit higher. I think there's when you look at tariffs and everything else that are going on, I think that causes boards of directors of publicly traded companies to sort of pause on some of the things they may have been doing. And I'm not calling for a recession, but I am calling for a little bit of a slowdown. And I think there's going to be better opportunities as we get further into the year than maybe we have right now. I mean, it's pretty amazing that the S&P was down almost 18%, and now we're back to break even. I'm sort of looking, towards the end of the year where I think that if you looked at a Vanguard value index, I think it could outperform, say, Vanguard growth. And if you look over the last decade, growth has outperformed value by about 7% annualized. So I'm also looking for some reversion to the mean. So in general, I'm trying to find those cheaper dominant companies in the market and trying to avoid some of the larger cap, expensive, Mag 7 names.
What portion of your assets under management right now do you have in cash?
I'd say in general, we're probably like 14 or 15%.
And what do you typically
higher than we normally are?
So what's your normal?
We're probably closer to 4 or 5%. Yeah.
Okay. What do you anticipate going? Look, you can't see the future. None of us can. But just in terms of the way you're thinking about this market environment, do you anticipate getting to that 4 or 5% level this year? Or are you willing to stay on the sidelines until next year?
No, we do not like to be this cash heavy. And again, it's not that it's more of a buyer strike, right? We just can't find those companies that are cheap because they've just rallied on this V-shaped recovery that we've just had. So I hope to be 97% invested, as we get through the year. We just need to find those names and put that cash to work. So a bit of an anomaly to be this cash heavy, frankly.
Sandy, really quickly, 30 seconds. Anywhere along the U.S. Treasury curve that you find attractive, or are you just staying away at this point? I know you're in corporates and other things, but I'm just curious when it comes to U.S. Treasuries.
Yeah, I would say if maybe they rallied a little bit further, maybe we'd get more interested in picking up some. We do have about 25% of our balance fund in corporate bonds. We like to buy triple B, single A.
No, but I mean in terms of treasuries, anything in terms of U.S. sovereign, or are you just staying away?
No, we're staying away. In our opinion, just looking at corporates versus treasuries, we think you get paid a lot more in corporates versus what tends to be risk free. And so we'd like to pick up a little bit more yield by doing a little bit of research and buying some, maybe some, on the lower end of investment grade, corporate debt.
This is exactly what Michael McKenzie told us earlier in our program. Yeah, why buy treasuries when you can go and buy from companies?
Totally. Like it makes sense, right? Yeah. Hey, Sandy, be well. Sandy Villery, portfolio manager for Villery & Company, joining us from New Orleans. All right, folks, we are counting you down to the close. Just a few minutes to go, about 2.5 minutes until we wrap up the trade on this very interesting Wednesday. Heading over to our TV colleagues. That's because the closing bell starts right now.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, taking you through to that closing bell. It's a global simulcast, and it starts right now. Scarlett Fu in the TV studio, Carol Masser and Tim Stenovec in the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube on a decidedly down day for the market. Carol Masser, only 18 stocks in the S&P 500 in the green.
Yeah,
Can you name them all?
No, but...
that was quick. You didn't even try, Carol.
Well, I wanted to kind of get to, we just had a conversation with Sandy Villery over at Villery & Company, right? And they've got a couple of funds out there. He's talked to us about having about 14% of their portfolio in cash right now. Typically, it's 4 to 5%, just kind of holding back to wait for things to calm down. So, and look for better opportunities. He's a value guy, but it's just a much more negative risk-off tone.
Yeah, I mean, look, if we think about the crucial moments of the day, the soft 20-year auction that led yields to spike earlier in the session and led stocks down, that was the issue. Concern with what's happening in Washington when it comes to the spending bill, when it comes to adding to the deficit, certainly top of mind. To continue on what Carol was saying, Sandy Villery essentially saying he's staying away from treasuries. He's like, I would rather buy, if I'm buying fixed income, I'd rather buy from a company that I know that can pay me back.
Well, Well, that makes sense.
Yeah, a lot of people have said corporate credit, at least by the big blue chip companies, is a safer bet, a safer haven than treasuries. I loved what Peter Bookvar said about how, like, he never writes about the 20-year auction. And surprisingly, this is the one day that you write about this kind of orphan child of the treasury market.
I don't think anybody writes about the 20-year auction.
Well, we are talking about it today.
Ira Jersey writes about the 20-year auction.
Okay, there you go.
20 years, so hot right now. All right, and the market not necessarily so hot as we get the closing bells here in New York. A really serious situation here as yields really did drive the story, pushing the markets down to one of the worst days in the last few weeks. The Dow Jones Industrial Average down about 1.9%, more than 800 points below that 42,000 level. The S&P 500 dropping about 1.6%, about 95 points lower on the day. And we should point out, about 485 stocks in that index are moving to the downside. The Nasdaq down 270 points or 1.4%. And the big decliners on the day, you're going to find that with the Russell 2000 down 2.8% and Dow Transports down 2.7%.
All right, you did the industry groups. You said, you didn't do the industry groups, but you said most of the names on the S&P 500. Wait. Most of the S&P 500 names are lower in today's session. The worst performer, Fair Isaac, which also had a tough day yesterday, right? It's down another 16% in today's session. Best performing name, it's going to be one of my gainers, guys. It's Alphabet. But
deep tease.
Take it away, Scarlett.
All right, let's take a look at the IMAP. A lot of red there. You mentioned Alphabet, Carol, and Alphabet, as well as Netflix, but just barely, are basically supporting the communications services sector. And you can see that's the one lone slice of the pie that is green. That group is up about 2/3 of 1%. And you have three sectors down at least 2%. Two of them are rate sensitive, REITs and financials, and healthcare losing 2.4% because of United Health.
All right, guys. There were a few gainers, as Scarlett just mentioned. Alphabet, certainly among them, up as much as 5.5% at its highs, finishing the day with a 2.8% gain. It was pretty much your biggest gainer in the S&P 500, Nasdaq 100. What happened is the company said it will offer AI mode in search to all U.S. users. So kind of AI mode.
Like turbo mode.
Like, exactly.
You got to pay for it, but okay.
Is that like hollow mode or what?
Hey, it's showing its commitment to redesigning its core business to keep pace with its new rivals. You know, AI mode, you do anything with AI and everybody gets excited. But right, as Alex said, you're going to have to pay for it. DeFi development, folks, small market cap, 438 million, but it was up 40% here pretty much at its highs, all-time highs, a blockchain developer. And this is after Solana said it instituted a 7-for-1 forward stock split today. So we saw this one also benefiting in the trade. And here's another one. I don't really talk about it a lot. DY is the ticker. Dycom Industries, $6.5 billion market cap. Builds fiber optic systems for cable TV operators, boosted its year forecast for contract revenue growth. And so this one definitely an outperformer, and the stock's up about 30%. There's a few other honorable mentions like Canada Goose and CoreWeave, but you'll just have to go to the Bloomberg to check that out.
Ooh, okay. Nice tease.
Yeah.
Hey, easy job for me today with the decliners. I do want to start with shares of Apple falling 2.3%. It was the biggest decliner on a points basis in the S&P 500. Shares fell right when we learned about OpenAI acquiring the AI device startup co-founded by Apple veteran Johnny Ive in this nearly $6.5 billion all-stock deal. But that was also the time that we got that soft 20-year auction that led yields to spike. So worth noting, not necessarily those two things correlated, but you can't talk about Johnny Ive without talking about his history at Apple and the way that Apple has missed out on the AI boom over the last couple of years. Check out Mark Gurman's reporting for that. Also, shares of Target down by 5.2% today. Shares fell close to 8% at one point in the day. The company cut its sales forecast following a sharp pullback in consumer spending and a hit from tariffs and boycotts. A little different than what we saw from Walmart last week for a couple reasons. One of them has to do with the fact that Target sells more discretionary items to consumers rather than groceries, whereas Walmart has about 50% of its sales as groceries. So those are not discretionary items. Consumers have to buy those things, so it buffers in an environment such as this. Target said Wednesday it expects net sales to decline by a low single digit this year, down from previous guidance for an increase of about 1%. Questions also being raised about Brian Cornell's tenure at the company and the turnaround.
Yeah.
What's that?
What's going on with Brian Cornell?
Well, look, in 2022, they said he'd be there for at least 3 more years.
Yeah.
And he's had many years. He's been there since 2014. Mm-hmm. He's a veteran of Walmart. He was the head of Sam's Club at Walmart.
Yeah.
He's at Pepsi also.
Got a great pedigree.
He did. And
have you looked at the relative performance?
Don't you feel like we've been having this story, this conversation about Target's turnaround for years at this point?
Yes, I do. 100%.
Yeah.
Like they had inventory issues in COVID, then it was the DEI issues.
Right.
Like there's been issue after issue that's target specific in many ways, and then not the macro, which is also a problem.
I just want to put this into perspective. Over the last 12 months, shares are down 40%. Walmart shares are up 48%. You pick any sort of the other competitors, whether it's the dollar stores, BJ's, Costco, you also see similar extreme underperformance relative to some of those.
You can't say it's all because of discretionaries and not having growth.
I don't think it's cool anymore. I used to love when it used to do the designer collaborations, and it was kind of fun, and they would have people line up for hours. They just, I don't know. I go in there and I feel like it's the same old stuff.
Yeah, and just maybe a little bit more expensive.
I was just going to say that.
A teeny bit more expensive.
You never leave Target without at least spending $100, $150.
True.
All right. You want to hit yields, Alex?
Oh, I do, yes.
Yeah.
Yields, they moved higher. It was the big story of the day, that 20-year failed auction. They were already trading heavy on the back end before the auction, but after that auction, you definitely saw a spike higher. The 30-year yield now at the highest level since October of 2023 did not see buyers come in once the 30-year breached the 5%.
All right. Well, speaking of a spike higher, shares of Snowflake, the enterprise software company that's been trying to turn itself into an AI company, up 3% in the after-hours trade after just reporting earnings. First quarter revenue did beat at about $1.04 billion. First quarter adjusted diluted EPS also beat at about 24 cents a share. The company says that for the second quarter, it is expecting revenue in the range, basically of 1.04, so no real range here, but that is above the average of analyst estimates by just a hair. The company also saying that for the full year, it expects its product revenue to be $4.33 billion. That's an upgrade from its previous forecast of $4.28 billion and above street estimates of $4.29. The share is now up 6% in the after-hours trade.
All right, let's look at Urban Outfitters, the specialty apparel company. Net sales for the first quarter beat analyst estimates. And if you look at the two biggest brands, Urban Outfitters itself and Anthropologie, those numbers also coming in better than anticipated. Segment sales, so comparable sales, up 2.1% when analysts were looking for a drop. No indication yet of the outlook, so that'll be perhaps in the earnings call with any kind of commentary about tariffs and all of that.
All right, one more before we bail out here. You got Zoom Communications. It's bouncing around in the aftermarket, up about 1.5% here. This is after the company came out and boosted its revenue guidance for the full year. The guidance beating the average analyst estimate. And it also sees adjusted EPS 556 to 559, had seen 534 to 537, estimates 536. So that's bouncing around, up about 2%.
And just real quickly before you go, Carol, Lumen shares right now spiking more than 20% here. The main headline, AT&T is going to buy Lumen's mass markets fiber business. We'll get you some more details on that, but those shares up more than 20%.
Yep, we're definitely seeing some movement there. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals.
Thanks for keeping it clean today, by the way, Carol.
You're so funny. All right, Alex is heading out. Scarlett and Romaine continuing over there on TV. Tim and I are going to keep it clean as we continue on Bloomberg Business Week Daily. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Carol Massar. I'm Tim Stenivek. Just a reminder of where we closed on the day today. Down 1.6% on the S&P 500. The Nasdaq down 1.4%. The Dow down 1.9% today. We did see some selling later in the session after about 1 p.m. That's when we got that soft 20-year auction. We saw yields spike, especially at the long end of the curve. Concerns that investors have about what's happening in Washington, the fiscal situation, what's happening with the big, beautiful bill, as the president calls it.
You know what you do when you're nervous? You know where you run?
Oh, I know what you're going to say.
You run to Bitcoin.
Okay, that's exactly where I wanted to go, because not everything was kind of nuts today.
It's the safe haven.
Well, I guess it kind of is now.
Is it really?
Bitcoin did hit an all-time high after the advancement of stablecoin legislation in the U.S., as it stoked hopes of regulatory clarity under President Trump. Taking a look at CRYP Go on the Bloomberg terminal, Bitcoin's up $100 to $108,600 as we speak. We've got Mike McGlone in the house. He's senior commodity strategist for Bloomberg Intelligence. He's usually hanging out in Miami, but he heard the weather could be good this week, so he came up to New York. He joins us
wrong.
Here. I know. It was nice the last couple of days. He joins us here in the Bloomberg Interactive Brokers studio. Welcome back, Mike. how are things in Miami?
Wonderful.
Okay. Are you a crypto bro now?
Actually, I've converted. Unfortunately, I'm much more bullish gold, starting last year, and that, so far it's playing out well this year. The crypto whole space now is just so much of a pile-on trade. And there's so much excessive silliness now. And it's the exact opposite when I really was getting bullish crypto, 2018, 19, when everything we have now we look forward to. We look forward to ETFs. We look forward to our government figuring out, by way it attracts dollars and invests in treasuries. And things that are happening, it's in the space. Crypto dollars, major bull market. Now, everybody's grabbing onto it. It really has the sense to me, like I remember in the stock market in 1999, and when I started in the business around the late 80s in Japan, it's just massive speculative excesses. So I'll give you one example. Dogecoin, so number 8 cryptocurrency. It was launched as a joke. It has $33 billion of market cap. So we're at the stage now, as long as the stock market goes up, Bitcoin will do well. Now, today was rare.
Quick correction, $34 billion.
There you go.
Isn't it as simple as all roads lead back to the White House? I mean, we are seeing a White House that is super, super friendly. And I don't think I'm speaking out of turn that you have a president or presidential family that is involved pretty heavily.
No, I think that's fair to say, Carol, given that tomorrow night is the dinner for the meme coin holders.
So that it's very clear. And so you do wonder, is this just a 3.5-year thing, or is it something more substantial, especially if you get into the regulatory side of things?
So it is clearly that, but do you want to buy into that where you're buying an asset class where you're completely dependent on the success of the Trump administration? Now, the key thing is they're going to do fine, but if the stock market goes down, everything goes down. So I'll point out a key fact about Bitcoin. It has a very high correlation to the stock market. On a 16-quarter basis, which is like the 4-year cycle, it's 0.7. And gold has a very low correlation to the stock market.
What is it, Ray? What is it on, not on a 16-quarter basis?
Because gold is a real safe haven.
Yes, there you go.
But what is it really this year? Because I think that's where people have latched onto it, especially as it led the rally ahead of stocks and outperformed equities.
I'll give you a good example. When the S&P reached its low this year, it was down 15% or so. That was April 9th. Bitcoin was down about 20%. Gold was still up about 20%. Now gold's up about 30% on the year. Bitcoin's hanging around 15%. So my point is Bitcoin and cryptos will be fine as long as the stock market goes up. So today was a key inflection point. I look at it as a trader. We've had a major short covering rally in all markets, Bitcoin, stock market. And to me, I look at it as, okay, maybe it's time to retest those shorts that we flushed out and make it prove strength. So I think tomorrow and now that S&P 500, unable to get above 6,000, can go back down to 5,000. And then we have those tilts from people like Gina Martin-Adams and Anna Wong. They're pointing out there's a good potential that we're having a recession kick in, the one we didn't get in 2023. So I think we're at very risky levels for Bitcoin, and I see gold as a bull market.
Yeah, continuation, right?
Exactly.
Of such. Okay, so listen, I don't know. I feel like you're preaching to the choir. I feel like crypto is still something I just don't quite get in terms of what it is.
I think Mike changed his tune a little bit.
Oh, absolutely.
Because you used to say to us, this is digital gold.
Yep.
Yeah.
This is a supply and demand story. This is what gold is, except it is a digital version. I haven't heard you say that today.
Well, so that's one thing I'm really worried about. I remember, having these fears in the past. For periods of time, it's digital gold, and other times it's leverage beta. Right now, it's very clearly leverage beta. If stock market goes up, it leads the way, and it has. If stock market goes down, it leads the way, and it has. So that's my fear now.
But can you be both?
At certain points. So that's why there's times to be overweight gold in an environment, and there's an underweight Bitcoin. They should be in the same space, and there's time to do the opposite. I think right now is still a time to be overweight gold. That's working out well this year. Gold's still beating.
No, but my point is, when you've got an asset, right, that can be like a safe haven, and then it's not. You know what I mean? Like, what is it then? It's
leverage beta right now. It's very much not a safe haven.
Right.
And we've proved that this year so far. Like I said, when we were down the lows, Bitcoin was down more than the S&P 500. Gold was up.
Ah, okay. So throwing a little water on this narrative that Bitcoin is a safe haven. Can we talk? Are you done with crypto? Because, he's here.
I've been so done with crypto.
Okay.
Only regret is like 10 years ago, right? Throwing a little bit of money.
But that was the time to buy. Now everybody, now it's the
get out your time machine.
Exactly.
Let's talk oil. This is like your wheelhouse.
Yes.
And we've been dying to talk about what's been happening with oil. We had a CNN report overnight that raised some concerns about Israel possibly striking in Iran, and this sent oil prices higher today. Taking a look at the big picture, though, the decline in oil prices that we've seen, To you, is that a recessionary signal?
Oh, absolutely. Gold up 30% in the year, crude oil down almost 20%. That very rarely happens. 2008 was the most extreme ever. That's a sign of lack of organic demand for crude oil. Obviously, we have more supply and safe havens going into gold. The key thing to think about crude oil is last year's low was $65 a barrel, and every time we try to pump up near there, it fails. Sellers come in. It's a bear market. I still think it's not going to bottom till around 40. It's not profound to say that because the last 20 years, every low has been around 40.
How much, though? What's the bigger factor, though, on oil? Is it supply or demand? Because, again...
Both.
But what is it even?
The most significant factor in all commodities the last 20 years is the excess increasing supply out of the U.S. and Canada versus demand in liquid fuels and petroleum. Right now, this year, we're on pace to be net exporter of 4 million barrels a day just from the U.S. With Canada, it's approaching 7 million barrels a day. China's demand has peaked around 11 million barrels a day of crude oil, but that's kind of lagging stuff. The point is it's peaking in their demand in China, and then OPEC's back on. So it's a classic bear market in a commodity that's going the way of whale oil.
But are we awash in oil?
Yeah.
Hold on. A commodity that's going the way of whale oil?
Yes. So
they've been saying that to me for 20 years. There's a book that came out when I was in college called, I think it was called like Peak Oil or something like that.
Yeah.
It didn't happen.
It didn't, but now it is. But here's an anecdotal point.
That's Jan Jurgen?
I'm looking it up.
I don't know.
My electric vehicle, plug-in electric vehicle, is 11 years old. The BYDs coming out of China are just phenomenal. And then this drilling technology, it's just a classic bear market. But this was the case. This wasn't the case when it made those lows at 40 the last 3 times. The first one was 2008, but it is now.
So does that say to you that, okay, we know the pushback maybe in this administration or the world, saying ESG and pushing all that, or EVs and so on and so forth. You're saying, nope, that's already left. We're going to go still that way, and it's going to hurt.
We also have a presidential administration very much with the vested interest of lower crude oil, and I think they're going to get it. And lower yields. They're not getting that yet now. But the bottom line for me, crude oil, is this is the trend before Trump was elected. And it's just going that way.
Don't you think, too, in terms of the Middle East, like they get it. They've gotten it for years of saying, listen, we understand this is, making us super, super rich, but this ain't forever.
Yes, and look what happened. OPEC was able to hold off their supply for a couple of years, and now they have no choice. They need the money. Also, what's a vested interest? What really hurts this war factor with Russia's revenue is crushing crude oil. And I wrote about that in 2022 when I first started calling for $40 a barrel, because that's the elasticity kick in. The higher price kicked in that supply and it's cutting demand. And it really helps alleviate some of those issues with the war.
I finally found the book. Sorry.
I knew we lost you for a while.
You lost me because I was trying to... 2005, the book was called Beyond Oil, The View from Hubbert's Peak.
Okay. Who wrote
it? Kenneth S. Duffy's.
Okay. All right, good to know. Thank you for that Google search.
Yeah, you're welcome. It took a while. It's Amazon involved, too.
The significance of 2005? That's when the demand for crude oil, use of crude oil and liquid fuels in this country peaked. Now that's happening in China.
This was also before hydraulic fracturing.
Exactly.
So, technology changed.
I remember being up in the Bakken and another boom, and all the locals were like, we've seen this before. Yep, ride it for now, but it ain't going to last forever. Mike McClone, nice to have you in studio.
Thanks for having me back.
Thank you. Senior Commodity Strategist at Bloomberg Intelligence in our Interactive Broker studio. All right, folks, if you're just joining us, just a reminder, we saw a little bit of a sell-off, certainly on the equity side of things. Down on the S&P, about 95 points. Nasdaq down about 287. This is Bloomberg.
Catch complete coverage from the world of politics and the world of business on Bloomberg Balance of Power. Tune in for Joe Matthew and Kaylee Lyons tonight at 5 p.m. Wall Street time on Bloomberg Radio and television.
Bloomberg Radio is where you are. Get live business news and market headlines from anywhere 24 hours a day on your mobile device. Listen on the iHeartRadio app. Tune in the Bloomberg Business app, SiriusXM 121, and the Bloomberg Terminal.
Bloomberg Surveillance is your premier destination for the latest on global financial markets. And now we're live on YouTube. I'm Lisa Mateo.
And I'm Tom Keene. Join me, Lisa, Paul Sweeney, and Michael Barr weekday mornings.
Visit the Bloomberg podcast page on YouTube to hear and see the most influential voices on global markets.
The smart way to start your day is with Bloomberg Surveillance, weekdays 7 to 10 a.m. Eastern.
Visit the Bloomberg podcast page on YouTube and click on the live feed to join us today.
There's danger out there. It lurks on highways and quiet neighborhood streets. It's more likely to kill you than a shark, and more terrifying than the biggest snake. Distracted driving claims lives every day. Every notification, swipe, social post, video, or selfie while driving risks your life. So while you might think public speaking or the zombie apocalypse is scary, what's really terrifying and even deadly is distracted driving. Eyes forward, don't drive distracted. Brought to you by NHTSA and the Ad Council.
Bloomberg Radio, on demand and in your podcast feed.
On the latest Balance of Power podcast, we talk with Republican Congressman Brian Stile of Wisconsin about the future of stablecoin legislation on Capitol Hill.
We have a huge opportunity here to lock in legislation as it relates to stablecoins. I think it'll do two key things. It'll protect consumers and it'll make sure that we maintain dollar dominance across the globe. And so I think we're united in that goal. The amendment process is going to be something that we'll be watching here from the House side. My bill, the Stable Act, moved through committee also with Democratic support. I think we'll be in a position to move that forward on the floor in the near future. This is a huge opportunity for a big win in the digital blockchain space, and I think we're going to be able to get this across the line.
Will you try to merge those two bills, Congressman? And if all of this works when it comes to stablecoin, does that help to unlock legislation for something broader like FIT 21, a broader crypto bill in Congress?
The draft legislation on market structure, which was FIT 21 last Congress, was just introduced. Hopefully we'll be having a hearing on the near future on that in the House Financial Services Committee. It's really both bills that are ultimately needed to truly unlock the golden age of digital assets here in the United States. You need both stablecoin and market structure. I think we have the opportunity to do that. We're going to be advancing quickly here on stablecoin. I think the House version, my bill, the Stable Act, complements well with the Genius Act in the Senate. I think at the end of the day, we'll be able to get one unified piece of legislation as we work to also deliver on the market structure legislation that's so essential. When both get done, I think we will really unlock the digital asset golden age here in the United States.
Hear the full conversation on the latest edition of the Balance of Power podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Down day for the Dow, the S&P and Nasdaq, a 1.6% drop in the S&P, down 95. The Dow down 1.9%. Nasdaq down 1.4%. The 10-year 4.59%. The 2-year 4.01%. The 30-year 5.08%. Earnings after the bell. Lockdown darling Zoom Communications higher after earnings. Right now we've got Zoom advancing by just about 2%. Snowflake after earnings up now by roughly 7%. Deal news, AT&T buying the consumer fiber operations of Lumen Technologies for $5.75 billion. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that, Charlie. Do appreciate it. I don't know, Carol, if you caught wind of this yesterday.
Well done, well done.
But the Trump administration's surprise reversal of an order to halt a $5 billion wind energy project off the coast of New York offered some respite to a beleaguered industry whose future in the U.S. has been in doubt. We're talking about shares of Ørsted, based in Denmark, jumping as much as 18%, the most in more than 3 years. Vestas climbed as much as 8% in Copenhagen. Equinor gained up to 2% in Oslo. A reminder, the president, not the biggest fan of wind energy.
We'll have an economy based on wind. I never understood wind. You know, I know windmills very much. I've studied it better than anybody I know.
You see these things all over the place. They destroy everything. They're horrible and the most expensive energy there is. They ruin the environment. They kill the birds. They kill the whales.
You remember when I used to say, darling, I want to watch our president tonight on television. And the husband looks, I'm sorry, dear. The windmills aren't wind. There's no wind tonight. You can't watch, darling.
So we're going to try and have a policy where no windmills are being built.
Okay, the president, his views on wind over the last couple of years or so. Very clear, yes. Back with us, we have Jonathan Maxwell, founder and CEO of SDCL, it's short for Sustainable Development Capital, LLP. Bit over $2 billion in assets under management. Jonathan, also the author of The Edge, How Competition for Resources is Pushing the World, Its Climate, to the brink and what we can do about it. He joins us here in the Bloomberg Interactive Broker Studio. Oftentimes we're talking to you when you're in London. It's good to have you with us here in the studio.
Thank you.
How do you think about wind as an investment opportunity in your portfolio for the assets that you manage, and as a way that we can wean ourselves away from fossil fuels?
Right. Well, I mean, the wind is a very good contribution, like solar and some of the other sort of bigger renewable energy technologies into the grid system, but it needs balancing. Right, when wind produces energy when it's windy, obviously solar produces solar at certain times of day. So these technologies need to be integrated into the electrical grid, but integrated with other forms of generation so that the grid can be stable. So we are huge advocates